campaign will escalate in the coming days. Iran has vowed to, quote, open the gates of hell in retaliation. US President Donald Trump has repeatedly said Iran could end the war by agreeing to tough restrictions on its nuclear program. Iran says it is for peaceful purposes, but Western countries and the IAEA nuclear watchdog say it could be used to make an atomic bomb. Iran said its parliament was preparing a bill to leave the Nuclear Non-Proliferation Treaty, adding that Tehran remains opposed to developing weapons of mass destruction. Israel is presumed to have a sizable nuclear arsenal, but neither confirms nor denies it. It is the only Middle East state that has not signed the NPT.
And now getting you the latest update on Trump-related developments, we have Dia joining in with us as always in our special segment, Trump Watch. Over to you, Dia.
The White House has announced that US President Donald Trump is departing the Group of Seven summit in Canada a day early, citing escalating tensions in West Asia. He also urged everyone to immediately evacuate Tehran and reiterated that Iran should have signed a nuclear deal with the United States. US President Trump also warned Iran to make a deal as Israel pounds the country, but he held back on working with fellow Group of Seven leaders to issue a joint call to encourage de-escalation. The US president also voiced confidence that Iran would eventually sign a nuclear deal, as he warned, without specifying that the United States will be doing something once he leaves the G7 summit. He also said that Iran was not winning its conflict with Israel and should re-enter negotiations before it is too late. Meanwhile, Iranian Foreign Minister Abbas Araghchi said Monday that the US could stop Israel's attacks on the Islamic Republic with one phone call. Taking to X, Araghchi said, and I quote, "If President Trump is genuine about diplomacy and interested in stopping this war, next steps are consequential. Israel must halt its aggression, and absent a total cessation of military aggression against us, our responses will continue." And in other news, world leaders at the Group of Seven summit in Canada tried to push US President Donald Trump to back away from his punishing trade war that poses a risk to global economic stability. That's all for today. Now back to you.
Well, thank you so much for that, Dia. But let's slip into a very short break now. Up next, we tell you how these overnight cues impact our own Indian market.
Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV18. Now it's time we get to what will be happening in the Indian markets. How are we setting up for trade today? Important stocks to watch out for in today's trading session. And we have a team of researchers joining in with us this morning. First up, I'll go across to Vamakshi. How are we setting up for trade? Indicating a bit of a muted start, but what are the data points that we're watching out for today?
Well, a bit of a muted start for today, Vinny, but let's recap what happened in the trading session yesterday. Despite escalating tensions in West Asia, we did see the markets move higher. Nifty snapped its two-day losing streak and rose in line with most of the global markets. Nifty closed just shy of 24,950. The Sensex too closed somewhere close to the 81,800 mark, and in fact, we had 46 out of 15 Nifty stocks close in the green, and some of the top contributors included banks as well as Reliance Industries. As far as the broader indices are concerned, the initial weakness that we saw in both of these indices, the Nifty mid cap as well as the small cap, reversed swiftly as the risk appetite returned. In fact, both of these indices broke their three-day losing streak and moved in tandem with the benchmark indices. As far as sectoral indices are concerned, most of them, in fact all of them, closed in the green, and the gains were led by IT, realty, oil and gas as well as the metal stocks. As far as today's session is concerned, we'll be keeping an eye out on the two-day FOMC meeting which commences today. We'll be keeping an eye out on the interest rate decision that comes from the Bank of Japan. It is expected at 8:30 a.m. today, and largely the rates are expected to remain unchanged, but we'll see how that unfolds. Apart from that, we'll also be keeping an eye out on some other cues as well. PM Modi attends G7 leaders meeting in Canada, and Japan PM and Donald Trump met on the sidelines of G7 amid tariff concerns. So that is something that we'll be keeping an eye out on. But apart from that, let's look at what the GIFT Nifty is indicating. For now, it's a 34-point cut. But over to Ria now, who will list out all the stocks to watch for in today's trading session. Good morning, Ria.
Good morning, Vamakshi. Let's take a look at the stocks to watch out for today. First up, we have Vishal Mega Mart. Now, sources say that a big block deal is likely to happen, and the block deal size has been upsized. Promoters are now likely to sell up to rupees 9,996 crores worth of shares in this company. Moving on, we also have Tanla Platforms in focus today. The board has approved the buyback of 20 lakh shares worth 175 crores at a price of rupees 875 per share via the tender offer route. For Biocon, they've launched a QIP yesterday on the 16th of June, setting the floor price at rupees 340 per share, and the company is going to raise rupees 4,500 crores via this QIP. For Z Entertainment, promoters are going to invest rupees 2,237 crores in the company via the issuance of fully convertible warrants on a preferential basis, and the promoters are now going to increase their stake in the company to 18.39%. For Hyundai Motors, this one will be in focus today. They've commenced the production of passenger vehicle engines at Maharashtra's Talegaon plant from yesterday, from the 16th of June. Mastech will also be in focus today. They've bagged a contract from NHS England to provide NHS board and SIRO cybersecurity training in partnership with Templar executives. Keep your eye out on NTPC as well. They're going to consider fundraising up to rupees 18,000 crores via bonds on the 21st of June. And lastly, two companies will be in focus on the back of some changes in the management. For IIFL Finance, the former RBI Deputy Governor BP Kango has joined the board of the company as an independent director. And for Bata India, the Bata Group has appointed Panos Mataros as its new global CEO with effect from the 15th of September.
Okay, Ria, thank you so much for that. But finally, Mangalam is waiting by to tell us what's going to be happening in the world of FNO. Mangalam, good morning.
Good morning. So yesterday was a good day for the bulls. If you look at it, on Thursday and Friday, there was a big dip on the frontline indices. Yesterday, there was a recovery in line with what the global markets did. But we're still about 250 points away from the post-RBI policy high and the pre-war high as well. So if you look at it, the June 11th high of 25,222 becomes an important fulcrum on the way up, and at the lower level we will watch for the June 13th low of 24,473 as well. Why is that? Because oil prices have been rising. Yesterday when we closed trade, oil was closer to around 73, then went all the way down to 70 before rising closer to $74 as well. So all eyes on that. Cash market flows. The DIIs bought in cash yesterday, 5,600 crores. The FIs sold about 2,300 crores. But even as the markets moved higher yesterday, the Nifty futures moved much higher than the cash, and the premium expanded from 9 points to about 50 points, telling you that there was purchase by the FIs and index futures, and that's what data confirmed as well. 420 crore worth purchase, 2,400 long contracts is what they've added, and as a result of which their long contracts or long exposure now stands at 20% versus 80% short. But the bigger positive, however, was them writing more puts than calls. So they wrote 17,000 calls, they wrote 52,000 puts, nearly 3 times. That tells you there is strong support at lower levels. Where are those put writers active? 24,900 put writers active at 112 rupees premium, 24,800 put writers as well active at an 81 rupee premium, and you have 25,000 put writers active at 155 rupees premium. All of this tells you that 24,750 to 24,800 is an important support zone for the Nifty. Technically too, we have the 20-day moving average out there. The only fly in the ointment, at higher levels, can we see some selling? Why do I say that? Because the put-call ratio has moved towards 1.14. Remember, near 1.2, 1.25, we see a bit of a sell-off for the frontline indices. Out of band is IEX, so that's one stock I'll be watching out for.
Well, thank you so much for that, Mangalam. But let's slip into a very short break. Up next, we get you cues from the commodities market, so don't go anywhere. Welcome back. You're watching Power Breakfast on CNBC TV18. Moving on then, we have Manisha Gupta joining us with all the updates from the commodity space. Good morning, Manisha.
Morning, and thank you for that. Well, it has been a very, very wild overnight market that we've seen in various asset classes, including commodities as well. I'll start with the crude oil prices because we saw the prices swing within an $8 range from the New York session to Asian markets right now. Well, the prices did close 1% overnight. We did see crude oil prices move 4% down in the intraday markets as well. In the Asian markets right now, we're trading 1% on the higher side. So as you can see, there are big swings coming in for the crude prices. Well, we will await reports on Iran and Israel on whether or not there is a ceasefire happening or there's a conversation. What is the U.S. Role being played into that? In the meanwhile, the street is also reacting to the OPEC plus month report that came in yesterday, where they believe that the global economy is resilient and will continue to be so in the second half of this year. They also have trimmed the oil growth forecast from U.S. on non-OPEC countries. That seems to be supporting prices a bit as well. And then to the gold prices, well, we did see a near all-time high of $34.65 yesterday. It's trading below 3,400 right now. So we've seen nearly $80 of a move come in for the gold prices also. Also, the traders are taking some profits after the prices hit an 8-week highs. The markets, though, will now focus on the U.S. Fed policy this week and the Iran-Israel conflict that enters day 5 as of today.
Okay, Manisha, thank you so much for that. But let's move on. And Citi's Max Layton believes that the Strait of Hormuz has the potential for a large oil disruption from Iran and Israel conflict. Let's watch for that.
We think it's highly unlikely that cargo oil will be brought into this, and therefore Strait of Hormuz is the potentially large oil supply disruption if it does happen. I mean, I'd just like to make the point that there's already a very big risk premium, geopolitical risk premium in the oil market. We estimate it's around $10 to $12 at the moment, and that risk premium's there for a reason. There's been no real oil export or oil production disruption in Iran, and yet the market's trading $10 to $12 higher, and that obviously reflects the potential for there to be a significant, if not, if temporary, disruption to the Strait of Hormuz supply.
Well, Prime Minister Narendra Modi arrived in Canada today to attend the G7 summit that is taking place at the Kananaskis village in Alberta. This visit marks PM Modi's first visit to Canada since the diplomatic ties between the two countries deteriorated after the killing of Khalistani terrorist Hardeep Singh Nijjar in 2023. PM Modi is set to hold bilateral meetings with global leaders and attend the outreach sessions at the G7 summit.
And with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, we have Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. Fifth day of conflict between Iran and Israel. Last night it looked like things were thawing a little bit, but that's not the case. I mean, if anything, risk sentiment has soured once again this Asia morning. I'm Prashant. With me, my colleagues Nigel and Mangalam with us today. Guys, morning.
Hi, morning. Good morning. I was on leave for a couple of days, and yesterday I was traveling in. It just seemed like so long because of the news cycle. In the 2 days that I wasn't there was that unfortunate air crash that took place. Thereafter, all that took place globally and then in the West Asian region. So it seems like it's been so long. But then again, I look at the market. It's 24,950 on the Nifty, which is virtually unchanged. So much has happened, but we're still back in that range.
Well, that's right. And overnight, actually, we were hoping for some kind of de-escalation, which is still not forthcoming. So I think that will continue to linger on. Hopefully, more than markets, as I always say, for the good of humanity, we should see some kind of resolution on this front and some kind of de-escalation. Global leaders will, hopefully talk and come out with a solution. But those images that you're seeing in the past, 12 to 18 hours don't suggest any kind of de-escalation, at least as of now.
Yesterday at about 9:30, oil was down sharply, gold was down, US futures, US equities were higher, but all of that turned very sharply. And I think
scariest visuals that came yesterday was that of the missile attack in the newsroom itself, right? These are extremely disturbing visuals that we can see.
No, absolutely. And I think, really air warfare in the skies, and you can see all these sort of, missiles being fired that at least right now only Iran and Israel against each other, and others have not joined, which is of course being closely watched as well. So let's just take it from the top and run you through some of the cues. So last 12 hours have seen further escalation in hostilities between Iran and Israel. And this is, as I said, a big change, because yesterday evening it looked like things were thawing a little bit, but that was not the case. I'm not even actually looking at where we left off in terms of US close, because the actual close in US was S&P, NASDAQ 1.5% higher, US yields up about 5-6 basis points, dollar flattish, oil prices down. But well, does that close really matter? Because things have turned, things have moved on since. And what really caused the turn in risk sentiment on the downside was President Trump. So two things. President Trump said that he's going to leave the G7 summit early to return to Washington, I guess, to oversee the crisis. Second, and I think this is the headline which which got markets' attention. He essentially tweeted, posted on Truth Social, saying that everyone should immediately evacuate Tehran. So I think that one comment really sparked, and this sort of came through in early Asia hours, and that turned sort of sentiment around. So S&P, NASDAQ futures, the last I checked, and of course these are all rates which will move along. Very difficult to kind of sort of look at this minute by minute, but about 0.5% lower in S&P and NASDAQ futures. Oil prices up about 1%, actually 1.5% now up on your screen. Gold prices about 0.5% higher, back above $3,400. Yields are down, which means bond prices are up 2 basis points. It's small, but still. And of course, the DXY, dollar index, is up about 0.25% or so the last I checked. The bigger question, which we don't have answers to at this point, is if US will join the fight. So to that regard, you basically have two naval carriers, the USS Nimitz, which is one of the largest carriers, aircraft carriers in the world, along with the earlier carrier, which is already sort of in the region, in the Persian Gulf region. So there are two aircraft carriers now at the ready in that part of the world. It's been moved, by the way, from elsewhere. And you have over 31 US Air Force refueling tankers, which have also been moved. And all of this, of course, is being, so far, US has maintained this is essentially to protect its interests, its bases in the region if it's attacked, etc. It's a defensive posture, as I think it's been put. But I think, so much social media chatter whether, US essentially will join the fight and help Israel against Iran, etc. So I think it's a situation which needs to be watched closely, and we'll see if this escalates further at some level. It kind of sort of, is there an off-ramp? What is the off-ramp here? I think that needs to be seen as well. At what point will Israel say, well, we've achieved our objectives? And the objective, as they said earlier after they attacked Iran first, was, to prevent Iran from not achieving a nuclear status, not having a bomb. So how do you sort of, evaluate that success in that sense? So to be watched. Let's just look at and tying the levels here. So yesterday, of course, the market saw a very sharp bounce after Friday's sharp sell-off. And we are at about almost 24,950 or so as of yesterday's close, about 1% higher. Resistance is 24,968. By the way, we are there. That's a 66-point retracement of the small fall that we had. 25,062 with the 78.6% retracement. These are very, very near-term levels, but that's essentially what you got to work with. Support stands at the 20-day, which is 24,832, and the lower end of the range which the market has been in, which is 24,500 on the lower side. So 24,832, the 20-day, and then 24,500. The Bank Nifty pullback was much weaker as compared to the Nifty yesterday. Here we're still below the 40 hourly exponential moving average. 56,000 is that level. Again, very close to it. And of course, after that, you got the 56,403 level, which is a retracement level, similar to what we had as far as the Nifty is concerned. So some numbers, some levels out there on your screen. General risk off a little bit in Asia hours is what you have, about 40 points lower, pretty undecided. I mean, the general bias around the world for markets has been to try and buy the dip. Dips have been very, very shallow, short-lived, etc. But I think the risk, of course, comes through oil prices, if at all it comes to that. And it's not a non-negligible risk that you see a big jump if, for example, the Strait of Hormuz or other oil facilities, etc., are attacked. So that's how we are looking at things. Mangalam.
Yep, so the Nifty implied open right now is close to around 40 points on the downside. But we're among the only Asian indices which are indicating a lower start, because we have the Nikkei, which has opened higher. We have the Kospi, which is trading fairly in the green as well, barring the Hang Seng, which is down by about 0.1% or so. We have most of the Asian indices doing well. So three things basically we're watching out for. One, I'll be, very closely watching out for the outcome of the Bank of Japan monetary policy. Why is that? Well, they are expected to keep the interest rates steady in the face of trade and geopolitical uncertainty. They had a quantitative tightening program that ends on in 2026. Are they likely to, lower the quantum of quantitative tightening or not is something that we'll most definitely keep an eye out on. Yes, Prashant spoke about the Iran-Israel conflict, but amidst all of this, two things happened yesterday. One, the US volatility index cooled off by about 8%. That's a positive. And secondly, NASDAQ outperformed. Can it outperform today as well? Why do I say that? Because one, OpenAI has won a $200 million US defense contract. That is generally NVIDIA positive and, the chip maker positive. And secondly, one of the bigger contributors on NASDAQ, Meta, will bring ads to WhatsApp. And if we here are looking at, the popularity of WhatsApp, any ad, coming onto WhatsApp after so many years could be revenue generative for Meta. So I'll be watching out for, reactions on those stocks in particular, and as a result of which, NASDAQ. The Indian indices did well in yesterday's trading session, but we're still in the broader range of June 11th high, the post-RBI policy high, and the June 13th low of 25,222 to 24,473. The big question, are we back after the volatility over, geopolitical uncertainty, etc.? Are we back to the pre-RBI policy range on the Nifty of 24,700 at the lower level to 25,100 or not is the question. And the answers to that will be, how two stocks perform or two sectors perform. One is Reliance. It's done well in yesterday's trading session. Brent moving near $75 per barrel typically does well for oil and gas stocks, and upstream companies benefit. And the second part is IT. IT did well in yesterday's trading session. But if you look at the distance away from the 52-week high, the Nifty Bank is just about there. The Nifty is 5% away. And the reason why the Nifty is 5% away is because Reliance is 11% away and the IT index is about 15% away. So these two have to really outperform for the Nifty to break out. And were these two outperform, all other things will fall into place as well. The DIS bought in cash market yesterday, FIS sold. If these two sectors are doing well, they will attract flows as well. And from a technical standpoint, we're very close to the 20-day moving average on both the Nifty as well as the Nifty Bank. So those will be important supports that I will be watching out for. Chances are that we may be in the range, but there is a possible up move that we may see after the down move. Nigel.
All right, Mangalam, yesterday the most encouraging part of trade was the advanced decline ratio, because when we started off, there were very few stocks that were trading in the green. But by the time we wound up, we had a higher number of stocks that were advancing than declining. But if you look at the volumes on the whole, they were much, much lower than what we saw on an average if you compare it with the 10-day average. And in fact, the volumes that we saw were the lowest all the way since May 6th. So that recovery that we saw in yesterday's trading session, well, it did come on very, very large volumes. And just going by the breadth of the market told you a lot of domestic large HNI retail audience were at play yesterday. You would like this move to come on larger volumes. What did the FIs do as well as what did the clients do? On index futures, they had a bit of a role reversal. So the FIs added long positions in yesterday's trading session, while the clients, they went ahead, they unwound some longs and they added some short positioning as well. So you didn't see a big short covering bounce coming in from the FIs, but for the market on the whole, on the Nifty Bank, there was clearly a sign of some kind of short covering that did play out because that index recovered from the low and the open was down by close to around 3.5%. What about stock futures? It appears there's a bit of an arbitrage play that was taking place out there because there was long addition coming from the FIs. And if you look at it on the short side as well, there were some positions that were added from the clients. But that would be more sort of a arb or reverse arb that was taking place on that front. But one interesting factor in yesterday's trading session was the kind of writing that we saw on the put side. And that's giving you some kind of hope that maybe in the near term, we can defend that range 24,500, 24,700. Because both the FIs take a look at the put shots, much more than the call shots. And even clients, there was a higher proportion of put shots that were seen. So there was put writing that was seen in yesterday's trading session, which gives you some hope in a market that bounced up. A lot of put writing is normally a good sign. What about the options data? You have two broad levels you're looking at. This 25,300 calls, some out of the money, call buying in case things go well, then maybe in fact make some money on that. But the smarter money actually was writing that 24,800 put. And that's encouraging from a bullish perspective. So it brings us to the levels. Since there was writing at this strike, you're looking at this 24,700 mark as a crucial support. Today, by the time we end, and during the intraday as well, I wouldn't want this level to get violated to a large extent. Yesterday's low was 24,704. So that becomes an important mark on the downside. On the upside, well, the recent high, that becomes a bit of a resistance. So the Nifty continues to remain in this range of close to around 700 points. The Nifty Bank, that's going to be important. And in yesterday's trading session, what was encouraging was every day, if you look at the day's low, well, it's been sliding lower. But yesterday, after a while, we made a higher low, which is a positive sign. So for today's trading session, you'll not want this level, in fact, to get violated on the downsides. That's 55,300 odd. Stocks that I'm looking at, when I'm looking at IEX, the stock has got hammered in the last few trading sessions. Now, in fact, it comes out of the F&O ban. So I'll keep an eye out on this stock because it went down to around 185. And at that level, you've seen some kind of buying interest that re-emerge. So keep an eye out on this one, guys.
Absolutely, and I think there is, a fair bit to track in terms of positioning, in terms of levels, and of course news flow as well. Richard Harris is with us, Executive Director at Port Shelter Investment Management. Richard, good to have you with us here. Thank you very much for your time. The fact that there are three things. One is, let's just look at what the market is doing, and whether we should read too much, whether we should interpret market moves to kind of decipher what's really going on, if that makes sense. So the dollar's not moved higher sharply. There's no great demand for US treasuries, which both are considered safe havens. This is true yesterday. This is true the day before. And of course, look at oil prices. We've seen a bump, but should be. If this is a broader war, should be much higher. Is it telling us something, Richard?
Well, you would have thought it should be, because all of these things are moving as if this is just going to be a small skirmish and then finish. Now, we do know that any skirmish between Israel and Iran is not a small skirmish. It's really quite serious. I think the markets are sanguine because, in a sense, Israel made the first move, so therefore they may be considered the aggressor. They now appear to have control of the skies over Iran, which also enables them to cease fire when they want. It does look as if the Iranians maybe are running out of ways of retaliation. They've only launched a smaller number of missiles than they've done previously. So I think the market's basically saying this is going to be fairly short-lived. It's going to be something that maybe will pass by. And I think what they're doing is looking at what's happened in the past. We had Ukraine, which scared the markets, but then the markets got used to it. We had Gaza, scared the markets are used to it. And I think people are thinking this is just more of the same, rather than something more serious. My personal feeling is it is more serious, but we can come on to that in a minute.
So in that situation, what should one's investment strategy be? While it is a human crisis, people typically look at these uncertainties as reasons to go ahead and increase their allocation towards the equity markets. Would you suggest the same? And
well, it goes both ways, doesn't it, with this?
Yes. So what would your investment strategy in a situation like this then be?
Well, I think, and I'm quite serious, I put on a hard hat and sit on my hands. My feeling has been, certainly since the Trump tariffs came in, is to have very conservative portfolios. Yes, I still like tech stocks, but I've reduced my weightings. I've spread my weightings slightly out of the US into other markets like China, like Europe, which have underperformed. And I've also raised some cash. So I think being in that position, I'm happy to sit on my hands. But I do think that the picture doesn't look particularly good. We've got Trump leaving the G7 meeting early for reasons he hasn't disclosed. It's very difficult to believe anything coming out of Trump's social because it changes so often. So we don't really know what's happening. But my feeling is have a fairly conservative portfolio, sit on your hands and just wait until something real comes along, some real news that does make a big change to the market view.
All right. Hi, Richard. Good morning. Good to see you, Ben. Nigel on this side. Richard, I wanted to ask you, but what about the Indian markets? The hope that I have is that hopefully things clear out on the geopolitical front and the markets, continue tracking what central banks are doing, tracking earnings as well. Where does India fit into this, into your entire scheme of things? Do you think, like how you said a few months ago, that we'll be performing in line with global markets, or do you think we can outperform? I ask this in the backdrop. You have crude oil prices that's moved very, very swiftly up 10%, and still the Indian markets are unmoved. Normally, you would have seen, a few years ago, the Indian markets pull back, so showing some kind of resilience.
I think the markets are basically, they've got this comfortable attitude in. It's still the bear market move after all, and bear markets die hard. So I think, yes, oil's moving up, and people say, well, oil's moving up, but it's going to move down. Just prior to this skirmish, we had Saudi Arabia coming out looking to increase oil production, which would have put more pressure on the oil price. It looks as if there's no real influence on the oil price to move up. So I think markets are basically saying, well, it's probably not going to get much higher than this. It's likely to come off. In terms of where India fits into this whole pattern, I think it's the same thing, that it's likely to move at least in line with global markets, maybe even slight outperformance. But these aren't normal times. We're seeing a movement out of the US because the US has been a banker investment market. And the question is, where's that money going to go? Is it going to go into cash? Is it going to go into India's China, which I think is quite possible? Is it going to go into Europe, which I think is very possible? So there's a bit of a mixture. If you're betting on the upside, it's tough at the moment. That's why I'm sort of looking to have more conservative portfolios. But personally, I always like a proportion in India. And let's face it, over the last 5 years, it's been a fantastic investment.
To your point, I completely take that these kind of situations usually are opportunities, and market investors have treated it like that. But the point is, you've got to have that dip first.
Yeah.
Right? I mean, markets have moved the other way, which is...
Never waste a good crisis.
Yeah, but what I'm saying is the crisis has got to show up in prices first, right? To take advantage of the prices, lower prices. It's not happened yet, at least not from an equity market perspective. Richard, it's a blind one, but I don't know what... Do you think the US will join the fight? As a financial market person, I'm asking you.
I think not, no. Okay. I don't know. I mean, I think the game Trump is playing is a regime change game. Of course, the Iranians could say the same about the Americans. I think the only reason why America would get directly involved is if the Straits of Hormuz were blocked off. 20%, 25% of oil comes through those straits every day. They're very narrow. They could try and attack on there. I think they won't. It's not going to be successful. But I think that's the one situation where the Americans may come in directly.
Qualitatively, I just wanted to know.
There are some, and I don't know how much to go with it, but they're saying that, well, there are 3 fires detected in the Gulf of Oman, which is essentially the Strait of Hormuz. It's just, there's some tweets just now, 2 minutes, 3 minutes back. So we'll have to sort of get confirmation, but that is a big risk.
That is a big risk if that were to happen. But let's while we do know about the possible worries here, Richard, qualitatively, what would the signs be for you to start not becoming conservative?
Well, I think, as Prakash was saying a moment ago, you've got to have the pain before the gain. We're in a situation where markets are, close to their highs. Certainly, they're knocking around where Trump came in. But we've got these major issues to confront. Big tariffs on China, big general tariffs on the rest of the world, costs that are increasing. I was speaking to a steel trader yesterday, looking at exporting steel, well, trading around the world, but mainly from China elsewhere. It's very, very difficult to trade at the moment. And that price of steel is going to work its way right through the economy. So there are lots and lots of issues to come out there. what we've had recently is a whole series of little bits of good news that's pushed the market up. I'm actually waiting for that external shock that's going to hit these fragile markets and push the market down.
All right. We'll leave it there. Thank you very much, Richard. It's a pleasure having you here on the program. Thanks indeed for those views. Well, let me just quickly run you through what's lined up here over the next 2 hours or so. 8:35, we'll have, SkyMed joining us. Rains, at least here in Mumbai, as you look out of the window coming through. But we want to get an overall sense of how monsoon rains are progressing. 9 o'clock, we'll have Manas Agarwal of Bernstein to talk about key trends in the insurance space. Stocks were up higher yesterday. 9:20, you'll hear from Ashwini Agarwal of Demeter Advisors on markets. Atul Lal of Dixon will be speaking with us at 9:40. Talking about opportunities as far as trade deal and electronics manufacturing goes. And Samiran Chakrabarti of Citi talks to us about this pop in oil prices and what that means, if anything at all, for macros here in India. It's the economy. Lata in conversation with Santanu Sengupta of Goldman Sachs on trade deficits, growth and liquidity. That is at 10:15.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track for you on the other side in our special Top 10 segment. For the time being, I'll run you through the list. Biocon, Z, Tanla Platforms, Hyundai, Sona BLW, Godrej Properties, Axis Gate, as well as DLF. All of them will be reacting to positive news flow, while Vishal Mega Mart and Asian Paints will be reacting to negative news flow. Take that break, get into further detail on all of these names.
Welcome back. You're watching us here on Bazaar Morning Call. We've been talking about the global markets, the uncertainty geopolitically, the Asian markets largely in the green, but the GIFT Nifty still indicating a negative start after an up move that we saw in yesterday's trading session. So let's get to micro individual stocks. Our research team is standing by with the CNBC-TV18 list of top stocks for the day. Let's start with Biocon fundraising. Vivek, the QIP finally launched.
That's right. Good morning. So Biocon, a large fundraise is, has been launched. The company is looking to raise close to 4,500 crore. The SEBI floor price, remember, is at 340 rupees a share. The indicative floor price, as per the term sheet, is at close to 323 rupees a share, indicating that at that floor price, close to 11.6% of the total equity is what will get diluted. What is the company looking to raise or utilize the proceeds for? Number one, they will be going ahead and purchasing the optionally convertible debentures that was issued by Biocon Biologics to Goldman Sachs AIF scheme. And secondly, it will be used for debt repayment. Going with the green in this particular name, given the fact that debt repayment will lead to interest cost saving, thereby leading to a EPS accretive fundraise. And the key thing to watch out for going forward will be what essentially or eventually will be the fate of Biocon Biologics and what the company decides to do with that particular entity.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Vamakshi. The big news that came last evening was on Z. Promoters pumping in some money, a large chunk. Vamakshi, go ahead.
Well, absolutely, Nigel. You know, the board has gone ahead and approved issuance of close to 17 crore fully convertible warrants to promoter group entities. Keep in mind that the issue price per warrant is at 132 rupees and therefore this is coming in at a 4.5% discount if we compare it to the closing price yesterday. Promoter entities will be investing around 2,237 crores and resultantly their shareholding is expected to rise from 4% currently to 18.39% post-issue. Also keep in mind that nearly 25% of the issue price will be paid upfront. Therefore, the company is likely to receive close to 560 crores upfront. Keep in mind that the cash and cash equivalents balance at the end of the last financial year, that is FY25, was at 2,406 crores and therefore the cash balance could rise to as much as 2,965 crores on an immediate basis. So, you know, the promoter entity infusing money shows their commitment to the company, instills confidence and shows their skin in the game. Therefore, this could bode well for the company going with the green for Z Entertainment.
All right, Vamakshi, thank you very much for that. Let's talk about the big stock of the day with regards to the block. Vishal Megamart is what Vivek is going to talk about. Also Asian Paints. Vivek, good morning.
Good morning, Hilal. Both stocks in focus on the back of large block deals that are number one likely to transpire and that transpired yesterday as well as over the last week. So Vishal Megamart, last evening we accessed the term sheet. We understood that the promoter entity was looking to sell close to 10%, but today morning they've gone ahead and upsized that particular deal. So the promoter entity, Samayat Services, remember this is an investment vehicle that is run by Kedara Capital as well as the Partners Group. At a floor price of close to 110 rupees a share, they are looking to mop up close to 9,900 crores, so close to 18% dilution or 18% stake sale will be done. Remember, at the end of the March quarter, at the end of FY25, they held close to 74.5% stake. Also important to note that yesterday was the lock-in period expiry as far as the IPO shareholding was concerned. Vishal Megamart expects some pressure on the back of the large equity that is on offer in today's trade. The other stock in focus, of course, will be Asian Paints. Remember, yesterday also Reliance Industries entity, which is Siddhant Commercials Private, sold close to 85 lakh shares. The entire block was picked up by ICICI Prudential. Remember, on June 12th, Reliance Industries sold shares worth over 7,700 crore rupees via the block deal window.
All right, Vivek, thanks a lot for that. Asian Paints in particular will be in focus. The liquidity event getting out of the way. Oil prices still at around 74 with competition coming by. The stock has already corrected about a third from its 52-week high. Where does it go from here will be the most interesting question that the street will get an answer to over the next couple of months or so. Let's drill it down to a lot of other stocks and news as well. Vinny joins with that list. Vinny.
Hi, good morning. So talking about Tanla Platforms first, we're expecting a bit of a green on the screen. Why? The company has approved a buyback of around 175 crore rupees, which is 20 lakh shares, fully paid up equity shares, or 1.5% of the total capital of the company. Now, the cash on the books as on FY25, they do have 1,000 crores for that as well. Last buyback was done by the company somewhere around in December 2022 to Jan 2023. Now, the price at which the buyback will be happening is higher than the price of the stock. That was yesterday's closing price. So that is why we're expecting green on the screen. Now, Hyundai Motors, that's another one we'll keep an eye out on. They've commenced the PV engine production that they acquired in the Talegaon plant. So that is an important update there. The annual capacity for that is going to be around 130,000 units per year. Significant milestone for the company, specifically in terms of expanding its manufacturing facilities in India, enhancing their supply chain efficiency here as well. So positive on that front. And lastly, Sona BLW, the company is continuing to back the CEO of the company, that is Vivek Vikram Singh, to run the business. He's been the MD and CEO of the company since 2019. They have a professionally managed team since then as well. So yes, they continue to support Vivek Vikram Singh after the demise of the new chairman of the company. So after the chairman passed away during this last week. So after that, new chairman will be appointed by the company in a meeting that they'll be holding very soon. So that will be what.
All right. Vinny, thanks very much for that. Let's talk about more stocks with news flow. Ria's got that list. Ria, morning.
Morning, Prashant. Let's talk about Godrej Properties first. This one will be in focus since they've acquired a 16-acre land parcel in Pune with a revenue potential of about rupees 3,100 crores. And this will be for premium group housing as well as high street retail. Another realty player in focus, DLF. ICRA has upgraded the rating of DLF Cyber City to AAA with a stable outlook from their earlier positive outlook. We also have Axis Cades Technologies in focus today. They've inked an agreement with Indra for the joint development of defense and aerospace solutions for both the Indian and export markets as well. So all three expected to open in the green today.
Okay, all right. Thanks a lot for that, Ria. Well, let's do a quick recap of all the top stocks we covered. The ones with positive news flow: Biocon, Z, Tanla, Hyundai India, Sona BLW, Godrej Properties, Axis Cades Tech, as well as DLF. While the ones that will be reacting to negative news flow: Vishal Mega Mart, waiting by for that large trade to get out of the way, and Asian Paints as well, a large trade that took place on that particular name as well. So that's about all the equity stocks you'll be tracking. But let's get in Manisha Gupta to talk about the space that's been buzzing overnight, actually for the last few nights. Morning, Manisha. Tell us about the commodity market.
Thank you for that, Nigel. Well, I'll start with the crude oil prices, where you've seen $8 of a range in the markets in the overnight space there, while, of course, the prices did see a decline up to 5% at one point in time, but we've closed yesterday 1% down. We're trading near 1 to 1.5% higher in the Asian markets right now. There are various reports coming in from Iran, Israel, and of course from the G7 meeting, from Trump as well. And that really seems to be impacting the crude oil prices. And then the street also is reacting to the OPEC Plus monthly report, which suggests that the demand will remain resilient in the second half of this year. And the production from non-OPEC countries could perhaps decline in the next year. That seems to be supporting markets as well. In the precious metal space, while gold has seen a decline, it is the metals which seem to be doing well. The other metals, that is. So while gold, after testing 3,465, fell all the way to 3,390 yesterday, it is silver which is holding ground, and other white metals like platinum, palladium doing well. Even copper prices are in the positive right now after the China retail data. That seems to be impacting the demand going forward.
All right, Manisha, thanks a lot for that. So that's about the commodities and currency arena. We'll take a short break. On the other side, we have Amnish Agarwal of PL Capital joining in for some fundamental stock talk. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a rocking morning. Well, to help us out with some fundamental analysis, we have Amnish Agarwal, Director Institutional Research at PL Capital, who joins us on the show. Hi, Amnish. Good morning and thanks a lot for joining in. Well, let's talk about Z. That stock has seen a big recovery. Promoters chipped in at around 100, I think, or close to around 120 rupees odd. Now they're going the whole hog. They're saying they're going to be infusing money into the company and raise their share from around 4% to around 18%. So this will be viewed positively. What's your view on the stock though? Because there are a couple of unanswered questions. Utilization of this sort of money, will they ultimately go ahead and convert the shares? And also, it's as just sitting on cash. So they must be having a big plan. Your view on the stock at around 137 rupees.
Hi, Nigel. We need to look at what transpired in the Z over the past few years, because the promoters lost money in some of their infra projects and all, and after that there was a sell-off of the pledged stock, and now the promoter holding is very low. So definitely this seems to be an intent by the promoters to infuse money out in the company and increase their stake from the current around 4% to something like 17%. Now the company is sitting on cash. Now whether they will be doing some acquisition, you can say in some related space, is something to be watched out for, because that will be a key factor, because as such your broadcasting industry worldwide has seen lot of competition. You can say the trend of move towards the OTT is not only sustaining, but it is accelerating as the time is going by. So I think the move is positive. One can hold on to the stock, but a lot depends upon how the company is able to, you can say, play around with the changed competitive dynamics, whether it is in the OTT space or some of the other segments.
All right, we take that point entirely. 2,400 crore worth cash on their books. Promoters' stake increases from 4% to 18%. And how quickly the night changes. You were talking about them looking at acquisitions just about a year ago. They were looking at being acquired themselves itself. So it'll be a very interesting space to watch. They've also rebranded their entire outlook for the company, etc., the channel, etc., and the programming. But I'd like your thoughts on Asian Paints, because a lot has been said about competition, a lot has been said about valuation, a lot has been said about derating, but now Reliance, which held about 5% equity in the company, has gone ahead and sold it. So a massive chunk of liquidity the liquidity event is out. Do you think it is looking attractive at these levels with a decline of almost 33% from its high and a long spate of underperformance?
Fundamentals don't change. Okay. And if you look on the, I would say, technical side, the very fact that someone was holding the shares on the last, I think, say 20 years, now they have come and sold the shares. Now it clearly shows that they are also aware of the competition. They are also aware of how the growth is likely to be. I agree that the stock has corrected from, say, around, say, 30-35% from the peak. That is one factor. So can it further take a cut of another 30-35% from here? Looks unlikely at the present juncture. But is the situation right for, you can say, the stock to rally from here, or any big turnaround happening in performance? I don't think so, because it's only 1 year, the competition is rising, more and more players are coming in, and unless and until there is significant increase happening in the growth rates of the industry, I don't think you can say the dynamics is going to change so fast. And yes, even after reaction, because last year there was a very sharp decline in profitability, the stock isn't cheap. And with the crude prices now volatile, and they have actually, if you look from the bottom, they are rallied by around, say, 50%. So I would say tend to avoid, you can say, entering into the paint stock at this point of time.
Okay, Amnish, morning, stay with us. You may want to listen into the next conversation. This is important in terms of, it's always important. Rains, monsoon rains are always important for the economy. So we have retired AVM, GP Sharma, who's now joining us. He's also the president of meteorology and climate change at SkyMet. Sir, good morning. Great to have you with us here. Thank you for joining us. So could you give us the latest, monsoon progress details, sir? How are things progressing? Before the season started, the overall forecasts were for an above normal monsoon season. Is it progressing that way?
Yes, there is finally some good news on the monsoon front. After having a little jittery start, I will say the monsoon almost had stalled, all we know. For the last almost about 20 days, there was hardly any movement. It was stuck at one place, either side of the coast, on the western side, eastern side. But finally, it has moved now. As far as the western arm is concerned, you see, it has already reached parts of Gujarat. It's almost a normal day. plus minus a day or so. South Gujarat it has covered. It has even covered coastal parts of Saurashtra also from, say, Viraval and Bhavnagar, those that belt. Yes, there is still a little a slowdown on the eastern side. It is over West Bengal region, sub-Himalayan West Bengal region. But then, good news is the monsoon will take a big leap now. It has already covered parts of Gujarat, as I said. It's almost Maharashtra is complete now, except a little bit of, a small little bit of Maharashtra is left out. But then, what was lacking was the eastern side, parts of Bengal, Bihar, Jharkhand. It was definitely giving some anxious movements at this time because it was not progressing. But as I said now, after having stalled for almost about 20 days now, the good lead will be there and monsoon will advance rapidly also, and it is going to take a big leap. All the factors which are needed to activate the monsoon, to take it further, to accentuate the current, all are in place. So it should happen shortly. Give it a 2 to 3 days time. If we will have large portions on the eastern side where it is required the most at this moment, we will have those parts covered. Yeah.
You know, sir, from a business standpoint, the quantum of monsoon is one part. The other part is the intensity of monsoon. If the quantum is normal in 1 year, typically agriculture does well. But if the intensity is very high, no matter what the quantum is, agriculture does not do well, and the spread is important as well. So basis your analysis so far, how has the spread and intensity been? And as a result of which, what is the likely outcome on agriculture?
So far, the spread was not as we desire. It was not at all. As of date also, there is almost about 65% of the area which is deficit or large deficit. It's a huge figure, big figure. It was earlier, it was about 75%, at least courtesy good rains in the last about 2-3 days, that it is margin is now shrinking, and it's about, but still 60-65 is a big number. The good news only, as I said, as the monsoon advances further, this will become better. But then surely this shortfall which was there over the first half of June, it has impacted the agriculture sector because the monsoon had set in early. The farmer prepares himself that it should be reaching those parts also little early and prepares accordingly, the fields, etc. He would like to have the first monsoon shot as early as possible as he prepares his field, which has not happened. Sowing surely would have got delayed over the southern parts and the central parts because the monsoon was not active. But then, yes, now it can catch up. Now it is advised that, okay, in the next about 1 week or so, monsoon will pick up and cover those parts. And it should reach, even as of today, now when I talk to you, Kolkata is raining. Normal date for Kolkata is 10th of June. Today we are on 17th of June. It's delayed by about a week. But in the next about 2 days or so, 2-3 days, it should improve into West Bengal, Jharkhand, Bihar, even go as much as up to eastern parts of Uttar Pradesh and eastern parts of Madhya Pradesh during this week itself. The monsoon activity actually depends on the drivers, means monsoon system. We have good. One on Gujarat side, there is a circulation, there is a low pressure area. On the other side, Bay of Bengal, there is a low pressure area circulation now, which will move inside and take the monsoon current deep inland, covering parts of Madhya Pradesh also and parts of Maharashtra. They should have a decent range. I will say even by approaching weekend, it will be somewhere close to even Delhi also. The southwestern parts of Uttar Pradesh and even Delhi also. All goes well. We will soon have before time entry of monsoon.
Right. So if I can just so you're saying that next 2 days you're expecting monsoon to make a very strong push, strong advance, especially in the east where it is delayed and rains are required. That is one. You're saying all India deficit now is about 65%, but it was much higher at about 75% before this advance took place. And you're also saying that the shortfall so far in June has definitely impacted agriculture, etc. I think we'll find out how much, etc. But are we on track for, I mean, the full season, that's June to September, the entire season, I mean, it'll make up And the earlier forecasts still hold, or you'll have to recalibrate as we go along?
Okay. Deficit, which I said that was an area deficit. That much of area is a deficit. As far as the quantum is concerned, the deficiency in the month of June had gone as much as about 34-35%. Courtesy, once again, these good rains. As of today, the shortfall has come down to 24%. If we count in terms of the numbers, there's about 17 millimeter rainfall, which we are short of, which is not a huge figure. June is the least rainiest month also. And looking at what we expect in the next few days and during this week, possibly that also will shake. So 24% also should come down. It should come within the normal range also. And as far as the further progress is concerned, as I said, that it's giving a good picture overall, that it should go on to cover parts of Uttar Pradesh also, Madhya Pradesh also, reach Delhi in the next few days in this week itself. So overall, the picture is good.
Got it.
Okay, so that's it. And I don't think we should have any anxious moment as such as far as the season is concerned. What matters most is the core monsoon months, which is July and August, and also the area. Very rightly said, at the moment, pocket like Vidarbha, which is very crucial for Maharashtra, that is deficit by 60%, 60%, which is a huge figure. Even Marathwada also is deficit by about 40%. But all that will catch up, what I say is, in the core monsoon months, coming months, July and August, and the core monsoon zone, which is Maharashtra, adjoining parts of Madhya Pradesh, maybe up to Gujarat, they will have a decent spread of rainfall. The rains, when we required, how much we required, I think that should relieve us from the major worries during that period as such. Yeah, that's it.
Take that point. Thank you so much, sir, for joining in and giving us perspective. Up until now, 65% of the country is monsoon deficit, but that number has lowered from 75% earlier. Overall, on a quantum basis, there is 34% deficit still, but you do believe that over the next couple of weeks or so, this will get normalized, and you see no reason for monsoons to not be normal this year. Let's bring this back to Amnish. Amnish, June has seen an impact on agri. Would that worry you about rural recovery? Your call on the FMCG stocks on this?
You see, first of all, I won't be much bothered about agri at this point of time, because until you can say last week, the sowing was up by 12% on a YOY basis, because we had, you can say this time pre-monsoon, or the monsoon arrived early. So the sowing so far has been good. And what actually happens is that over the next, I think from, you can say, middle of June towards the end of August, these are the most critical 2.5 months of monsoons. So as of now, if you go by the IMD data till yesterday, there's a 24% kind of a deficient. With half of the meteorological subdivisions, they are having deficient rainfall. But I think it is too early to say that there is going to be a negative impact on agriculture or rural income per se. Now, coming to FMCG, you see, there are two angles to it. One is the input cost for various FMCG products. If the monsoons pan out well, so that would remain a little benign. And the second is on the rural demand. You see, if you look at, say, particularly last few quarters, rural demand as such has been pretty good. It is running ahead of urban demand, and I think there's a probability that the rural demand will stay put the way it is. So I think as far as the FMCG sector is concerned, or any, I would say, the worries on the monsoon, I think it is too early to call that out. And in terms of FMCG demand also, if the things pan out well, there might be, you can say, incremental acceleration which can come in the rural India.
All right, Amnish, I request you to stay with us. For the time being, we'll slip into a short break. Come back, we'll continue the chat that we're having with Amnish. We'll also be joined by Sudarshan Sukhani and Mitesh Thakkar for a couple of technical trades. Don't go anywhere.
Welcome back. We have Sudarshan and Mitesh who are with us with what they'd want you to do as far as specific trades are concerned. Yesterday, of course, was a good session. It was a lower start, early morning jitters, and then the market really did well. For the bulk of it, it did not look back after that. Gentlemen, morning again. Sudarshan, let me start with you. I think you were kind of clear in that way that maybe the market is, the bias is higher. What's the sense as we start this morning? I mean, it's a flattish kind of start according to the GIFT Nifty.
Yeah, good morning. Yes, I'm very happy. Yesterday, the idea was just go and buy, and I explained why, that the markets have given a clear message that they are standing at support 24,500 and we should be going long. But that was yesterday. Yesterday, we also had an intraday rally. Now, all of you know very well that intraday rallies are so difficult to obtain. Most gains come overnight with overnight gaps. Yesterday, it was not a gap. There was a 250 points to be made for any trader who went long wherever. Of course, the points would have been less. But that happens very rarely, just 2-3 times in a month. Today is a very different day. It's likely to be choppy and a little uncertain. Because the overall short-term trend is up, you can look towards a dip to 24,800 and buy there with a 100-point stop loss. If the dip doesn't come, I don't think we should be looking at the index at all.
All right, not looking at the index at all. Mitesh, your call on the indices, or would you avoid the index and look at individual stocks itself?
Yeah. So on the indices, I was slightly negative after that fall which happened, but the markets have recovered very strongly and filled the gap which happened on Monday. Now, that still doesn't give me the chance of an upside continuation. So my sense is that, the index is back to the earlier range, 25,050, 100 on the upside to about 24,500. And we might chop around within this range for next few days. And therefore, I think, trading should be range-specific strategy to be employed, which means that you try to buy near the lower the range and try to book profits around the upper end of the range. The Bank Nifty view is also very similar. 55,500 to about 56,400 is my broader range.
Okay. All right, that's the broad range on the headline indices. By the way, we have another large trade that's taking place in the block window. 46 lakh shares of Zydus Wellness changing hands, worth around 900 crore rupees. They change hand around 1,900 rupees a share. So we'll keep an eye out on that stock as well. As someone would say that we're waiting actually for some of these companies to get into the cooling off period, because the supply of paper has been absolutely enormous. So you've got another, I think, 15 sessions or so, and then we'll get into...
there is this company called Thematic LLP, which holds 7.3% stake in, Zydus Wellness. It's notified as a domestic institutional investor. So Thematic LLP, I'm sure it's a, investment window of any of the companies. So just trying to do a quick search on what exactly it is. Can't find the details yet, but 7.3% stake is what they...
We'll try to find more on that particular name, but for the timing, let's get...
Okay, it's True North. True North is the company, yes. So True North is the one which has sold about 7.3%. They've earlier sold 2.6% already. Now they were remaining with 7.3%, and I think it's a clean out trade from True North.
If that is the case, the stock is going to be in big focus today because, as Manglam said, this could have been a bit of a supply overhang. 2% already got cleaned out, another 7.5%. If in case, we're just going by mathematically, that 7.3% did change hands and True North had 7.3%. So we'll wait for further clarity on that front. But let's get straight to Mitesh. Mitesh, tell us, you had a couple of trading picks.
Good morning. On the trading side, I have a buy on Grasim with a stop at 26.70 for targets of 27.80. Then also a buy on KPIT Tech for targets of 14.50 and a stop below 13.84. Bandhan Bank is something which I'm positive on a medium-term perspective. So every time it gives a dips and a decline and a reversal, I think there could be a buying opportunity. So now buy with a stop at 174 for a first target of 186. And Godrej Properties is a buy with a stop below 2,400 for targets in excess of 2,500.
Sudarshan, what about you? What are your trades?
Well, they're primarily mid-caps. IGL is a buy in the gas, the company that supplies gas to Delhi, including me, with a stop at 207. Supreme Industries is a buy with a stop at 4,500. Hind Copper is a buying opportunity with a stop at 257. And HDFC Life is a buy with a stop under 757. These are small, large mid caps. I think it's best to avoid large caps today.
Okay, all right. Got those. Thanks very much, Sudarshan and Mitesh, for those trading ideas and, of course, the overall trading strategy as well. We'll come back with the pre-open session, 5 minutes out, actually. We'll also have Manas Agarwal of Bernstein joining us to talk about the insurance sector. Stocks were buzzing yesterday. We've reported on 2 or 3 stories exclusive stories over the last fortnight or so. All of that in focus in just a bit.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're still in conversation with Amnish. Amnish, I wanted to ask you about the biggest casualty yesterday. Everyone was talking about the big recovery that we saw in the markets, but Tata Motors, the street didn't like the commentary that's coming out with regard to the takeaways from the the investment meet, and that's why that stock was down close to around 4%. What's your view on the name? The name that was more than 1,000 rupees, pulled back to sub, I think, closer to around 600 rupees. And then, in fact, now after moving to around 700 rupees odd, it was under pressure yesterday.
Okay, Nigel, actually, Tata Motor is facing multiple headwinds from the last few quarters. For example, you look at, say, domestic, the PV, particularly on the EV side, the growth rate is not there the way Tata Motors grew in the last two to 3 years. So that is not happening from the past, I think, at least 2 to 3 quarters. Even on the CV side, I think the numbers have been pretty muted. But more importantly, what is also, I think, troublesome for the company is what is happening on the JLR front. So there, I think you can say there's a lot of volatility because of these tariff wars are there sometimes. And now they are talking about, you can say, lower cash flows. So I think all these factors have resulted in the cut in the stock price. And I think in the near to medium term, with a kind of, you can say, global geopolitical situation, tariff wars, and you can say lot of uncertainty around, I think the stock can remain range bound with an upward bias because lot of negatives are already priced in. But having said that, at the same time, there is very limited visibility of any significant revival in growth.
All right, Amnish, hang in there. We'll just, have a conversation around the insurance space as well. Life insurance stocks, they've been, seeing a good run-up over the last few trading sessions. Will this momentum sustain? Are the valuations still supportive? Manas Agarwal, insurance analyst at Bernstein, now joins in. Manas, that really is the question. What exactly is the industry APE, VNB margin growth that you are working with this time around? And in the life insurance stocks itself, what is your pecking order?
Thanks for having me. I think what people are penciling in is ULIP will not be as fast in terms of growth relative to last year because of the base effect. So broadly, we're looking at a 12-13% top line expectation entering the year. and with some margin expansion happening because of product mix. Now, companies have said they will invest a part of that or all of it into distribution, but the expectation is mid-teens in terms of bottom line on new business growth. So that is what is getting penciled in across the board. Now, the pecking order, if I was to say, I think MaxFin valuations for all remain supportive, but I think MaxFin, there's scope for some catalyst to play out, and therefore, top of the pecking order right now is MaxFin. We like SBI and HDFC Life both. For us, IPRU and LIC are market performs. LIC is given a very aggressive guidance for FY26. There is going to be supply from the government likely. So if they deliver, there will be interest in the name. So we'll keep monitoring. But for now, we are neutral on the name.
All right. Hi, Manas. Good morning. Good to see you, Win. ULIPs, they are a very soft second half of the fiscal. That's H2 FY25. However, the growth could return out there, which in turn will put pressure on margins, as we've seen in the past. Your comment on this, and also, is there any outlier from the sector itself that can, brace and fight back even on the margin front?
So I think broadly you're right. H1 is where there is base effect and markets also recovering. So probably H2 could see some inflow in from the ULIP as well. Either ways, higher ULIP share will drive a higher top line, and then margin expansion should be more muted if ULIPs are not happening. So right now the base case is ULIP will not grow very strongly, but if that has to happen in the second half, then you will see some pressure on margin expansion. But then that should also reflect in top line growing faster. Having said that, either ways, you should look at a mid-teens kind of a VNB growth, and valuations continue to remain supportive. So that's where there is interest from investors in this space.
Manas, hi, morning, Prashant here. So a couple of things, right? Bank assurance, and there's been so much back and forth on that. Now, it looks like, in that sense, that crackdown is on the back burner. Not crackdown, but just generally discomfort with regards to pushing policies through banks is on the back burner. We reported that, the government's indicated to PSU banks, actually, that they can sort of, sell sell policies as well. I mean, along with core banking as a function. The other thing, of course, is who's going to be the new chairman at IRDAI. How do you look at these three things? And actually, the first is the bank assurance question, and the second is who's going to be the new leader at IRDAI. Because the earlier chairman, lots of stuff positive for policyholders, but was at the margin seen as a bit disruptive for insurance companies. Your thoughts?
Sure. On banca, I think we've heard from insurers, from the government, that the intent is to curb mis-selling. The intent is to reduce forced bundling, but the intent is not necessarily to stop banks from selling or limit banks from selling. I think the industry has also done a good job in terms of communicating that to the regulatory stakeholders. So that is a favorable move up in terms of regulations. And I think that should continue to be the case in terms of base case for regulations in this sector. On the second point, very difficult to preempt who the person will be. The outgoing chairman has vacated office sometime in March or April. So it's been a while now. We'll have to wait and watch. It's the government's mandate to appoint an insurance regulator. But yes, I do think that the outgoing chairman was pro-consumer. But as a result of that, it was quite disruptive to the industry as a whole. It also in the backdrop of the tax changes that the government made in 21 and 23. So the expectation is with RBI and SEBI appointees being pro-growth, there is a hope that that could replicate with the insurance sector as well. You will go from a pro-consumer, anti-industry / neutral to industry setup to probably a pro-growth on the industry side. So that is partly where the re-rating is happening. Very difficult to say who that person can be.
Manas, on the insurance amendment bill, anything, if it comes up in the monsoon session of the parliament, anything which we should watch closely for?
Yeah, I think I personally do expect the amendment bill to get introduced. The big sticking point last time around was the agency open architecture. I think you guys ran the news that the government is considering not taking it ahead on that front. which should clear up the space for the rest of the proposals to go through. I think one is easier M&A norms, which will help Max Financials reverse merge into their holdco. And the other is composite license. Composites license globally, term plans and health plans are bundled. That is not the case in India because of the regulatory framework. That could change. That is one area where I do think life insurers would be interested. They also have a history of selling these plans before 2016. So I think those are two areas to look at. Apart from that, we'll have to see when the bill gets passed.
Right. And, from the parliament, let's talk about the group of ministers as well. For GST, there has been this long ask of the industry to reduce the GST on insurance. Do you think there is a possibility in the near future, given the talks around rate rationalization, etc.? And were that to happen, how much of a positive trigger would that be, according to you?
Sure. So I think the sticking point on that is input tax credit. Right now, the government had proposed that we'll cut the rate, but then there was no input tax credit. So the cost to the company was going to land up being higher. And therefore, there was no benefit that was going to be passed on to the consumer unless insurance companies take the hit. Now, if government is foregoing some amount of revenue, the expectation from their end would be that consumers get the benefit. And that's where the sticking point is. I think it got put on a pause for this very reason, which is at least an indication that the government understands the concern. Now, the expectation/hope is that there will be a middle ground on rate with input tax credit so that the benefit can be passed on to consumers. If and when that happens, it will be a positive because affordability is a challenge with both term plans and more so with health plans. So if there's any sort of relief in terms of the end price to consumer, that is a positive. I don't expect large cuts, so we'll wait and watch on how much of a volume bump that can drive.
And how much is a valuation upside remaining for all these insurance companies? Do you think it will be growing in line with the EPS, or is there any case for multiple increase as well across the board?
I do think there is room for increase in the multiple. We've written about it as well. The recent re-rating that has happened in the sector, large part of it is the regulatory overhang going away and therefore multiples expanding. However, multiples still remain quite supportive in terms of what is getting priced in. If I was to talk about some numbers, single-digit growth in new business profits over the long term is still what is in the price. Obviously, expectation from a fundamental perspective is that these companies should be able to deliver a higher number. So HDFC Life is in low teens, but other than that, the other three private sector names are pricing in a high single digit kind of a number. So I think there is room for further re-rating, but a large part of the recent up move was also multiple expansion. So,
Manas, your coverage on general insurers?
No, I don't cover general insurers.
Okay, but the motor third-party hike, right? I mean, premium hike, which has been pending for a while. We'd reported that was the other story that we had put out, that it's under consideration and something may come through. It's an important trigger for companies like GIC and Lombard, etc., amongst others. Thanks very much for joining us. Good speaking with you. Appreciate you coming on this morning. On the program. Well, I think two bits of global news flow while we were in conversation in the insurance space. One, Bank of Japan has maintained interest rates, short-term interest rates, so unchanged, the decision. They'll typically in an hour, 2 hours, there'll be commentary coming through as well from the central bank officials. And the other, of course, is the G7 statement, which came through essentially saying that Israel has got a right to defend itself and that they stand with Israel. So pretty standard stuff, nothing unusual, which really pushes the narrative one way or the other. Let's just talk about the standout brokerage report as well. Nimesh has been going through them and he's got one or two for you. Nimesh, morning.
Morning, Prashant. Today's standout is in Schneider Electric. A double upgrade from Goldman Sachs to a buy from sell, and they've raised the target price to 910. They've actually identified 4 key triggers for this upgrade. The first and foremost, increased TAM, which is the total addressable market. They believe that the TAM is going to increase to $14.5 billion by FY32 versus the current $9 billion. And also the market share for company to go up to almost 3.5% from current 2.9%. So this is the first big trigger. The second big trigger is the margin expansion. Goldman expects the margin to expand to almost 40% by FY32 versus the current 38.5%. They believe that valuation is likely to catch up on the back of this big, large TAM, and hence, you'll say re-rating for Schneider. And last and not the least, the government support will add further growth for a company like Schneider. In fact, Goldman is anticipating a 31% order inflow CAGR between FY25 to FY28. So a big upgrade on Schneider from Goldman Sachs. They now have a buy rating, and they've raised the target price now to 910 rupees.
All right, take that point, Nimesh. Thanks a lot for that. So Schneider is a stock that we will most definitely keep an eye out on. 770 rupees on the ticker right now. The Goldman Sachs target is 910. But speaking of 910, we are at 910. Let's get in our tech calls once again for 910. Sudarshan, your pick?
Well, it's HDFC Life. Consider buying HDFC Life with a stop under 757.
Mitesh?
I'll go with the buy on Grassing for targets of 2780.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's revise a couple of stocks that are going to be in focus, and it's raining blocks. We have another big one, Vishal Mega Mart with a mega block. Vivek is here to fill us in with some details. Vivek?
Well, that's right. It's a mega block deal that's expected as far as Vishal Mega Mart is concerned. 19.6% of the total equity is expected to change hands. The total size that is expected to cross hands today is 9,900 crore rupees. Who's the seller? Well, it's the promoter entity, Samayat Services. Remember, Samayat Services is an investment vehicle of the Partners Group as well as Kedara Capital, who are essentially the promoters of the company, and they held a little over 74% stake in the company at the end of FY25. Block is not yet happened as far as the block deal window is concerned, so expect some pressure on the stock on account of this very large equity offering.
You know, guys, just a bit of trivia. For Kedara, Vishal Mega Mart, actually not just for Kedara, but for other private equity players, when Vishal Mega Mart listed, it was the single largest profit event for these private equity firms. I mean, in terms of, when they came in and the exit at the time of the IPO. And there's, of course, now more.
The IPO wasn't too far long
just
ago,
now,
just December, right? So out there, they raised about 8,000 crores via an offer for sale, and the listing price, or rather the issue price, was 78 rupees a piece. 6 months later, at 115 rupees, they're selling more than double of what they had actually offloaded in the IPO itself. So that's something most definitely keep an eye out on. 51% is what they will hold if they go ahead and exit all the stake that they have.
Well, let's talk about Biocon as well. Vivek, tell us more.
Well, that's right. Biocon, well, a large equity dilution. Company is looking to raise a significant portion, almost 4,500 crore is what the company is looking to raise via the QIP route. The indicative floor price of this particular QIP is at a 5% discount to escalate close, so 323 rupees a share is the indicative floor price, indicating that there could be an equity dilution in excess of 11.5% of the total equity. What is the company looking to use the funds for? Number one, the company is looking to purchase the optionally convertible debentures that was issued by its subsidiary Biocon Biologics. This particular debentures was issued to Goldman Sachs AIF scheme, and the company will also go ahead and reduce it, given the fact that this is an EPS accretive event on account of debt reduction. And also, market will be keenly watching out for what will be the future of Biocon Biologics. Could expect some recovery in the stock as far as Biocon is concerned.
All right. Vivek, thank you very much. We'll track this one as well as rates start to come through. Less than a minute to go for the market open. We'll look at where we are starting out at and then sort of take it forward. So indices first as always, and then we'll look at stocks. 30 points higher on the Nifty is where the pre-open session has left us with, and about 70 points on the Sensex as well, 81,870 at this point. So Vishal Mega Mart, of course, indicative 7.5% lower, and some of the others are coming through as well. Tata Motors, I think, is the other one which perhaps should be in focus. After, of course, yesterday's sell-off that we saw. By the way, we have the management of Sterlite Tech joining us later today. Sterlite Tech yesterday saw the highest ever volumes in its history. I mean, it's been listed for 25 years now. Big volumes and big price gain as well. Well, what do we have? First rates, it's absolutely flat. So blinking red and green, at least on the Nifty. It's more, actually not really definitive on the Nifty Bank as well. So it's flat actually on both. So 24,930 on the Nifty. Nifty Bank at 55,960, 970. And mid-cap index is, again, flattish, no real direction. The small-cap index, I think, will also come up on your screen in just a bit. So again, nothing at all so it's almost where things were yesterday at close. That's the first kind of trends which are coming through. Heat map on the Nifty. How are we opening up? It's more down than up. So Bharti on one end of the spectrum and Tata Motors is at the other end of the spectrum. Tata Motors, of course, was the big loser yesterday with about a 4% cut that we saw. Mangalam.
Well, a bunch of mid-caps in focus. You have Z, which is clearly one of the stocks which is doing a lot better. The mid-cap index on the whole is outperforming the frontline index, which is flat, but a mild green is what we're seeing. So Z, promoters infusing some money in the company via warrant issue is something that the street likes. Mahanagar Gas. Yesterday, IGL was the stock of the day on the way up. Now it's Mahanagar Gas that we're keeping an eye out on. Axis Cades is another one, which is, a European company has signed an agreement for a joint development of defense products. So that's the other stock which is up 5%. Vishal Megamart obviously opens lower. The bulk deal is pending close to around 10,000 crore worth paper in supply, down 7%, a sharp decline. But on the way up, one of the deals that took place in the block window was Zydus Wellness, nearly 7% equity that changed hands. That stock has opened fairly higher right now. So that is the one which is up by almost 2%. And apart from that, the ones which are gaining are not gaining by much. We have Godrej Properties mildly in the green. They bought 16 acres worth land in Pune. There are a couple of these other real estate companies which are spiking as well. So case in point, something like a Macrotech Developers or Oberoi Realty. But by and large, flattish with a green tinge, outperforming with a few individual stocks which are doing a lot better.
Well, that's right, Mangalam. Sterlite, that's really Sterlite Tech. That's really the stock that's come back, and it's come back in style. Big move is what we're seeing on that particular stock, up another 6%. Another big mover this month has been Subros. That stock, in fact, is up 40% in this month itself. Even in today's trading session is one of the big gainers. So I think you should keep an eye out on that one as well. Tanla, they've announced a buyback. The street likes it. Big volumes is what we've seen in the first few minutes. And that stock as well is up close to around 5% or thereabouts. Zydus, you already pointed out, it appears it's a bit of a clean out trade. So that stock is in focus. Another one that I'm looking at is Blue Spring. Remember, this is the demerged entity that did list a few sessions ago. It's been continuously at lower circuit. Today, in fact, we're seeing some kind of reprieve on that front. And I think it's come off its lower circuit. Now it's trading with a cut of around 3.5% after multiple lower circuits, what we've seen on that particular name as well. Vishal Megamart, though, from the day's low has seen a bit of recovery, so there is some buying interest. And Hindustan Zinc, it's gone ex-dividend. The stock is not down actually 2%. It's gone ex-dividend of close to around 10 rupees. So explains why that one, in fact, now it's aligned with the futures market. It appears that it's down close to around 2% or thereabouts. Prashant.
Well, absolutely flat, right? I mean, so 24,940 is where the index is trading at. So it's all about individual names. And as we've seen over the last couple of days, no dearth of individual movers. I mean, news flow blocks, etc. So that's what's coming through at this point in time. But for now, it's a bit of a tentative kind of start. Remember, markets have done well. Last week was a negative weekly close, Friday to Friday. But before that, I think we've had an uninterrupted move on the way up. So you've got to keep that in context as well. Ashwini Agarwal is with us, founder and partner at Demeter Advisors. Ashwini, of course, has been a bit cautious at the margin. Ashwini, good morning. Good to have you here. Markets still broadly holding, though, even with all this uncertainty. And the bias has been to try and, look for opportunities whenever there is any small dip. How are you placed, Ashwini, and what's your view near term?
Morning, Prashant. Thanks for having me here. It's a good question because, the market seems to be sort of, not really taking notice of what's going on in the Middle East. And while there have been rumors of Iran having, asked for mediation, etc., there has been no let-up in the hostilities between Israel and Iran, and oil prices have inched up. They could do worse. And none of this seems to faze the market in India. I think it's a question of liquidity. I think the rate cut that went through, as well as the cut in CRR, took the market by surprise, and households continue to pump money into the markets, and that's driving it. The second thing is that hopes have now surfaced that domestic growth, which is very weak, and capex, which is very weak as of now, will hopefully start to turn later this year with lower rates and easier liquidity. We have to see whether that plays out or not. So my sense is that in the near term, given slower growth, given global issues, you can't see a lot of upside. And, as you were discussing just before I came on, the paper supply has started to kind of resume with a big gusto. So my sense is that, there's not much upside from here. Whether there's a lot of downside or not, it's difficult to tell. One fine morning, we might wake up and say, oh, Middle East is a real worry and sell off in a big way. But outside of that, the way I think about it is that this is going to be a year of single-digit returns, possibly, and whether that's a combination of doing nothing for a long time, or it's a combination of a step down by 5-7% and then up by 15%, I really couldn't tell.
All right. Hi, good morning and good to see you in. It's been a while, Ashwini, since we had a chat, but you're sounding a little bit somber this morning. Now, we've already got, low single-digit return for the year on the Nifty. Since you're saying that, in fact, maybe we could consolidate a little bit and maybe don't expect big upside from here on, say till the end of this year. My question to you is, what about the downside? We made a low of around 21,700. We went there twice, actually, and we saw a solid rebound. Have we made the low for the year?
I think that that is behind us. Now, obviously, what I will keep out of the equation is a significant deterioration in global peace and quiet. If the war in the Middle East were to sort of get a lot worse, the dreaded end button is pressed or something along those lines, though all bets are off, right? So let's keep that out of the picture. Outside of that, I think the worst for India is behind us. And the reason I say that is that, the big downside was caused by earnings downgrades. The pace of the earnings downgrade seems to be reducing. The RBI action, which I spoke about earlier, is a big positive, and hopefully government capex in railways, defense, as well as lower rates and better liquidity will encourage the corporate sector to start investing. That's the hope that we all have. And that makes me think that the bottom is behind us. Now, could we go down to whatever, 23,500, 23,600 before we hit new highs from here? I can't say. I mean, those 5-7% types of moves are impossible to tell. But I don't think there's a lot of downside from here.
All right. So, Ashwini, since you spoke about the RBI policy, a lot on the street believe that maybe the RBI cutting rates is not as much a credit growth positive as it is for the assets, the rate sensitives. And that's something that we've been seeing over the last few trading sessions. The real estate stocks are doing a lot better. We have macro tech developers, which is higher, Oberoi Realty, Godrej Properties has gone ahead and, bought some land in Pune, etc. as well. So while at a broad level, the index will give you single-digit returns, or the bottom is, in place right now. What sectors would you be betting on for the next 1 year?
Mangalam, this is one of those markets, where finding mispricings has become very, very difficult. I mean, I would often have at least 2-3 sectors that would look good to me. But this is a time when I'm really struggling to offer you a sector-wise sort of buying list. But, if I zoom out a little bit, I think, you spoke about rate sensitives. So, in that vein, I think life insurance companies could possibly be an area one can look at. I think domestic healthcare continues to look reasonably positive. And I think in the small cap space, I think there are still some pickings, few and far between, but there's still some pickings left. But, sector-wise, almost everything is priced well. So there's not really that much one can do. One can look at rate sensitives, and REITs come to mind. I think, that's another area where, you could make money. I mean, I was reading a research report yesterday which suggested that most of the REITs that are listed still have a potential of about 12 to 13% IRR over the next 12 months, which is not bad considering where we are.
Totally. So you like REITs, you like the insurance space, you like some of the rate sensitives. You did briefly mention some of the small caps which are looking attractive. I'm not sure whether you'll be able to specify which ones, but if not specify them, at least give the street a direction as to where there are attractive opportunities?
You know, in the auto component space, the performance across stocks has been very, very divergent. Some have done well, some have done very poorly. And I would say that, you know, sift through the list of stocks that have done poorly in that space and see if there are a few that make sense or appeal to you. In the NBFC space, again, the performance has been very divergent, and there are some value pickings there, which look good to me. So, you know, those are two areas that I'm looking at. In the domestic consumer space as well, you know, while consumer has been pretty lackluster in terms of demand matrices, I think there are a couple of stocks that look very good or promising, at least. Let me put it that way.
You spoke about consumer stocks being promising. One of them that has done extremely well is Gillette. It's up around 10% this month from in the last 1 year or so. It's up 35% at a fresh record high. Once again, for that stock, three things working for them. The most important thing, them having increased their total addressable market from just being the best a man can get, getting into the other gender as well. Venus, which is one of their women's razor products, doing extremely well. And also, lower metal prices does well for their margins, and they have been increasing their presence when it comes to the distribution and premiumization as well. So all these factors doing well. I remember, Prashant, when there was a time when every 6 months or so, there would be a new product coming in from Gillette. Yeah. They would add another blade. There was once the Gillette Vector, which was 2 blades. Then there was 3 blades, the Mac 3. Then there was one with 4. And now there's Fusion 5, which is 5. I see another one coming very soon, which is 6 blades.
But the razor for women, is it new or is it pretty old, right?
It is pretty old, but earlier it would account for about 10% of their sales. Now it's growing at double digit. It's growing at twice the pace of the razor for men, because razor for men, one, is a highly penetrated industry. Secondly, the culture of beards is here to stay. So how else do you increase your total addressable market? I think start looking at the other gender.
I'm paraphrasing, but I think I said this earlier also. I remember Warren Buffett back in the day, 20, 30 years ago, was on, he said, he was commenting, he was asked about Gillette. He said, men have one face, women have 2 legs. So I think that's Buffett for you. And he was talking about Gillette and how that's a big opportunity. But I think here in India, as you said, maybe they're pushing ahead, right?
They're pushing ahead. And the other part also for India is that with the beard trend, everyone's talking about how beard would, be spell doom for Gillette. Yeah. Now they've gone into men's grooming as against just a beard. So if you look at their latest campaign as well, if you drive down the streets of Mumbai, you will see hoardings of Hrithik Roshan having the Gillette Fusion 5. On the one side of the image, he is clean shaven. On the other, he has a beard and he is grooming that beard. So even the Fusion 5 has another blade behind, which allows you to groom the beard. So even if you have a beard or you don't have a beard, you might need Gillette. For all 3 of us, we are regular users. So,
well, I think interesting consumer space there really coming through. Do we take a quick commercial break here? Okay, I think, let's do that. Ashwini, thank you very much for joining us. Great speaking with you, as always, here, and appreciate your comments. Well, markets are down a little bit more. We're down about 60 points. But I think we have a very special guest, the Steel Secretary, with us.
Well, that's right. Let's get chatting with Mr. Sandeep Podrik, the Secretary, Ministry of Steel, who joins us on the show. Hi, sir. Good morning. Always a pleasure talking to you. Thanks a lot for speaking to us yet again on CNBC-TV18. Let's get a couple of clarifications first out of the way. You have put the safeguard duty at around 12%. Various unconfirmed reports suggest that because of the turmoil that's taking place in the globe and various, trade uncertainties that are taking place, the Steel Ministry is considering hiking this from around 12%. Could you clarify if there's any truth or not?
No, I don't think so, because as you know that this is a process in which DGTR makes recommendations based on its investigation. So DGTR is conducting its final investigation. They are likely to conclude it by August. They have time till August to conclude the investigation. As you know that the safeguard duty which has been imposed right now is provisional for 200 days. So DGTR will give its final recommendations based on whatever is the current status, whatever is the industry saying, whatever other stakeholders are saying. And then based on that recommendation of DGTR, government will take a call. So as of now, I would not like to hazard a guess on whether the safeguard duty will be higher, lower, same. It will all depend on DGTR's recommendations.
But is there a proposal, sir, from the industry itself that they want more than 12%?
I think so that the industry is approaching, as I said.
And is that being considered, sir, because the
DGTR.
industry... Yeah, please go ahead.
Yeah, I was saying that the industry actually places their whatever they are saying before the DGTR, not before us. DGTR is the right authority who considers all. So industry is approaching them with whatever they are asking for, including raising the safeguard duty. And DGTR will look into all aspects. We also have to see that the steel prices have to be balanced with consumer goods prices. So DGTR will take that into account, including the international situation, the domestic situation, and then it will make its recommendations. So as of now, I can't comment on whether it will go up higher, lower. It will all depend on DGTR's recommendations.
I'm sure many of those participants are listening to you and they're saying, please don't talk about lower. At least higher is something that will be acceptable. But in the past, when we chatted, at that point of time we had ruled out any kind of increase from 12%. Now we'll have to wait by to see what is the final take on that front. But you had also said you're plugging various loopholes with regard to people who are importing steel. What's the progress on that front and any concrete measures you're looking at?
Yeah, so basically what we have seen that there are various ways of importing steel. So one is through BIS licenses, where the steel has BIS standards. Steel can be imported based on a license. Then there are some other options where there are no standards. So what we have found is that in certain cases, which have come to our knowledge, people have misused the provisions by, say, one company has a license, so multiple people have supplied steel based on that license. That has been confirmed in the investigation, and we are taking action, legal action, including recommending to BIS to cancel the license. We have also seen that in the SIMS portal, people are trying to misuse the NOCs by trying to import different grades from which NOC was granted, or for using the same documents for importing multiple consignments of steel. So all those loopholes are being plugged in.
Okay.
What I can say is that people can import steel if there is a BIS license if there is a QCO, and if the company who is exporting to India has a BIS license, then it can be done. Apart from that, there is a small window of NOC, but we are trying to stop misuse of provisions or irregular import. That we are trying to do.
All right, and it appears you'll have been fairly successful actually, because if I look at the imports for the last 2 months at least, imports have come down, and this is in the backdrop of Chinese exports moving up. That factor is heartening because Chinese exports have continued at a very, very strong pace in the last few months, and in spite of that, India is relatively protected. Do you think that peak imports into India, well, that is more or less now we have our measures in place and peak imports are behind us? And also give us a word on domestic demand. The last time around, you were talking about double-digit steel demand in this year. Stick to that?
Yeah, so on the import side, so there are like 2-3 kind of imports, as I said earlier. One is where the particular steel is not available inter-country, some specialty steels grades. So that's all right because those are not available. Second is based on lower price or dumping. That what the government has tried to discourage by imposing safeguard duty. I think that we have controlled to a large extent now. Based on the 2 months data of April and May, the total steel imports are much lower as compared to what they were in the last year. And if this trajectory continues, I think the steel imports will be about 50% lower than last year, if not more. So that's on the price sensitive or imports based on pricing. There is a third category where some companies who have vertical integration with steel plants in their own countries, in the countries of origin, that I think will continue in spite of safeguard duty because they have a vertical integration, but that's a smaller part of the overall basket. So steel imports, I think the government's imposition of safeguard duty and other measures have controlled what we don't want, that the cheaper and lower quality steels to be imported into the country, that the government has been successful in that. On the consumption side, I think we are the only major economy who is clocking double-digit growth, and as you know, that last 3 years, we have been clocking about 12% growth. So that's nowhere else in the world when the world steel growth is much lower, about 0.5%, 1%. So India is a bright spot in the steel consumption scenario, and government's push on infrastructure, the private sector growth in real estate, buildings, the growth of the economy. One important thing I would like to point out is that the per capita consumption, now we are at 104 kg per capita, and this is a inflection point in my opinion, because now our population is stabilizing and our GDP is growing. So I think the per capita will now increase much faster, and same is for GDP to steel consumption growth elasticity. If you see the figures, for last 3 years, the elasticity has been somewhere around 1.7 to 1.8, while earlier it used to be around 1. So I think both these factors, greater elasticity of steel as compared to GDP, and much faster growth of per capita. So the consumption, I think India is going to be okay, or rather good in consumption scenario.
So from 104 kgs, where do you see it headed, the steel per capita consumption? A longer term time horizon.
If you see so if you see in this particular year, 24-25, we increased by 7 kgs. We were 97, we approached about 104. My opinion is that in 2030 or so that's about 6 years from now, 5-6 years from now, we should be somewhere around 155, 160, and by 2035 we should be around world average of about 200 plus. In next 10 years we should reach the world average.
Okay.
All right. 35-36.
All right, Mr. Pondik, you've given us a fair idea about how you see the industry shape up. Let's get a couple of company-specific things out of the way. You're sounding optimistic on consumption. You believe that the worst in terms of imports are behind as well. Good time to see a sale OFS. Is that on the cards?
Sorry, I did not get the question.
Sale. Steel Authority of India. Do you think that, the ministry believes that this could be a good time, or have you heard anything with regard to the government's intent to do an OFS in the listed company sale?
I don't want to comment on this at this point of time. Sale is doing well.
Yes.
Overall, if you see the 24-25 performance, sale has done well as compared to the sector.
Absolutely agree with you, sir. Mr. Pondik, absolutely agree. You know, if you look at the debt reduction, the working capital, everything looked much better for sale, particularly towards the end of the year. So do you think it's a good time for an OFS? Have you heard anything on that front?
No, not from sale or not from in the ministry for now.
All right. What about the turnaround strategy for RINL? How much of money have you all already spent? How much of more money will you all spend? And what is the end goal with regard to RINL? Will SAIL have to buy it? Will you have to do an IPO? Or will it merge into some other entity?
So for now, RINL till now has been a success. I would put that in the success category till now. In September, it was on the verge of closure. Now in May, they are running 2 blast furnaces above 100%. They have become cash positive for last 3-4 months. They are planning to start the third blast furnace in this month. So I anticipate that by next 3 months, they will start generating sufficient surplus to meet their liabilities. We are also expecting that they will pay back much of their liabilities in next 6 months on the private sector side. On the bank side, they have paid some part of their liabilities, and the loans they have lowered their interest rates. The banks have lowered their interest rate. So RINL is doing well for now. They have also reduced their manpower, regular through VRS as well as contractual. So they are reducing their fixed costs. I'm sure that they are on the right path. About the merger or any other thing, for now it is that the government decision is to keep RINL as a going concern. So there is no proposal merger with the same or any other thing for now on the table.
All right. No, got that. Sir, good morning. Prashant here. I just had a non-steel question. I know this is not directly under your purview, but on this entire rare earth issue, sir, anything you can tell us? What's the government thinking? What is, we reported, for example, that the government is working with players to get those licenses cleared for imports. What can you tell us, sir, in terms of the latest?
You said correctly, it's not our issue. It's not Steel Ministry issue. The only thing I can say is that our companies are also trying to look into the rare earth issue, whether they can get some technologies or some invest something to get those things. So that's all from our side. Means our companies are exploring that. But on the policy side, I would not like to comment anything on that.
Got it. Just to wrap things up, we go back to steel itself. What's the progress with the Karnataka government to rationalize the proposed hike in duties? The last time you said you are in talks with them. What's the update here, sir?
So I think the companies are still talking with them. The issue is still under discussion. Nothing has been.
By when can we hear clarity?
Because I can't really say, because that's a complicated issue. We are still under discussion on that.
Just to Mr. Pondrik, just one last on that rare earth thing. When you said government companies are being, there's looking to kind of see if we can have technology tie-ups to do processing here in India. Is that what you meant?
Yeah, that's what I meant. So one of our companies is trying to just look into the thing, whether government companies, whether that's where they can invest, or so that's still in the exploration stage of looking at the technologies, looking at the investments.
Okay.
So that's all what Steel Ministry or steel companies are.
Which company? Yeah, absolutely. At a broader level, which company is this?
I would not like.
Okay.
Yeah, that still means still under. So I would not like to name the company, but one or two of our companies are looking at the issues.
All right. Thank you so much, sir, for joining in and giving us an entire outlook on the sector and throwing some light on the rare earth piece as well. But from steel, let's shift focus to manufacturing, and we do have Dixon Tech joining in the EMS space as India is advancing its FTA journey. Does this create opportunities for players like Dixon Tech? How is the business getting impacted due to supply chain disruptions? All of that, we have Atul Lal, who's the Managing Director, joining in. Thanks a lot, Mr. Lal, for joining in. You were fairly optimistic about growth in FY26. With all these free trade agreements that have been signed, how does your export business look? I remember the last time you said that, from almost 1.5 million pieces, you could go all the way up to 10 million in terms of volumes for exports. How does that, translate into revenue? What's the opportunity here? And are you facing any sort of supply issues when it comes to imports?
So on the export side, we are definitely seeing an upside. Last year, we had an exports of almost 1,800 odd crores. We feel fairly confident that this year is going to be more than 8,000 crores. So that's a massive jump. This exports is mainly targeted towards US market and also one of our strategic partners, which has a very large presence in African markets. We have started exports from India. For African markets, it's trial orders, but we think it's going to ramp up in this year. Also in our other businesses like lighting, we're getting positive feelers and some trial shipments to both Europe and North American markets have taken off. We're still awaiting the contours of FTA with UK, and let's see how it pans out for EU. But I think it's going to be positive for the industry. It's going to be positive for the country.
Right. So then there's a two-part question here. One, you said most of your exports currently are directed towards the US. EU is an opportunity. So what's the size of the opportunity? Is there any number that you're aspirationally targeting over the next couple of years from EU and non-US countries, basically? And secondly, on imports, what proportion of your components are imported right now, and are there any troubles there?
So to give a number that what potentially can be non-US exports is slightly difficult at this stage. Because we're going to go to that level of planning only when there is clarity that how the global comparative tariffs are going to happen globally. That's what's going to determine the strategy. But definitely there is a significant upside towards exports, and I shared with you the number that we are looking at almost 4x growth. It's a large number of almost 8,000 to 9,000 crores that we're looking at in the current fiscal. As far as imports is concerned, every domain, every product category has different level of imports. When we are looking at our appliances category like washing machines or refrigerators, the import content is around 30-35%. When we are looking at our electronic devices, let's say like smartphones, the import content is almost 75%. So it varies. As far as the constraints are concerned, as of now, I'm not seeing any constraints. The only challenge, and it is a significant challenge, that the freight rates have gone up significantly. The freight rates from the various ports from where we import have increased from around $800 to around $2,500. So that I can see and I can sense, particularly what's happening in West Asia, that's going to be something to be put under lens.
So does this put your 90 to 100 basis points of margin expansion over the next couple of years at risk? Or are you able to pass these increases on?
You see, this is a temporary phenomenon. There has been volatility. At times, the freight rates in the last 2 years had gone up to almost $2,500 for a 40-feet container. It came down to almost $700. So this is something one has to live with. On a long-term basis, I don't think this is sustainable. I don't think it's going to have any significant impact on industries or Dixon's margins. But this is
Mr. Lal, good morning. Prashant here. So you're saying it's temporary at this stage without too much disruption. Could you, all said and done, by the what do you think? I mean, this year, it's still early. I know you've given us some guidance, especially in margins, etc. On overall growth, on top-line growth, etc., are you well placed to achieve the guidance you sort of put out, and on an overall basis, sir, given all the uncertainty?
We have an extremely good order book, Prashant. Across all the businesses, we have multiple customers. We have large share of the Indian market, more than 35-40%. We are 2 to 3x of our competition. So we are confident. In fact, we are very confident the growth is going to be aggressive.
You know, the other bit is with regards to, and I think we've discussed this earlier as well, with what's happening with China, right? Could you give us a sense of you're doing backward integration as well, component manufacturing? I think you've over the last many interactions you've highlighted as you go more into that, that gives you a bit of a margin lift as well. But as things stand right now, what is the dependence on imports from China, so overall across the value chain for what you manufacture?
So that's what I was sharing, Prashant. Largest business is mobiles. And mobiles almost 75-77% is imports. And that's what we're pursuing, that the Indian value addition significantly increases. And that's the reason we are going to be making very significant investments in the non-semiconductor component space as of now. We are pursuing the ECM as a scheme with the government of India. And in next 4 to 6 weeks, we'll be filing our applications. Yeah. So
and this entire 70-75% is all China, right? I mean, can assume bulk of it.
Not everything is from China. Bulk of it from China. Yeah, that's right.
All right. So, you know, the last time you joined us, you did say 40-45% revenue growth possible in FY26 with 20 to 25 basis points margin expansion because the backward integration, process that you're doing. You also said that you were in advanced stages of closing a partnership for a camera module. Where does that stand now?
So as I shared with you earlier, we are looking at very aggressive growth. Yeah. And we are aspiring for this kind of margin expansion, the number that you mentioned. We are pursuing backward integration. So as I was just sharing, we have already started implementing the project of a display modules for mobile phones, for laptops, tablets, for televisions, and also for automotive displays. For camera modules, we are pursuing negotiations. In all probability, we'll be going ahead with that project. In just another 3 to 4 weeks, we feel that we should be announcing something. That's where we are. Apart from that, we're also pursuing a couple of other possible projects. There's lithium-ion batteries and mechanical enclosures.
All right. Hi, Mr. Lal. Good morning. Good to see you in. Nigel on this side. Very quickly, before we let you go, we understand the customs duty. Well, the department actually has issued notices to several consumer durable players with regard to the copper imports under the ASEAN FTA. Have you gotten notice? Do you firstly import under this FTA?
No, we don't.
So no notice for you?
Not for us.
And what about the Vivo laptops? Because that was a concern for analysts as well. Rather, Vivo rollout. When does that happen?
So with Vivo, we have signed a binding term sheet, wherein the Vivo manufacturing facility, and Vivo is a very large brand.
Yes.
Yeah, has been signed. We have filed our application for Press Note 3 approval from the Government of India. That's being pursued. And also the teams are working on signing the definitive agreements. So it's being pursued very vigorously, and we're excited about this partnership with Vivo because this is going to give a very big quantum jump to our mobile revenues.
So how long before we can hear on this? Because next 3 to 4 weeks, we'll keep an eye on 2 developments. One is the camera module integration, backward integration, and the second one is the Vivo thing. Should it happen in the next 3 to 4 weeks?
See, Press Note 3 approval takes time with the government.
Okay. So a little more than that.
So it's very difficult to say how much time it's going to take, but we are pursuing very vigorously. It's not in our hands.
It again comes back to that China question, right? In that sense. But I think there has been some relaxation and general attitudes have softened a little bit over the last. That's what we've heard from companies across other industries as well. Mr. Lal, thank you very much for joining us. Good conversation. Appreciate you joining us here on CNBC-TV18 as always. Thank you. Well, let's just bring in Samiran Chakrabarti now. He's joining us. We're going to talk about how macros at the margin are changing at all with regards to the jump in oil that we've seen. Samiran, of course, is Chief Economist India at Citi. Samiran, good morning. Great to have you with us here. Thanks very much for your time. If oil stays $10, $15 more expensive, will the front loading that the RBI has done with a 50 basis point cut, will we have to wonder about that a little bit? Because, significantly higher oil reduces the ability of, it'll bump up inflation around the world, reduce the ability of Fed rate cuts, for example. etc., etc. So how are you thinking about this entire issue?
Thanks, Prashant, and good morning, everyone. So I think if you look at it historically, there has been a kind of standard view that RBI has taken, that a 10% increase in oil prices, somewhere around 30-40 basis point of impact on overall inflation. But the things are changing now because we have been, over the last few years, following a policy of keeping the retail prices of oil under check, regardless of very large fluctuations in crude oil prices. And that's why I think the pass-through to inflation might be less. At the max, one can say that if oil had stayed at mid-60s, then at some point of time in the year, we could have considered a retail price cut. Now that possibility might be lesser, but I don't see that at $75, we will have that big an inflation concern coming out of just the oil prices. However, if the tensions escalate and that leads to supply chain disruptions, then that could have a potential negative effect on inflation. But on that matter, it's probably too early to say how things are going to progress.
Okay, so of course, no one knows how this really, one hopes there is de-escalation, but we'll have to watch this closely. In terms of forecasts coming in from your global sort of commodity teams, etc., Samiran, where are you seeing oil prices at? Are you seeing is the risk of a big jump negligible, non-negligible? What's your sense from here, from where we are, which is $74 or so on Brent?
So our commodity strategists think that about $10 to $15 per barrel of geopolitical risk premium is already built into the current oil prices. So from that perspective, it's not that the markets are completely ignoring the risk. So they don't think that this goes much above 80, 70 to 80 could possibly be the range in the short term till we have more clarity on how this crisis is evolving. Yes, obviously there are tail risks in terms of blocking of the Strait of Hormuz or any attack on Iran's Kharg Island export capabilities. But we have to also keep in mind that compared to the Russia situation 2-3 years back, the proportion of Iranian exports to world spare capacity is much lower. Russia's production compared to world spare capacity was much higher. So that is typically taken to be one of the critical indicators to judge how much upside risk to oil prices could be in a tail risk event.
We just had the management of Dixon with us earlier, and he was talking about the jump in freight costs across the board. Any indication of that? Of course, I mean, the fact is that the prices are rising from very low levels. We had the Shipping Federation people yesterday, and they were saying that freight costs to US and Europe were down sharply, I mean, compared to a year ago levels. And of course, from there, they're now rising. Any thoughts at all? Which industries are most affected?
This is what I was referring to when I said that it's difficult to build in the disruptions coming from the supply chain side. I think that's the angle that we will be watching more closely from a inflation standpoint, that whether these freight costs or unavailability of certain products or delay in coming of certain products could lead to some price pressures. But I mean, obviously, this is a relatively smaller portion of India's CPI imported components. We will have many more domestic factors driving the headline inflation number, is what my sense is.
We spoke with SkyMed, the weather forecasting private agency, this morning. They were telling us that, monsoons looked like it was a bit of anxiety and worry that they'd stalled. But they're back, and they expect, the advance to be pretty strong in the next 2-3 days, especially in the eastern parts of the country, etc., where there is still large deficits. So bodes well, doesn't it, Samiran, if that really pans out?
Absolutely. In any case, we will know that from here till almost October, we have significant benefit from base effects on the inflation numbers. We think the next print could be as low as about 2.2%, given where the prices are. So if we don't see a kind of midsummer increase in vegetable prices compared to what we got last year, then we could see a really benign phase of inflation, at least for the next 6 months or so.
Samiran, we also, since I have you on, the monsoon session of Parliament, right? Anything from a policy perspective on your radar broadly?
So I think the new income tax bill is going to be tabled in the Parliament after it has passed through the Parliamentary Standing Committee. So that will be something which probably people will be observing, although there are not too many market-moving things possibly in that bill. But other than that, at this point, I don't think of anything which is really a very macro issue that is on the table for this session.
At what level of crude would you start to worry?
Well, it's a very interesting question because depending upon where the current level of crude is, analysts typically change these numbers. I remember very clearly that when the Russia thing erupted, we used to say that India can withstand $100 of crude also. And now we are at only $75 and we're still fretting about it. So I think this number is a bit moving because, as I said, that we've done a very nice way of calibrating the retail prices in a way that it's not as volatile as it used to be before. So from that perspective, we have some elbow room to tolerate slightly higher crude also. But yes, from a Middle East tension perspective, I think the bigger issue is whether there are any disruptions to the supply chains.
And would that cause any sort of upside risks to your inflation estimates?
In fact, I must say that we analysts, we are at this moment a bit worried that we have too much downside to our inflation estimates given where the prices are. So if we get a bit of an upside from some of these things, maybe our 3.5% average CPI forecast for the full year will be more accurate. So not really worrying about that much on the inflation front because clearly most of the factors are pointing towards downside rather than upside.
Wow, downside risk to inflation. That'll be very interesting to what that does to everyone's growth expectations, etc. as well. Particularly from a Nifty EPS standpoint, because that typically tracks the nominal GDP growth as against the real GDP growth. And if inflation is lower, the real GDP stays the same, then there are risks for EPS downgrades for the Nifty as well. You want to comment on that?
The only clarification is that bulk of the inflation decline is coming from the food side. So the Nifty EPS will probably be reacting more to the core inflation than the food inflation part.
Take that point, Samiran. Thank you so much for joining in and giving us perspective on all the macroeconomic side of things as we look at geopolitical uncertainty and all the other data points that we're grappling with right now. With that, we'll take a short break. And Samiran did speak about inflation. Let's focus on the commodity space. Manisha joins in on the other side of this break.
Okay, welcome back. Markets are down. I mean, finding it difficult to hold on. 80 points lower, not sharply down. I think a third of a percent cut, 24,860. Mitesh is back with us with what he'd want you to do in terms of specific trades. Mitesh, morning again. What do you have?
So, I think my package is just got. Wow, give me a second.
I'll just, in the meanwhile, run our viewers through some of the stuff which is moving. Sterlite Tech, by the way, is on track to surpass yesterday's volumes. It's still early in the day. It's not even an hour. But look at Sterlite Tech. Price gain, of course, yesterday was limit up 20%. It's up 13% this morning, right now. And we highlighted this before market open and yesterday in the last hour as well. Yesterday were the highest volumes ever in Sterlite Tech in its trading history. And I think today should be close, if not higher. We'll see. Tanla was a big gainer yesterday. Tanla Solutions, that is. It's up another 5% or so right now. Subros, big gains. I mean, from 800 to 1,000 rupees in 3 days. That is Subros. Again, very large volumes for this point in the day. And look at something like a Latent View, which is up 5% or so. Again, outsized volumes coming through on Latent View. Advanced Enzymes is another one, which is up 5%. So, yeah, enough happening as far as broader markets go. Market breadth, of course, about 1,600 up, 900 lower. That is the advanced decline ratio overall. But let's just shift focus to commodities while we get Mitesh back on line with his trades, etc. Manisha, commodity-wise, I guess it's easy. I mean, oil, right?
Oh, yes. You know, Prashant, Friday was about 12% of gains on crude oil prices. Yesterday was about 5% of a decline in crude oil prices. So if you look at the overall trade yesterday, it was an $8 of a swing that we saw come in for the crude prices. Well, at one point in time, we were down 5%. It closed 1% on the lower side. In the Asian markets right now, we are trading in the positive when it comes to the crude oil prices. So very, very volatile moves coming in there. But I'll straight take it to the geopolitics, and that's where the major news comes in from and the impact on the crude prices as well. So to begin with, it has been about reports of Iran seeking to end, asking for a ceasefire as well, and asking US not to get interacted within when it comes to the fires there. But Israel, in the meanwhile, has vowed to more strikes. We also do understand via various reports on how Israel has struck on Iran's state broadcaster and the biggest uranium enrichment plant therein as well. In the meanwhile, you also have statements coming in from the US President Trump urging everyone to evacuate Tehran. Well, that's about it. But the whole conversation has been about Strait of Hormuz when it comes to crude oil especially. And when you look at the ship's passage there, and this is the data that we are getting on a daily basis now, on 12th of June, it was 116 ships which are passing through Strait of Hormuz, and 15th of June shows 111 ships there. So we haven't seen much of a change come in the numbers, not yet. Apart from that, it was also to do with the OPEC monthly report that came in yesterday. OPEC has put out an important point forth that spot prices remain above futures. So we are trading in backwardation. The current prices are higher than what they're trading the couple of months ahead. That tells you that the immediate demand for crude and the premium therein has been on the higher side. The OPEC Plus also says that the global economy will remain resilient in the second half of this year as well. They're looking at higher crude prices in the second half than the first half. And apart from that, they also have put out the kind of production that they're anticipating. So according to them, the non-OPEC and the US production going forward is expected to decline in the second half of this year and in 2026 as well. The number that they have put out is 730,000 barrels versus earlier estimate of 800,000. So we're looking at slight decline in production outside of OPEC. I also want to take you through various numbers there. When you look at the previous year averages in sense of crude prices as compared to this year, we are much on the lower side there. So last year for Brent, the overall year average was $83. Currently, with what we've done in this year until now, it is at $71. Same goes for the NYMEX as well. Almost $79 of an average in last year, and we're trading at around 68 at this point in time. And with that, the last plate will show you on what we've done in sense of prices in this year of highs and lows. High for Brent this year has been 82 and 60 has been a low. We are trading at 74 currently. For For NYMEX as well, even with all war conversation and tariff uncertainties, we haven't really come back to the highs that we saw in the month of Feb and March. So after 79 of a half and a 57 of a low, we are trading at around 70 at this point in time. Also, most analysts are telling us that $10 of a war premium is what the crude prices are carrying already with that. So if there is any ceasefire and any conversations, negotiations that happen, crude prices have a more chance of falling from here.
All right, Manisha, thank you very much. Let's hope that indeed does happen, that is, oil cools off, that the conflict's got to cool off as well. Mitesh is back with us with those trades. Mitesh, hope you have your systems back online. What do you have?
Sorry for the glitch, Prashant. It's totally out of my hand. But Asian Paints is something, which is giving a good reversal today. The stop loss level should be around 22, 45, 46 over here. And that's on spot. And the target will be around 23.20 to about 23.30 on the upside. The other one which I have is a sell on Lupin. I think after a long time, a farmer name has come on the sell list. Lupin is breaking down the intraday chart slightly negative. So we'll take a tight stop at about 2,000 before targets of 1930.
Okay, all right. Thanks very much for that, Mitesh. So those are individual trades which are coming through. We'll take a quick commercial break here. We'll come back and it's the economy on the other side. My colleague Lata in conversation with Shantanu Sengupta of Goldman Sachs. Deficits, growth and liquidity. The conversation covers all of that. Stay tuned.
Investing.
Welcome to the economy. Well, there's lots of economic news. The global ecosystem has worsened slightly for the economy, for the Indian economy, but the Reserve Bank policy has provided more rate cuts and more liquidity. This morning, the governor speaking to the Business Standard has sounded a bit dovish by saying that rate cut space may open up if inflation comes below the RBI's forecast. And finally, of course, we had the May trade numbers, and they don't show any impact of the Trump tariffs as of now. But to understand all this better, I have with me Shantanu Sengupta, the chief India economist for Goldman Sachs. Shantanu, there's some timing here. We're just getting pictures of Trump leaving the G7 meeting. I would guess that the leaders would have wanted to prevail upon him, to prevail upon Israel. But from the reports we got, they seem to have prevailed upon him only about the tariffs. Anyway, that footage will be just running for you in a minute. I wanted to ask you, what have you made of this new West Asia problem? Is that disturbing any of your macros growth or inflation? I mean, crude is at 74. We probably didn't expect that.
Yeah, so the forecast that we have built in for our macro numbers are around $65 a barrel. So if it settles at 75, and settling is important from a macro perspective instead of just a spike, if it settles at 75, clearly the macros will be slightly worse. But remember, the direct pass-through happens on the current account side and consequently on growth. The starting point of current account is very comfortable. So you're starting with our forecast at 0.7 to 0.8% of GDP. $10 increase would mean around 35 to 40 basis points increase. Even at early 1.1% of GDP or so, the current account would seem eminently controllable. On the inflation side, frankly, we haven't really had much pass-through of either oil price fall or increase in terms of pump prices over the last couple of years, 3 years. And the government, through the fiscal and the quasi-fiscal, which is the OMCs, have absorbed this shock. We expect that to continue even if oil price rises to 75. Slightly more stress on the fiscal, but at 75, it should be still manageable.
Okay, but would the geopolitics disturb other factors, like, a further slowdown in global growth? Because you guys were the first to bring down Asian growth rather drastically after the April 2nd terrible reciprocal tariffs, justifiably so. I'm just asking you if West Asia has made you all change any of the global macros, and if the world slows, will it impact us?
So undoubtedly, if the world slows, it will impact us through the external balances channel. We haven't made any forecast changes yet, still early days. One thing that we found in our analysis over the past month from the trade uncertainty is that it has a significant impact on Indian investment cycles. So the external uncertainty impact on Indian corporate investment cycle or private capex investment cycle is pretty significant. As the uncertainty stays elevated, first due to tariffs and now due to what is happening in West Asia, that is going to have an impact undoubtedly on the corporate capex.
I thought you all have upped your calendar GDP, right, by 20 basis. Have you done anything to your FY26 GDP? You all were at what, 6.3?
Our fiscal year number remains unchanged. Our calendar year number has been raised to 6.6. That's mainly because we got surprised on the upside in terms of Q1 calendar year or Q4 fiscal year 25 growth. Again, the GVA was in line with what we were thinking. The GDP surprise is not something that we expected. But overall, I just want to make the point that we are feeling more positive about growth. We think that we are moving towards a more positive growth inflation balance. A lot of that will actually play out in our view in FY27 or calendar 26. You're already in the middle of the calendar year 2025. You've had a material amount of monetary easing. Fiscal is not as tight as it was last year as the government wasn't spending. That spending is coming through. So all the domestic levers of policy are getting more loose this year than last year. With a lag, we think that growth will be better in FY27. So we are at 6.7 for the fiscal year 27.
Okay. 6.7 for FY27. But for the current year, FY26, you are at?
We are at 6.2.
Okay, so you're lower over there. I spoke to a lot of bankers after the monetary policy, which has, given or ensured liquidity even in the second half. First half, obviously, we could see the liquidity with the RBI dividend. It should continue. But they have promised even in the second half. Even then, bankers tell us they don't see demand. Money is there. There isn't so much demand. Any such worries, or do you think that this super liquidity will solve the growth problem?
Well, rates and liquidity to the matter, to the extent that it impacts the overnight rates is only a price signal. It's not really a quantity. Our central bank doesn't really go out and say that lend X amount of money to Y. So the RBI is still trying to treat it through the price channel. Look, again, there are some mixes going on within the overall growth. consumer is looking better in our view. The bottom end consumer, especially given a strong rural cycle, food inflation lower, should provide a real income boost. There's a bit of fiscal transfer you're seeing already over the last year or so at the subnational or the state government level. All of that is looking good for the bottom end consumer. The top end consumer was doing okay. The capex part is where it is more sector specific rather than broad based. Look, we are again not building in a very strong recovery in credit demand, but what will happen is that possibly you'll bottom out at the current rate of growth of credit in this quarter next, and head higher in the second half of the fiscal year.
Yeah. Okay, hopefully. Shantanu, I wanted to ask you about the governor's interview to the Business Standard today. Are you getting a sense there can be one more rate cut? He said if inflation surprises below our forecast.
Look, again, our inflation forecast for the second half of the calendar year, which means that the next quarter and the quarter after, is averaging 3.5%. We are at 3.4 and 3.6. I think the key in terms of monetary policy easing is the forward-looking inflation. So let's say you're considering a rate action in either the August or the October meeting. So let's say you're in the October meeting, the 1 quarter ahead inflation number is looking somewhere in the region of 4 to 4.5%. If growth is okay at that point of time, the question that the RBI will be asking is that do we really need to cut 25 more at that stage or not? If growth slows down, so that's our point, that if growth slows down by the time you get into the October-December quarter, undoubtedly there's a rate cut.
There's a chance. Okay.
Two, more importantly, there's an exogenous element here. Let's say China oversupply leads to regional deflation, especially in core goods inflation, and therefore you start seeing the core inflation turning in the back half of the year. Absolutely, that opens up room again for the RBI to ease rates. On the basis of food inflation being low, our sense is that you're seeing really the best of this.
Yeah.
Vegetable prices can go down only so much, and we know the nature of perishables inflation. It's highly volatile.
Yeah, fair enough. We have to watch out for the Chinese engendered deflation. But today we had the steel secretary, and they have built a lot of defenses against ultra-cheap Chinese goods coming in. So let's wait and see how things pan out of there. Shantanu, what is your sense, I mean, either from the press conference or from what he has told Business Standard, about how RBI will keep the overnight rate? At the moment, the overnight rate is a good 25 basis below the repo rate. Do you think they will continue to keep it there because inflation is going to read like, 2.5 and 2.7, even as far back as October, it may read very low. It may read at 3%. So do you think they'll keep liquidity very loose, in the sense no VRRs and the call rate is at 5/4?
Again, our view is that in a rate cutting cycle to aid transmission, liquidity surplus, and keeping the overnight at least below the repo, if not at SDF, is going to aid transmission. It's going to be the best for transmission. If you see the bond curve in India, it has actually backed up higher pretty much across segments. Whether you see the 2-year point, 5-year point, 10-year point has backed up higher post the policy meeting. Even swaps are higher. Now, the back-end swaps we would have expected to be higher because you're basically calling the end of the rate cut cycle with the neutral starts. But short end, we would not have really expected to move. So we would have thought that the curve would steepen. There was some steepening, but then the short end also moved higher. That is because the market is probably interpreting a little bit of conflicting signal in terms of liquidity. Our sense still is that liquidity will remain benign till the end of the year and the overnight will remain below the repo. If not 25 basis points, at least in the region of 15 to 25, somewhere in that region, below the repo for the foreseeable future. Also remember that the CRR cut gives you that clarity on liquidity at the back half of the year.
That's right. Yes, I too got the impression that even if there is an occasional VRRR, the Reserve Bank wants to keep the call rate, closer to the SDF, as long as the transmission is in the early stage. As it moves up, if there are signs of aggregate demand or asset bubble, he even referred to that in the Business Standard interview, then maybe he'll change his mind. Finally, rupee. I mean, it's not even a story now because it's moving in some kind of a range. But now, do you see rupee appreciation, given what you say about, the trade, the current account deficit not being high?
Yeah, because you said rupee in a range, I'll just point out that the volatility in the rupee is higher now than what it was
quite crazy.
months back. So the way we look at it is, when you look at the interest rate or the carry to arrested for the vol, rupee was screening as the highest amongst emerging market peers 6 months back, including Latin America and CEMEA currencies. Today it is slightly lower. But to the rupee question in terms of dollar rupee, our view is we have a house view of a weaker dollar. That's not very different from consensus right now. But our view is that the rupee will not really appreciate materially because of the short forward book that the RBI is running. Our sense is that whatever flows that the RBI accrues will be used to knock off some of the forwards and get it down to a point which is relatively more manageable, is what we think will happen at least till the end of the year. So over a 3 to 6 month horizon, our appreciation in the rupee is very little. We have about 84.5 in terms of our forecast. It is only on the 6 month horizon where you can see a move closer to 83.5 or so. Again, remember, our CNY view is that we move towards 7. So even as the rest of the Asian currencies appreciate, we think that the rupee will appreciate, but by a lesser amount, mainly because of the short forward position.
Okay. Thank you very much, Shantanu. Out of time, but I'm going to take a rain check from you literally because I saw that excellent report of yours where Goldman Sachs and Shantanu are arguing that we have a huge tailwind with women entering the workforce. So a Womenomics interview sometime later. Thank you very much for joining us. Well, that's it on Bazaar. Chartbusters coming up.
Shares of Vishal Megamart fall nearly 3.5%, have recovered from lows after the large trade when 91 crore shares worth nearly 10,500 crore rupees change hands in a block deal. Promoter entity Samayat Services is the likely seller.
Zee Entertainment gains as the board approves a fundraise, with promoters set to invest 2,200 crore rupees via the issue of fully convertible warrants on a preferential basis.
Shares of Godrej Properties, they rise marginally after they buy nearly 16 acres of land in Pune to develop premium housing and high street retail with a potential revenue of 3,100 crore rupees.
Schneider Electric gains after Goldman Sachs upgrades the stock to a buy rating from a sell rating. The target price they fixed at 910 rupees, with growing total addressable market and government support expected to be the driver of growth.
Axis Cades Technologies up 5% in the upper circuit as the company has inked an agreement with Europe's Indra to jointly develop defense and aerospace solutions.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and the markets, well, a little bit lower the headline index. The good news, though, today is from the broader markets, yet again, we are seeing a bit of an outperformance. So the mid-cap index is up 0.2%, and you still have more number of stocks advancing than declining. I think, Mangalam, we're still in this band, the 600-point band on the Nifty. We'll require a trigger to move either which direction, but otherwise, the headline index, as has been the case for the last 45 days, continues to consolidate.
Continues to consolidate, Nigel. What's interesting is that in the headline index, the three large components that we have, the banks, the IT index, and Reliance, they've taken turns to move in different directions. So right now, as we speak, the banks have recovered a tad from the lows. They're just below the flat line. So just keep an eye out on that. The IT index has moved to the high point of trade. So with all of this working for the frontline index, what is not working? Reliance. That was the top contributor on the way up in yesterday's trading session, but now has moved to the low point of trade. So we'll keep an eye out on that one. So the frontline index yesterday was supported by Reliance. Today, the Nifty bank is not falling as much. The IT index has moved higher, but Reliance has moved to the low point of trade. So where it goes from here is something that we'll most definitely keep an eye out on. In fact, we're not the experts. We do have Shilpa Rath from Prabhudas Leerathar joining in for a quick technical check on the market. Shilpa, the Nifty back in the range. We thought there would be a breakout post the RBI policy, but no, that doesn't seem to be the case.
Good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the indices setup, we do see there's some sort of exertion at around 25,000 mark that is acting as a good resistance for now. But the support also is very well placed at around 24,800 to 700 band. So definitely there's no trade for Nifty right now. We have to wait. At least there should be some sort of dip towards 24,800, then you should go long. Otherwise, a breach and decisive sustenance above 25,000 will only trigger some sort of upside rally. Talking about Bank Nifty again, the same scenario. We see that 56,000, 56,200 is acting as a resistance band again, and the support is very strong at 55,000. So this range for Bank Nifty, I believe, is going to stay for a while now, and any decisive breach on either side will only trigger some sort of rally on either of the side.
All right, and individual stocks, what do you have on your list, Shilpa?
Today we see that stocks are outperforming the indices. So I have two buys. The first one would be a buy in RVNL. RVNL is trading around 410, so it is approaching some sort of range breakout here. If you see, once a move above 412 or something, you will see a very strong up move towards 425 to 430. So keep a stop loss of 400 and stay long in RVNL. The other one would be a buy in CAMS. CAMS, again, it's showing outrightly, strong potential for upside rally towards 4,500 zones. So from here, I believe that one can stay long and keep a stop loss at around 4170 and look for targets of 4,400 to 4,500 band.
Okay, all right. Thanks a lot for that, Shilpa. Well, CNBC TV18 Access is a premium and membership-based service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and masterclasses, and curated lifestyle benefits as well, designed for an immersive and enriching experience. It empowers members with premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influence. Yours to claim. Become a member. Log on to cnbc-tv18.com/access/plans.
Difficult.
Welcome back. The Nifty Bank has moved into the green just from below the flat line, and that's because of Axis Bank and some recovery from the lows on HDFC Bank. That one's still in the red, HDFC Bank, but has recovered from the lows. And look at the IT stocks. They're zooming right now. The IT index, we have Infosys, which has moved higher. And those are some visuals that we're getting from Donald Trump, who's left the G7 summit early due to rising West Asia tensions. So any sort of updates coming in on there would be extremely crucial. All eyes on the Israel-Iran talks and what the America role would be out here itself. So those are some visuals of Donald Trump coming out of the plane. Now, we'll keep an eye on the market once again. We were speaking about the IT stocks, so the IT index comes up for you on the screen. We'll keep an eye out on a bunch of these mid-cap IT names as well. Donald Trump walking towards, let's see whether there are some press reporters out there. Is he going to address the media, or is he likely to give a bite or not? But for now, those are just some visuals of him emerging from the plane. Persistent Systems, higher. Biocon, higher. Biocon, in fact, the QIP opened yesterday, 4,500 crore QIP. That stock's moved to the high point of trade. And we are seeing an uptick in Dixon Tech as well. The management joined us earlier today, said that export target for this year is closer to 8 to 9,000 crores versus 1,800 crores that we had seen earlier. So that stock too spiking. But the stock on our radar is SJS Enterprises. The company operates in value-added aesthetics space. The company delivered double-digit revenue growth and strong cash flow generation in the fourth quarter, looking to outperform the industry going ahead as well. Sanjay Thapar, who's the group CEO and executive director, joins in now. Thanks a lot, Mr. Thapar, for joining in. You know, the obvious question, over the last couple of years, you've seen a big jump in your revenue. 433 crores in FY23 turned into 760 crores in FY25. What's your prognosis in terms of revenue growth for FY26 and beyond? And the margins as well. While, your revenue has grown, your margins have stayed between that 24 to 26% band. Where does that number go to?
So what we've been guiding the market is that we've outperformed the underlying industry each quarter for the past 22 quarters that we've been listed. So we will continue to outperform the industry in this year as well. Our guidance really is that we'll be 2x of the industry rate of growth for the financial year 26. In terms of margins, we've been fairly steady. So last year we recorded 26.4% EBITDA margins, and we expanded margins, in fact, by 1.29%. So we continue to see very strong traction. with our customers across markets, including India and exports, and we are quite bullish.
All right. Hi, Mr. Thapar. Good morning and welcome to the show. This is Nigel on this side. I'm looking at a brokerage report coming in from Elara, and they are quite bullish on your company. They are talking about, from the last year that you've done around 760 crores. They believe by FY28, your revenues will be in the vicinity of around 1,250 crores. Do you think it's possible?
Yes, it is. So we see we continue winning very large businesses, both in India and overseas.
Okay.
And we have, as I said earlier, very bullish. We've set for ourselves a set of products that are unique, and that gives us a lot of traction for growth.
So 1,250 crores of revenues with mid-20s margins, correct?
Yes, we've been fairly consistent at the margin delivery for a company.
Okay. All right, let's focus on your kit value then. If I look at your kit value, currently majority of your business comes in from two-wheelers, but you'll have gradually been focusing on PVs as well. And now there the kit value itself is 3 to 5 times what you have in two-wheelers. Could you tell us how do you see your revenue mix shape up? A note states that from around 17% of total revenue contribution from PVs, they're expecting it to go to more than 35%. Do you concur? And how can you improve on the kit value in each of your segment, the consumer durables, two-wheelers, as well as PVs? Please go ahead, sir.
Just a fact check. So we are already, last year we finished with the 40% revenues from the... So we very successfully pivoted the company. Traditionally, it used to be a two-wheeler focused company, but no longer. So two-wheelers are just about 34-35% of our sales.
Okay.
Passenger vehicles are 40%. As you know, passenger vehicles, there's a large product mix that we are in a position to supply to, both for the interiors of the car and the exteriors. So basically, there are many much great opportunities lying ahead of us.
All right. Yeah, Mr. Thapar, apologies for that. Actually, I was referring to the way you'll have moved from 2021 to 2025. So that's why the error in that calculation, 17 to around 35-40%. Got that. The kit value, sir, that's something that you'll have improved on as well. If I look at the same duration, 2021, two-wheelers were between 300 to 500. Now it's 600 to 1,000. PVs were around 1,500. Now it's at around 3,500. So for each of these segments, how do you see the kit value increase?
So what we have done is we've added some very high value added products, especially with the acquisition of a company called Walterpack from Walterpack, Spain. That brings in our portfolio a very large set of products, that is IML products for the interior of the car. A car could use roughly from 1,000 rupees to a 5,000 rupee IML component in a car. So traditionally, we used to supply just about 80 rupees in FY19, that increased to about 350 rupees in 21. Then we acquired a chrome plating company, Exotech Plus, it's now called SCS Decoplast, which added about another 1,500 rupees to the kit value. With Walterpack, we added another 4,500 to the kit value. And now we are looking at entering in this area of optical glass, which is the center track display that you have, which will again very significantly add to the kit value. So what we are looking at really is potentially a 10,000 rupee kit value for a passenger vehicle. And there are large markets for this, both in India and the overseas markets.
By when does this 10,000 rupee come?
I mean, we don't supply all the products to all the models. These typically go on the high-end cars. But as we've seen, the trend towards premiumization is that more and more of these high-end products find their way to the mid-segment and ultimately to the entry-level vehicles as well. So driving the theme of premiumization. So it would, I guess, take time, but it's anybody's guess as to when this will come. But directionally, we are on the right path.
Right. That's very interesting because I remember the last time you joined us, you did indicate that you are likely to see a higher share of revenue coming in from these premium products, chrome included, and new gen products, which earlier were sub 15% of your sales, have now moved to closer to 30% of sales as well. I wanted your thoughts on client additions and market share, because on the one hand, you can increase your revenue by increasing the kit value and the offerings that you make. The second hand, your revenue increases by the number of models that you supply to or the number of companies that you tie up with as well. On that front, what is the kind of guidance that you can give us? What are the new models that you're looking at for both two-wheelers and four-wheelers? How long do these contracts last, and what will the value of each of these contracts be going forward?
The four-wheeler contracts are long duration, so they're roughly about 7 to 8 years lifetime. For the two-wheeler products, there's a model change that happens after 1.5 years. So coming back to the customer addition, so we've done some very notable customer acquisitions in the recent past 6 months. So we've added Hero MotoCorp as a customer, a mainline customer that opens up doors of great revenue growth in the domestic market. On the export markets, we've acquired a global business from Stellantis across geographies. So we will supply to India, Europe, North America, Latin America. And this is for the first time that we will have complete ownership of the branding of the vehicle. When I say branding, it means that the nameplates that go on the vehicle, all of them will come from SGS. So I think great progress. And what's heartening to note is that we did not win this because of lower cost, but of new technology that we introduced. So I think that's a reason to be, I think, for the team to be proud of.
Yes.
We hope to replicate this with other OEMs globally.
Well, kudos, sir. Kudos, in terms of that explanation as well that you've given us. Now, we have a number that's on the screen, and you were saying that Stellantis, and I think among other, international customers as well, you have, I think, Whirlpool among others. Could you give us a couple of details? I think currently your export contribution is around 7.5%. But the street believes that in the next 3 years, it can go to around 13 to 15%. Do you think that is possible? And also, if you could tell us, the order size, the RFQ of export orders, how does it differ from the domestic order?
So, I mean, the route is the same. You need to give tech shows, you need to give proposals of how you can add aesthetic appeal to vehicles, and the OEMs evaluate you, pretty much what happens in India. The recent order that we won from Stellantis is a 300 crore lifetime revenue business to be delivered over the next 7 to 8 years. So that's a good starting point for our export journey. And as I said, this is just tip of the iceberg. So we have good reputation with global OEMs, and we hope to continue this foreign exports even more aggressively. And yes, by FY28, 13 to 15% of our top line should come from exports. That is our endeavor.
All right. So 13 to 15% comes in from exports by FY28. Out of curiosity, who are your competitors in this space? Because it is a niche business, and I'm sure that a lot more other players would be eyeing something like this as well. What is your moat and market share against them?
Okay, so if I talk of the domestic market, I think we are very strongly placed. Overall, I would say that there is no competitor that I know of, either in India or globally, which has all the technologies that we have under one roof. So we are largely, it's a fragmented market. So there's a chrome plating player, he just does chrome plating. Whereas when a customer comes to us for a decoration part, chrome plating is on his mind, but we can offer him a menu card of options at different price points. And that is the key differentiator between us and competition. So as I said, there's not a single company in India or even overseas that I know of, which has about 14 different technologies that we offer to the customer. So we are quite unique in that space. And the differentiation lines from the trust that we've been able to build in customers, both domestically and export-wise. Our supply chains are very robust, both on the supply side and the purchasing from our suppliers.
Right. Okay. What other large companies do you not supply to, which can become potential game changers for you? You said you recently signed a deal with Hero MotoCorp. I'm sure, in the four-wheeler space and in the two-wheeler space, there are some other large players as well who you don't supply to. Are there any other big client wins that we can expect?
In India, virtually, we have everybody who's in the top 7, 8 companies in that industry. We already are supplying to them. But that doesn't mean that we supply to all their models. So we are, of course, hungry for more business, and there'll be more models that will come our way. We present a compelling value proposition to the customer. That our focus is.
All right. Final question, Mr. Thapar, before we let you go. You're sitting on cash of around 100 crores. Is that correct?
That's right.
And I think your capex for the year is around 160 crores, which you will fund via internal accruals, right?
That's right. We generate close to about 80% of EBITDA gets converted to cash flow from operations. So
got it. So that brings me to my question then with regard to inorganic growth. You've done it in the past. eye on the prowl yet again. I believe that some inorganic plans are being stated out, and that could get closed in this fiscal. Would that be correct?
Maybe next year. So we keep gunpowder dry. We are not in a hurry to complete an acquisition, but at the right valuation. And primarily the acquisition would be to improve market access. So
it'll be in the overseas market. Is that correct?
Sorry?
Will it be in the overseas market?
In the overseas market, but it's not that we have shut our eyes to the domestic market. If there are good opportunities at good values, which can add value to our company, why not? But
and what space will this be, and what size of acquisition are you looking at?
You're looking at bite-sized acquisitions. We don't believe in taking huge amount of debts. We are a debt-free company, and we continue to do that. So maybe a top line in the region of about 400, 500 crores is what the size of the acquisition is at the moment. But again, depends on the price that we get it at.
That would be a large bite.
Not such a large bite.
Your annual revenue is 760 crores. You're looking at a company which does 450 odd crores. So that is obviously, you increasing your revenue by nearly 50-60% immediately. Even if you look at 1 year forward, it's an increase of nearly 35-40% immediately.
And you are trading, sir, on a sales basis. You're doing 750 crores of sales, and your market cap is already around 4,000 crores. So if you're looking at a 400 crore, a company that has 400 crores of sales, will it be on a similar valuation basis, or will you be willing to pay less, maybe twice sales or 3 times sales or 1 time sales?
No, so the industry that we operate in operates on the margins that this company generates. So as you are aware, we are a high margin company. We would look at we are looking at companies where we could add value to improve margins. We've done that successfully with the acquisitions we've done in the past. So our rule book is very clear as to what is the side of company that we are looking at and what is the profile of the company. So we don't want to do a turnaround business. We will see where synergies can play. We can expand margins in that acquired company.
Okay. All right. Got it, sir. Maybe for the next discussion, we'll probe you a little bit more in terms of this inorganic growth. But thanks a lot for joining in and detailing the roadmap for the next 3 years or so.
All right, that's about SJS Enterprises. But while that conversation was going on, there is a comment that has come in from Donald Trump. You saw visuals of him walking across. He said, my leaving G7 summit for Washington certainly has nothing to do with a ceasefire. So this means that there is no ceasefire in sight. Whether the market takes that, takes note of that or ignores it, believing that there may be a change in the next few hours on this position itself or not, is something we'll have to monitor. But again, it's the flip-flop that continues. Him saying that my leaving G7 summit for Washington certainly has nothing to do with the ceasefire. So one wonders what it has something to do with.
He's saying it's much bigger than that. Whether purposely or not, Emmanuel gets it wrong yet again, is what he says. So let's see what's bigger than this. But for the time being, that's the statement that's coming in. I'll tell you what, slip into a short break, come back, continue to focus on markets. We'll find out what's the latest with regard to President Trump as well. Welcome back. Well, as we speak, the markets actually have come off a little bit from the top, particularly the broader markets that were sitting with healthy gains. Now those crisscross lines have got a little bit closer to each other. So you still have 1,350 stocks that are advancing, but the number of stocks declining have gradually moved to around the 1,200 odd mark. On that note, though, we'll wrap up on this edition of Chartbusters, with news that the Nifty is a little bit lower. The Nifty Bank as well, protecting crucial technical levels, but lower by around 150 points. The team of Trading Hour is waiting for you on the other side.
Good morning. You're watching us here on Trading Hour. We are coming to live from the CNBC-TV18 Motilal Oswal studios. I am Hormus Fatakia. With me is Vinny Motiwala. And the top of the hour has begun with a very important clarification from the US President that he's headed back to Washington not because of a ceasefire, but something much more than that. What is that much more? We'll find out soon enough. But for now, the markets are on the edge. Not just the Indian markets, but global equities across the board are currently on the edge. The Nifty is currently down 75 points near that 24,870 mark. The Dow futures too are down around about 160 to 170 points as we speak. So currently more clarity awaited on these developing situations in West Asia. There is no significant movement in gold prices, no significant movement in Brent as well. Still remaining around that $74 a barrel mark is Brent crude. But the broader markets, the mid-cap index, as you just saw a few seconds earlier on top of our screens, was the only index that was in the green as of now, the mid-cap index. But because of the Nifty Bank, the Nifty 2 and the Nifty mid-cap index has almost given up all of its gains, Vinny. So still a little bit choppy. Of course, the Sensex weekly expiry as well today. So we need to count that in as well.
Absolutely, we need to count that as well in today's trading session. And apart from that mid-cap space, you know, mid-cap yesterday was a different story. We were talking about mid-cap only being in the red, everyone else being in the green. Today seems like mid-cap is managing to just hold on to some bit of a gain. Let's watch out for where it's going to be headed in the next few hours as well. But we have Nifty IT. That's managing to hold on to gain today as well. 0.6% of gain approximately is what we're seeing in terms of the IT sector coming in. Yesterday also it managed to hold on to some bit of a green there. Today also Nifty IT manages to hold on to that green. Pharma on the flip side is seeing among the top sectoral losers, it's seeing a decline of almost 1% as well in today's trading session. So that is something to watch out for. A lot of individual names, on the broader end of the market. So yes, gains coming in from something like an Happiest Mind, Mascow Dock, CRISIL managing to hold on to gains, while on the flip side, Shipping Corporation of India, that's down and out in trade. We have Jubilant and Gravia, that's also seeing a bit of a fall, as well as Vishal Mega Mart also seeing a fall in today's trading session. But talking about individual stocks, we have Z Entertainment, that's in focus as well. There's a lot of update that's coming from the management front as well. The promoters maybe, will increase the stake. So for the update on this, what's happening there, we have Vamakshi joining in with us for that. Vamakshi.
Well, Vinny, the board has gone ahead and approved issuance of close to 17 crore fully convertible warrants to promoter group entities. The issue price per warrant stands at 132 rupees, which when compared to the closing price yesterday is coming in at a discount of almost 4.5%. Keep in mind that the promoters are looking to infuse somewhere around 2,240 odd crores and their shareholding post this issue is expected to rise from 4% currently to around 18.39%. This in turn shows the kind of intent that the promoter has. They will have more skin in the game, so therefore is a positive development. Now keep in mind that Motilal Oswal says that they believe the promoters' funding was largely driven by the recovery of dues of the SL group. Around 600 crore was recovered recently. Keep in mind that this could also lead to some bit of equity dilution. Assuming all of the existing as well as the new warrants that will be issued get converted into equity, it could result in as much as 15% equity dilution. As far as the cash position of the company is concerned, keep in mind 25% of the issue price is expected to be paid upfront. Therefore, the company will receive 560 odd crores, taking the total cash balance to almost 2,965 crores on an immediate basis. But there are some key concerns with respect to this. Of course, in the broader sense, it is a positive development, but was the equity dilution needed is the question that the investors will be asking, because keep in mind that last year they had already given a nod to raise almost 2,000 crores via FCCBs, and only the first tranche of 200 crores had been withdrawn so far, and they've broadly stated how they want to use the funds, but more clarity on the quantum of fund utilization, especially capital allocation, is extremely important. So that will be something that investors will be watching out for.
Interesting developments there, Ramakshi. Thanks a lot for that. The promoters doing every bit to remain in, to increase their stake in the company, now standing at 18% after yesterday's board meeting. Z Entertainment 2.5% higher, 15% higher so far on a year-to-date basis after pretty much a washout year that 2024 was for them. It's some other brokerage notes that have come in on Schneider Electric, and that is our standout brokerage of the day. And Nimesh is here with more on this. A double upgrade, Nimesh.
Yes, sir. So the stock is reacting on the back of a double upgrade from Goldman Sachs and Schneider. So they've upgraded the stock to a buy from sell, and they've raised the target price to 910. Now, there are four key drivers for this upgrade according to the Goldman Sachs note. First and foremost, the increased TAM, which Goldman believes that it can go up to almost $14.5 billion by FY32 versus the current $9.6 billion. And also the market share for Schneider is likely to go up in the same period to almost 3.5% from current 2.9%. So that's the first big trigger. The second big trigger is the further expansion in the margins. So Goldman expects the margins to go up to almost 40% by FY32 versus the current margins of 38.5%. So that's going to improve the earnings as well. Third, the valuation is likely to catch up versus the peers like Hitachi on the back of this large order TAM as well as margin expansion. And fourth, the government support will mean additional revenue drivers for companies like Schneider. In fact, Goldman is expecting a 31% order inflow CAGR between FY25 to FY27 estimate. So on the back of a large TAM, a margin expansion, a double upgrade on Schneider to a buy now from Goldman Sachs, and they've raised the target price to 910.
Absolutely, Nimesh. Thank you so much for that. Schneider Electric in focus today and buzzing in trade as well. But let's move on and talk about MGL. These shares are in focus today as well. Why? There's a note that is coming from Nomura where they're returning the buy call and says it's their top pick. More details for this one. We have Riya joining in with us.
That's right, Vinny. Nomura today has come out with a note on city gas companies, and they're the most bullish on MGL out of the three stocks that they've outlined. So let's see what they've said. They've said that the falling APM gas allocation is a near-term challenge, but is manageable through price hikes. And they've also said that EV policies by states are going to continue pressuring CNG growth going ahead. They've also outlined that the inclusion of gas under GST could benefit Gujarat Gas the most, but they do prefer MGL as their top pick, and Gujarat Gas is the least preferred because of high competitive intensity in the industrial segment. For MGL, they have a buy rating with a target price of rupees 1,680. The stock is up over 2% today as a result of this. The other two names, IGL and Gujarat Gas, they have a neutral rating and a reduced rating respectively on these two, and they're trading flat in today's trading session.
Okay, Riya, thank you so much for that. So we're keeping an eye out on MGL. But the next stock that we should put the radar on is going to be Tanla Platforms. Why? They've approved a share buyback of around 175 crore rupees. 20 lakh shares is what they're looking to buy back. And this is around 1.49% stake of the total equity that is there. The cash on the books as on FY25, not a worry there. 1,009 rupees is what they had. 1,009 crore rupees, I beg your pardon. That is what they held in terms of cash on books as on FY25. Price is something that is interesting, right? Yesterday, the closing price was 675, around also right now, 684. So, the price at which they're buying back is much higher than the price at which, the stock is trading at. And that is why, Hurmas, we're seeing that the stock is buzzing in trade. As of now, also managing to hold on to gains of almost 4% in today's trading session. But yes, that's Tanla Platforms for you all, managing to hold on to gains. On that note, we're going to sip into a very short break. And after the break, we'll come back and discuss what's happening in the world of commodities with Manisha Gupta.
Welcome back. Still 70 points lower on the index. Just before we move to Manisha, there's one stock that I wanted to highlight, and that is Sterlite Tech. Another 15% higher today after a 20% move yesterday and another 11% move last week as well. So good going for Sterlite Tech. We'll have the management joining in shortly on the show, so stay tuned for that conversation. 51% higher in the last month. But on to commodities now, and we are putting the spotlight on copper today. Good morning, Manisha.
Morning. Yes, we're doing that because we've seen copper prices continue to hold firm, and in the overnight markets we've seen copper gain up by 1.5%. It actually is the case with many of these metals which are trading in a positive side right now. The inventories on LME have continued to decline, and that really is one of the supportive factors there. When you look at the month of May, it is a 5th straight month that you have seen combined LME metal inventories decline 4.5% on a month-on-month basis, and we also have seen inventories decline by 25% on an year-on-year basis. Well, 3 or 4 factors which are supportive. One, you have seen that constant decline in the dollar index. Second is the China May retail sales numbers came in better than what the street was anticipating. And then the IEA report reiterating that the copper supply demand will see a gap or a mismatch of almost 30% by the time we are into 2035. The support also continues, and that shows in case of numbers as well. When you look at the last 3 months in sense of copper, as in sense of prices, we have been trading between that 92 to 9700 mark. So clearly, even with the kind of data, slowdown concerns, weak numbers that we've seen come in from US have not impacted the copper prices as much because there are supply concerns. Also, when you look at the averages as compared to last year, where the copper averaged at around $9,000 a ton, we're looking at an average currently at around $9,400 a ton. So the copper, we have seen constant gains coming for the markets. And if you look at Citi, Bank of America report, they suggest that $10,000 is what you could be looking at copper in this year, and a 12,000 of an all-time high is forecasted for the next year.
Interesting developments there. Manisha, thanks a lot for that update on copper, and we'll keep an eye out on that as well. But just before we take that short break, CNBC-TV18 Access is a premium membership-based service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. The membership includes access to CNBC-TV18's flagship events, interaction with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Now, designed for an immersive and enriching experience, it empowers members with premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influence is yours to claim. You can become a member by logging on to CNBC-TV18.com/access/plans.
Welcome back to Trading Hour on CNBC TV18. Let's bring on board Mitesh Thakkar, who's joining with us to now give us a check on the markets on the technical front. Mitesh, good afternoon. So many updates that are coming in on the global front as well, commentary coming in from Trump as well, levels that we should keep an eye out on, right? After the morning dip, the Nifty has managed to be around the 24,800 to 900 range, not moving up or down below that range. So what should you watch out for today, as well as your top stocks today?
So, my understanding is that broadly the index will be in range of 25,050 to about 24,500, which is where we were a few weeks back. And therefore, yesterday we were kind of near the upper end of the range. We got a high of, today morning we got a high of around 24,980, which is close to about 25,000, 25,050 levels. So back into that range, not much directional bias is very clearly visible on the index. So from a trading point of view, I think either try to buy near the lower end and sell near the upper end, but when in middle of the range, I think I would avoid it.
What about specific stocks, Mitesh?
Yeah, I have a buy on Maruti. Keep a stop just below levels of today's low, which is about 12,470, just below that, and look for a target of around 12,800 or thereabouts. The other one is Cyient. I think that's something which is interesting. It's just giving just on the verge of giving a breakout. I think the actual levels around 1350 odd zone. So once it gets past 1350, buy with the stop at 1325 for a target of 1400.
Any other stocks? Sterlite Tech, Mitesh, another 15% today, is up 50% in the last 4 sessions. On the 11th of June, the stock was at 77. Today is at 115. What about Sterlite Tech?
Sterlite, I think, if you look at the charts, I actually, sorry, I don't have a very clear view. I thought I was tracking the stock nicely, but I'm not able to do that.
All right, Mitesh, thank you so much for sparing time and joining us today with your views on the index and specific stocks as well. 18% higher now is Sterlite Tech, continuing to build on to those gains after another 20% up move in yesterday's trading session. We take a short break here on Trading Hour. Prateek Parekh, the equity strategist at the Nuvama Group, will join us on the other side for taking the market conversation forward. Stay tuned.
You have stood up and stood by many of India's dreamers.
I became a magnet for entrepreneurs. So there's one man who will hold our hand and take us all the way.
So what is the art of deal making?
So whenever the deal maker wants to become too big, well, I'm God, okay, you say this and you say that, kind of attitude, not literally, but I've seen that. What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regret.
What is holding us back?
Promote and protect the good. Prevent and punish the bad. We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a new story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But oh, हम एक scene दिखाते हैं, फिर we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back to Trading Hour on CNBC TV18. Today, we did manage to speak to actually the Steel Secretary. We spoke to Sandeep Pondrik, Secretary of Ministry of Steel, on the steps that government is taking to protect the industry, India's consumption trends for the next 10 years, and about the turnaround in RINL. Listen in to what he had to say.
There are like 2-3 kind of imports, as I said earlier. One is where the particular steel is not available inter-country, some specialty steels grades. So that's all right because those are not available. Second is based on lower price or dumping. That what the government has tried to discourage by imposing safeguard duty. I think that we have controlled to a large extent now. Based on the 2 months data of April and May, the total steel imports are much lower as compared to what they were in the last year. And if this trajectory continues, I think the steel imports will be about 50% lower than last year. So for now, RINL till now has been a success. I would put that in the success category till now. In September, it was on the verge of closure. Now in May, they are running 2 blast furnaces above 100%. They have become cash positive for last 3-4 months. About the merger or any other thing, for now it is that the government decision is to keep RINL as a going concern. So there is no proposal merger with the sale or any other thing for now on the table. We are the only major economy who is clocking double-digit growth, and as you know that last 3 years we have been clocking about 12% growth. So that's nowhere else in the world when the world steel growth is much lower, about 0.5%, 1%. So India is a bright spot in the steel consumption scenario. If you see in this particular year, 24-25, we increased by 7 kgs. We were 97, we approached about 104. My opinion is that in 2030 or so, so that's about 6 years from now, 5-6 years from now, we should be somewhere around 155, 160. And by 2035, we should be around world average of about 200 plus.
Well, time to take a short break here on Trading Hour, but just before we do that, here is some good news for our viewers. Introducing CNBC TV18's all-new app, where you get instant breaking news, financial world updates and in-depth articles right at your fingertips. You can download the app from the Apple Store or even the Google Play Store, or even scan the QR code that comes up on your screen to get that app on your phone. Take a short break, back on the other side. Welcome back on to Market Conversations. Then Prateek Parekh from Nuvama Group is joining us now to discuss his top ideas. Prateek, good morning. Thank you for joining in. You know, it's been a whole host of bad news across the globe, be it on the tariff front, be it on the geopolitical front. The markets are in the world of their own. They're neither here, they're neither there. They're still not going higher, but not falling either. They're still respecting those levels. What are they pricing in, to be very honest? Of course, this geopolitical tension will not last forever. Sooner or later, it will be resolved. Is there a hope that the Q1 earnings season that starts in just a couple of weeks from now will be a lot better than what FY25 was? And is that what the market is currently pricing in?
Yeah, thanks so much for having me on the show. It's always a pleasure to be on the show. I think if you look at markets, generally three things that drive markets. One is cheap valuations. Sometimes, that itself becomes a trigger. Second is liquidity, and third is earnings growth. I think among the three variables, what is keeping market afloat despite all the global uncertainty is liquidity. Liquidity has meaningfully improved from where we were, 6-12 months back. RBI's LAF surplus is now more than 1% of an ETL, which is very significant improvement. And that is one of the main drivers which has calmed the market and stabilized the same. I think when it comes to earnings, the visibility is still missing because in F25, earnings growth has reconciled with top line growth, which is in single digits. And the gap between earnings and top line is likely to be minimal going ahead as well. And on the top line front, unfortunately, the outlook is not very great because you're having a scenario where exports and credit growth both are weakening. And in such a scenario, it's very difficult for top line to see meaningful acceleration. So I think we are having a scenario where liquidity easing protects your downside, but high valuations and kind of moderating earnings, cap the upside. So perhaps we're probably poised for range bound for some more time, is what I would say.
Okay, so range bound, and this is the range we'll keep expecting, because today I was just talking to Urmas as well, and I'm like, why is it not falling? Why is it just being resilient? But liquidity is a factor that you're mentioning that, is keeping the markets at least falling further down. But earnings growth and valuation missing on that front is something that is capping it on the top side. But valuation's expensive. So is there any pocket that you find some bit of a respite at least coming in? You have that monsoon data that's coming in as well. Expected that July, August would be better. This is what we spoke to SkyMed today. So could we see consumption as a theme start improving, or agri as a theme? What are you watching out for right now?
Yeah. So again, thanks for the question. So I think, on monsoon, people play, I think, overemphasis to it. Monsoon comes every year. 3 out of 4 years is likely to be good. Monsoon was good last year as well, but I think consumption barely picked up. The main stumbling block for consumption is, the overall income dynamics, where, corporates are pruning costs, curtailing capex, government is focused on fiscal consolidation, and export outlook is weak. This is a combination which is not giving sufficient incomes to households to go and aggressively spend. The main constraint is incomes and also credit slowdown that happened last year. So I think if monsoon improves, can some portion of agri get a relief? Probably. But is it going to be a very big needle mover? I highly doubt it. I think with regards to valuations, that is where, finding the next space is becoming a little challenging. Today, the pocket of valuation are entirely on the financial space, which is, private banks, which despite the rally are still reasonably valued, and also some of the NBFCs. But barring that, to find value comfort in either consumption space or the industrial space, I think that is missing. So that's where I feel that while financials have value, the growth outlook is weakening, although liquidity easing should help. But clear-cut sector space, where we can see a big demand spot coming through, that is somewhat missing right now.
So where are those sectors where there is a clear demand spurt visible? Is there a sector like that, be it the industrials in terms of their order books, or the power sector companies, or be it the defense or the railways? Is there any such pocket that you are currently betting on, Prateek?
Yeah, so I think our approach to portfolio construction has become more of, what you call bottoms up. And our main point or while portfolio construction is that on the demand side, at least from a next 6 to 12 month perspective, it's not, things are clouded everywhere. Although from a 3-5 year perspective, we are still optimistic on demand revival coming through, consumption and capex improving. But from a next 6 to 12 month perspective, there is little differentiate from a particular demand center. Where I think the portfolio construction or the earnings swings or the alpha will come is essentially on the margins part. We have a set of companies where margins are at the bottom cycle. For example, chemicals, metals, cement, some of the QSR names. And there are a set of companies where margins are at the peak. Essentially, in a scenario where demand is weakening everywhere, those at the peak margins will probably find it difficult to even maintain operating leverage and sustain them. And those at the bottom margins, there I think the earnings disappointment risk could potentially be lower because companies can cut cost and ensure that the operating deleverage risk is reduced. So I think from a next 6 to 12 month perspective, from a portfolio construction, margins swings will be a more important driver of alpha than necessarily the top line swings per se, Mars.
Prateek, what about IT, right? It had seen that fall come again last year. Now, seems like it's picking up pace. So don't you think that this is where maybe we could see value or enter into this one? Like Sterlite Tech recently got that order as well, and we have seen it run up 50% as well. So, what's your thought on IT?
Yeah. So I think, these days market cycles have become very short. I mean, post-COVID itself, cycles have been short, but now of late the cycles have become even shorter. So I think on IT, our view is on a marginal underweight side, and the rationale for that is that there is global uncertainty. Valuations today are above, meaningfully above their long-term averages, while growth is already below long-term averages, and the outlook as well on the growth part isn't very promising. So from that perspective, if I look at purely from a valuation and growth angle, IT isn't very exciting per se. Also in this sector, while margins are at the lower end, what we have seen in the past is that margins have been moving, sliding lower only. So the scope for margin expansion also is somewhat limited. And that's why, from an overall sector perspective, within the sector, there can be a few bottoms up ideas. But from an overall sector perspective, IT is not still looking very promising, is what I would argue.
Right. Prateek, there has been a lot of debate about the auto sector currently. Now, there has been a deal that has been signed between the US and the UK, but that will, of course, limit the tariffs to 10% from UK exports, and which is okay for a company like Jaguar Land Rover, which exported exactly 1 lakh cars in 2024 to the US. But in the sector as a whole in this country is facing a bit of a double whammy of sorts, right? There is domestic demand that is lacking. You already have exports that are struggling, if not okay or stable. And now there is a conversation that the excise or the GST on luxury cars could be hiked further. Now, what does that do to a sector like auto, which is already struggling? That adds to more trouble. Do you see this becoming possibly a structural issue for the sector as a whole, or only select pockets could be hit because of this?
Yeah. Again, good question, Humas. I think clearly from an auto sector perspective, as you rightly mentioned, it is undergoing challenges. Challenges are because the incomes are weak, so only within auto as well, the growth has been very very skewed towards the premium end. The growth hasn't been broad-based in the first place itself, and even on the premium end, if we are going to get regulatory actions, then obviously it is a sign of hurry. So I think from an auto sector as well, I think the challenges are what we have in other sectors, where demand is moderating. There are concerns coming up both on the regulation part, but more importantly on the margins part, given the supply potential, some rise in steel prices, and also some of the supply disruptions that can potentially come out from the rare earth supply in China. So this is a sector that is going to go challenge. Now, is it going to be structural? I don't think so. We have seen the sector go through many cycles and many challenges, and it has bounced back. The penetration levels, especially of PVs in India, are still quite low, and that certainly means that they do have a long runway. But yes, in the near term, this is a sector where, again, things could get challenging, especially given the fact that their margins are also at the peak, which obviously can lead to operating deleverage as well.
Okay, Prateek, thank you so much for joining in with us on the show, as well as talking to us about the markets and which are the sectors that you're looking out for. But on that note, slip into a break. And after the break, we'll be joined by Ankit Agarwal, Managing Director of Sterlite Technologies, to talk to us about the outlook of the company and the recent order wins. Welcome back to Trading Hour on CNBC TV18. Now we have the management of Sterlite Tech joining in with us, Ankit Agarwal, MD of the company, to talk to us about that big order win, which has led to such a run-up in the stock in just a week, 50% uptick, 5 days trading session. Ankit, good morning. Thank you so much for joining in with us. And, this order that has come in is your demerged arm, right, who's going to be getting this order, 2,631 crore. This is for with BSNL that you're talking about. So I just want to understand what is the role that Sterlite Tech will have in this? What is the revenue recognition that comes in for Sterlite Tech? And this order is like 3-year construction phase, 10-year maintenance phase. So which part of this will be actually with Sterlite Tech and which one will be with the demerged entity? Okay. I think we've snapped the line with Ankit. We'll reconnect with him. But Ormas, this is a very interesting order, right? Like we were just mentioning, we marked it a couple of times, 50% uptick. This is actually for its demerged arm. They're going to be demerging the arm. So this is Global Services Businesses, which has signed the MOU. And this is a 2,631 crore, which is with BSNL. Mainly, they're going to be focusing a lot on designing, construction, installation. And this is going to be in BharatNet's middle network, which is in Jammu and Kashmir. So that's the main focus area. Ankit, morning, can you hear me? And, we're talking about the BSNL, the agreement that you have with BSNL, 2,631 crore, a big one there. I want to understand Sterlite Tech's part in this deal that is there, because right now your demerged arm has signed this deal. So what is the revenue that comes in for Sterlite Tech, and how long will it be, Sterlite Tech will be a part of it? Because there's a 3-year construction contract and then a 10-year maintenance contract. Good morning.
Yeah, good morning. Thank you for having me on the show. Absolutely, this is a very important win for us. This is the second time we are going to be building a network. Previously, we had built a 10,000 kilometer network in Jammu Kashmir for the Indian Army as part of the Network for Spectrum project. And we are very, very proud to be building now this network, which goes across every village in Jammu Kashmir and provides high-speed broadband connectivity. So this is a project which we'll build out, as you mentioned, for 3 years of construction and then 10 years of maintenance. So it's a long-term commitment to the region and will have a massive impact into the development and growth of Jammu Kashmir. This is a project which will be undertaken by Sterlite Networks Limited under the brand name Invenia. And we also have a partner in Dilip Buildcon who will be looking at the EPC part and the deployment part of this project. In terms of Sterlite Technologies Limited, which is this listed entity currently, they will be supplying the optic fiber cables and other components, optic fiber cables and connectivity solutions for this part of the project in Jammu Kashmir, as well as other bids get successfully awarded. We will also be supplying our cable and connectivity solutions to other projects as part of BharatNet Phase 3.
Okay, Ankit, then what would be the revenue for STL recognition, revenue recognition for STL over the next 3 years then from this project?
Yeah, so typically, in such projects, the optic fiber cable components are typically 5 to 7% of 5 to 10% maximum of the overall project, and on the capex side. So I think this is an important part. I think one part to highlight is that the Indian market itself, for part of that, the BharatNet Phase 3 project will be an important growth driver. As we are seeing that both telecom operators are looking to add fiber for 5G networks as well as fixed wireless, we're also seeing more and more fiber for data center. And then now with this BharatNet Phase 3, both at center-led as well as upcoming state-led projects, there should be meaningful growth in Indian demand as well.
Ankit, good morning. Thank you for joining in. So if I heard you correctly, 5 to 10% max of project capex cost will be as a revenue recognition for your company, right? Not for the demerged entity that has signed the order?
That's correct.
Right. And how about throughout the project life cycle, since it is a 3-year phase and then it is an operations and maintenance contract as well, does that continue in a similar trajectory?
Yeah, there's some smaller amount of fiber optics that goes in typically for repair and maintenance, but majority of the usage or consumption of the optic fiber cable is upfront, especially in the first 2 to 3 years. And this is across not just this project in Jammu Kashmir, but we will be actively supplying a good portion of cables and connectivity for other projects, other bids across the BharatNet Phase 3.
And will this be margin accretive or margin dilutive, Ankit?
No, this will be margin accretive. This will be positive for our growth. As we've been highlighting that overall, currently we've been operating around 50% factory utilization. So we have significant operational leverage as we look to fill up our facilities with growth, particularly in the US, Europe, and also with these kind of projects in India. We do expect that our utilization to go upwards of 70%. And there we have typically seen that our EBITDA margins will go from current 13 to 15% range to close to 18 to 20% range. So we are in that journey now over the next 2 to 3 quarters. And that's something that we're very excited about.
Sorry, this 18% range will be by when in terms of EBITDA margin? Just for a clarification.
Yeah, I think directionally we believe this will be towards the end of the year, and will be healthy for us to exit in that range. I think the whole thought process is that we keep looking at the markets, whether it's on the optic fiber cable for enterprise, 5G, and more for data center segment. And I'm proud to share that just recently we have just launched our entire data center portfolio stack.
Absolutely.
The first Indian company to have launched this. And we're very, very excited to take the solutions for India, but also globally.
So how are you seeing that growth? That was my next question, right? This came in just yesterday. Your data centers, AI infrastructure market is what you're looking at. Next 2-3 years, what is it in terms of revenue for the company? How much is the incremental revenue we could watch out for now?
Yeah, absolutely. This is something just to give you a sense, as you move into more Gen AI kind of based data centers, you need 10 to 15 times more optic fiber inside a data center. So this is a kind of massive requirements. Today, we believe maybe 5 to 6% of the optic fiber demand comes from data center requirements. That's probably going to go towards 20 to 25% in the next few years. So pretty significant requirement. These are very specialized, niche, and high technology requirements. And typically, they are bought as a complete solution of cable and connectivity together. So this is something that our teams have been working on diligently for more than a year. And now we're very proud to have launched this. Overall, our ambition is that 25% of our company revenue should come from enterprise plus data center. I think probably that will take us, a year or 2 years to get there. But this is a very important milestone for us. We have our own IP. We have our own technology partnerships. And we hope to make very strong inroads into the data center segment, both in India as well as globally.
You know, Ankit, I want to understand, because now the government is also talking about that push coming in for public sector telecom adoption. Could we expect more such, partnerships with like BSNL or something on that sort, or more network development? As well as in terms of the division of work, will it still go to STL networks or will it be with Sterlite Tech, such deals?
Yeah, so just to be clear, the whole objective of the demerger and now subsequent listing of Sterlite Networks is to have two very distinct entities. One is a hardcore high-tech manufacturing entity, which is Sterlite Technologies Limited. And then you have the services and system integration business, which is Sterlite Networks Limited. So these are the two entities, and very intentionally we have separated them. And we're very, very confident that both entities will scale up with time to come. Definitely, there will be areas where on arm's length, the two entities could look to do work together, where possibly the Sterlite Networks Limited could take up some projects and their Sterlite Technologies could support with its products.
Very quickly, Ankit, clubbing two questions into one. You mentioned a quarter of your revenue should come from the enterprise and data center businesses over the next couple of years. What does that do to your overall top line growth for this year and for the next, if you have a projection there? And by when does the demerged entity list on the bourses? Because you had mentioned earlier that it should happen by June or July this year. We're already into the mid of June. When does that happen?
Yeah, absolutely. So I think the whole thought process is, we do see top line growth, but more importantly, this is, as I said, a specialized and niche segment in terms of very high technology solutions. So what we are really driving is how do we have high EBITDA margins from the data center segment. Typically, we see from our peers who operate in the segment of at least 27 to 35% kind of EBITDA margins. So this is what we are looking at for what we sell into this segment. To your second question, in terms of how we're looking at the listing, I would say broadly we're about 30 to 45 days from now. So we do still target to do this within July.
Very diplomatic answer on the first one. Ankit still did not give us a number. We'd hold you to that though. But thank you so much for sparing time and joining us today. Look forward to chatting with you again pretty soon after your quarterly results. The management there of Sterlite Tech, possibly the stock of the week so far. Well, 50% higher in the last 4 sessions, now another 14.5% in today's session. Slightly off the highs of the day though. But the management is confident that the demerged entity should list in another 30 to 45 days from now. By the way, just flashes on your screen, the consortium led by Dinesh Chandra, Agarwal Infocom and Siemens has won a 4,100 crore contract. We'll keep that on our radar. Siemens currently 2.5% higher, just so flash on your screen. But with that, we call time on this edition of a Trading Hour from Winnie, me and the team that put this show together. Thank you so much for watching. We leave you with the Nifty still 75 points lower. Halftime report on the other side.
The escalation of conflict between Israel and Iran keeps stocks skittish even as there is no disruption in trade so far. Realty and IT notch gains while healthcare and autos drag.
Biocon launches a 4,500 crore QIP to raise funds to pay down debt of Biocon Biologicals and buy convertible debentures from investors in the biologics arm.
Vishal Megamart, where the promoters have offloaded nearly 20% via a block deal worth almost 10,000 crores, bringing their stake down to near 55%. Private investors and promoters Kedara and partners PE rake in the moolah.
Zee Entertainment has proposed the issue of nearly 17 crore warrants to promoters at a price of around 132 rupees per share. The warrants, once converted within 18 months, will up the promoter stake to over 18% from 4% now.
US President Donald Trump bid G7 leaders an early adieu to head home as tensions between Israel and Iran escalated. Earlier, Trump had asked people to vacate Tehran, sparking reports of a likely US intervention.
A very good afternoon. You're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be definitely a sluggish session for us. We have the Nifty, which is down around 80 odd points, the Bank Nifty, which is down around 192 odd points, and the mid-cap index, which is down around 0.3%. Overall, the mood of the market is definitely cautious. We're tracking what's taking place geopolitically at this point in time, and that seems to be top of mind. Yesterday, we did see a reversal in terms of the sentiment for trade in the second half, with the advanced decline ratio ending in the positive terrain. As of now, we have the advances which are lagging behind the declines. Let's see whether there's any kind of respite as we go along. But overall, the mood is definitely cautious at this point.
The mood is cautious. In fact, it turned all the more cautious after that Donald Trump comment that came in saying that maybe he hasn't left G7 because of, trying to
because of
smoke,
a ceasefire.
because of a ceasefire or make them smoke the peace pipe. That's not happening. So the street believes that there could be some more escalation, and as a result of which, we are seeing that decline. The Nifty is down about 81 points. What's interesting, however, is that there is a three-way battle for the Nifty, which is the Nifty Bank, the IT index, and Reliance. Yesterday, we had Reliance that supported the cause of the frontline index. Today, the Nifty Bank has moved to the low point of trade, and we have the IT index, which has moved higher. And look at Reliance. That is giving up nearly all of its gains from yesterday, currently lower. So it is Nifty Bank and Reliance, which is pressurizing the frontline index, whereas IT is supporting it. All in all, we have the index which is still stuck in that pre-RBI policy range of 24,500, 24,600 to close to around 25,100 itself. The broader markets in focus, 1,500 stocks which are declining. But healthcare stocks are the ones which are declining in today's trading session, and we have one of the managements with us.
Yes, absolutely. Well, let's talk to Granules. Granules India is the first management on the show. Q4 FY25 revenue was impacted by price erosion. Their R&D spend has risen in FY25, and the company is probably going to increase R&D expenditure going forward. We have with us Priyanka Chigurupati, who is the executive director of the company, joining in to discuss the business going forward. Priyanka, hi, welcome to the show and good to see you on air. Just wanted to start by talking to you about, the Q4 which has gone by. It was a quarter which was slow in terms of the revenue, which was up only around 2%. You were impacted by price erosion, demand issues in the API segment as well as the PFI segment. And you also had that warning letter on one of your Indian facilities. Give us a sense in terms of what Q1 is looking like and what is the outlook for FY26?
Well, good afternoon, Ekta and Mangalam. I think just to start off with the first part of your question, Q4 was a little bit muted, but if you look at the overall numbers, I still think we did rather well despite the situation that we went through. If you look at the overall margin portfolio, our top line stayed a little bit, actually it grew 10%, and more importantly, our bottom line, which is more important, grew almost 24%. So I think we did rather well despite the entire scenario. Now, in terms of the situation we have on hand, I think we'll take another 1 or 2 quarters to clear the warning letter, hopefully, and back soon after that, everything will be back on track. So Q1, again, we are still focusing on remediation activities, which will happen in Q2 and Q3 as well. And post that, we should be full running up to 100% capacity. Well, up there. I wouldn't say 100%, but up there.
Right. But if you could, give us a sense, currently we're in this VUCA world. We have a fair amount of uncertainty. There's higher crude prices. There's geopolitical tensions across West Asia. How is that likely to impact the API or PFI prices? Is there anything that you're seeing on the ground right now?
Well, right now, I just think it's a demand supply issue, at least for the products that we're in. And the products that we're doing really well on, it's primarily a demand issue. So we're actually supplying everything we can, and we have more demand than we can supply. So we're actually doing pretty well. The only product where we're facing a little bit of headwinds is paracetamol API. That's because of oversupply in the market today. And going forward, I see that easing because we're doing a lot of business development activities to focus more on value-added para products.
So how much have paracetamol prices, API prices been depressed, say, as compared to a year ago? And what is your outlook in terms of prices?
Well, if you ask me overall, I can't really put a number to it because it depends. If there's APIs, PFIs, and finished dosages, and then it's also very region dependent. But I would say that there has been a decline. But there's also now people coming up with the issue of steady supplies. That's coming back more aggressively than ever because there have been some entrants into the business claiming that they can supply, but they're not able to. So I see an opportunity for us going forward.
Okay, so you are seeing some opportunity in terms of paracetamol API prices probably stabilizing. Yes. Just wanted your sense in terms of how you're playing the GLP-1 opportunity. You've bought this Swiss CDMO company, Sensex Chemicals, in April. That's going to give you, a foray into the peptide segment. GLP-1 is going off patent. Semaglutide is going off patent in emerging markets as well as India. Tell us, how are you capitalizing on it?
Like you said, the GLP-1 market is massive and is projected to reach, if I'm not mistaken, about 150 billion USD by 2030. The US continues to be a major market for the peptides. But if you take a step back and just look at the reason we acquired Sen Chemicals, we wanted to leverage Sen's strength in the CDMO space. They already have some business with some innovator companies. So it was a company that we acquired for the technology. And of course, it has some revenue already in place. Now, apart from our entry in a small way into CDMO, we are going to be focusing on some GLP-1s. We're working on a couple of APIs right now, and also some finished dosages through some partnerships. And we'll see how that goes through. Once we see some headway in there, we'll certainly keep you posted.
Right. You've spoken about, 1 or 2 quarters of remediation for Gagillapur. Just wanted a little more on, is there a possible re-inspection that happens out there? There are some drug approvals which are pending as well. And how are you looking at growth X of Gagillapur?
Growth X of Gagillapur, first of all, let me just reiterate something. Gagillapur is functioning fully. Whatever reduction in quantity that we have done has been very intentional to focus on remediation activities. So we hope that in the next 1 or 2 quarters, we have a correspondence or dialogue with the FDA. And I would believe that they will come back for a re-inspection, which we will be fully ready for.
By when do you expect that?
Well, it depends, right? I can't put an exact date to it, but we're hoping by end of this year or latest by Q4 fiscal, we should be.
No, I'm asking from this in the sense that when exactly does your remediation get completed, and hence, you can assume maybe a quarter or 2 from then on.
See, remediation, we are in the, I would say, last phase of remediation. So I think in a quarter or about 4 to 5 months from now, we should be done and post that. But we are continuously sending correspondences. We're sending our updates to the FDA, and the FDA can come in whenever they want to, but we expect them to come later half of this year. And by the end of this year or Q4 fiscal, we hope to have everything.
Right. So let's look at it from the other angle then. Gagillapur, ex-Gagillapur, growth continues the way it is. Once the remediation happens, what's the incremental revenue that you see from that?
Well, first things first, we have about 11 launches just in the US that are still pending. And all of them are beautiful launches. So personally, I'm waiting for that to happen. So we are already gearing up for those launches. So as soon as we receive approval, boom, we'll hit the market. In addition to that, like I said, right now we took a little bit of a reduction in overall production just to focus on remediation. So incremental to the launches will be the volumes that we actually can manufacture at peak capacity. Then outside of Gagillapur, we also have GLS, the Genome Valley facility, which has already been commissioned. for some products in the US, primarily monograph products. We're also expecting the FDA and other EU authorities and other regulatory bodies to come and audit that site over the next couple of months. And so we'll see incremental business coming from GLS as well.
Okay, so that's what I wanted to ask. You have 2 plants in the US?
Yes, we have 1 packaging facility and 1 manufacturing facility.
All right. So any kind of transfers that you're doing from the Gagillapur plant to, say, the US facilities simply because it meets the onshoring criteria, as well as the fact that, it'll mitigate the risk?
Well, the US facility has always been built for small volume, high value products. So any site, forget just our site, most sites, let me preface that, most sites in the US will not be extremely cost competitive when it comes to, say, an Indian facility or anything, say, a Chinese facility. So we are to mitigate risk, just in case, but the most important products for us. So we have done it. We have some BCS plans in place. We already have some tech transfers done, but the possibility of launching them from there, except for certain segments of the US B2C business, are very minimal.
Okay, I just wanted to ask you about the CapEx plan as well, because you do have CapEx plan for your peptides. You have debt of around 700 crores on your books. If you, how exactly are you planning to fund that CapEx? How much is it going to be in terms of the peptide opportunity? And what does that do to your balance sheet?
Well, if you look at the overall net debt, it has been going down pretty well, even from last quarter to this quarter. Now, in terms of the overall CapEx for FY26, we have about 600 crores planned. I'm not saying everything is for Sen as of now. We have about 200-ish crores still that we have to pay for Sen. But apart from that, as of now, we're still gearing up on the commercialization of Sen, which we'll announce once we have that concrete. But apart from that, our CapEx for this year is essentially for every other expansion that we're doing, including some onco APIs and onco FDs, because we had, like I mentioned, or in our earlier call, we are focusing heavily on oncology. We filed 2 products and we have about 11 in the pipeline. So we need some capacities already. We're already envisioning some lack of capacities once we launch them into the market.
So this implies that FY26 will be a year of, you building on the capacities and you getting your ducks in the line, and thereafter FY27 onwards is where we can see growth accelerate. So to that extent, could you give us a guidance for what kind of revenue growth can we foresee? Margins around 21% in FY25, do they sustain at these levels? And thereafter, FY27, FY28, what's the kind of vision that you have?
Let's just say for now, margins will sustain, but we obviously are planning, are strategizing, and are working towards improving the margins for sure.
That's the margin picture. What about the revenue? Because last 2 years, they were stable at around that 4,500 crore mark. This year as well, what's the growth projection? And the year after that, once you hit full throttle?
I'm not saying that revenue is not going to be a focus, but I would say margins will be more of a focus because of the kind of products and kind of business that we're trying to do right now. If you look at the segments that we're present in, earlier it was more backward integrated, high volume commodity products. Now we're doing really well in ADHD space, which we're expanding a few products globally. Then we're doing oncology and then peptides. So it'll be both, of course. It'll be revenue and margin accretive, but I would focus more on margins.
Okay, just a quick last question. In terms of your pipeline for oncology products, how many are you probably looking to launch in FY26 in the US?
FY26, nothing. We're just doing some small API business, but our first oncology business or product will be launched in FY28. FY27 possibly depending on some patent situations in the rest of the world. But in FY28 will be the first US launch.
All right, Priyanka, we're going to leave it on that note. It's been a pleasure. Thanks very much for joining in and speaking with us. So that is the management of Granules giving us a good picture in terms of what we can expect for FY26. They do expect capex of around 600 odd crores. And they have been reducing their net debt, which currently stands at around 700 odd crores. They will be focusing on margins as compared to revenue growth. And they are looking at probably resolving the US FTA issues in the next couple of quarters on one of their Indian plants. We'll take a short break, but coming up, we'll focus on a lot more stocks and news on the other side. Stay tuned. Welcome back. You're still tuned into Halftime Report. Well, we do have a lot of stocks in focus, so let's concentrate on that. We have Vamakshi as well as Vivek joining in to discuss what they are tracking today. Well, Vamakshi, let's start with you. Z Entertainment is in focus as the promoters will be investing around 2,237 crores in the company. Tell us more.
Well, Ekta, the board has gone ahead and approved issuance of around 17 crore fully convertible warrants to promoter group entities. The issue price per warrant is at 132 rupees, and when we compare it to the closing price yesterday, it's coming in at a discount of almost 4.5%. The promoters are looking to invest 2,237 crores, and with that, their shareholding post this issue is expected to rise to 18.39% as compared to 4% currently. This in turn shows the kind of intent the promoters have instilled confidence in the mind of the retail shareholders as well. So therefore, it's a positive development. But Motilal Oswal says that they believe the promoter funding is largely being driven by recovery of dues of SL Group, which is estimated to be somewhere around 600 crores. Now, given, assuming that all warrants get converted into equity, we expect to see around 15% equity dilution. But the cash position of the company is quite strong, 25% of the issue price, if it is paid upfront, the company could almost receive 560 odd crores, which would then take their cash position to almost 2,965 crores on an immediate basis. So therefore, there are some questions that do arise in the mind of investors. Why was the equity dilution needed then, given that they have a very strong cash position, as well as the board back in July 2024 gave a nod to raise almost 2,000 crores via FCCBs, out of which only the first tranche was drawn, which was somewhere around 200 crores. The second is that they have given a broad strategy on how they would like to use this money, which includes strengthening financial foundation, fortifying core business segments, as well as exploring high growth and value accretive opportunities. But there has been no specific capital allocation plan. So the street will be also watching out for any specific developments or comments, especially on capital allocation.
Take that point entirely, Vamakshi. Thanks a lot for that. So that's about Z. We'll keep an eye out on developments beyond the headline that has come in, the fact that promoters have put in some money. But, is there more plan to this than just this is something that we'll most definitely watch out for. While Vamakshi was speaking, there was, news coming in on DLF, where sources tell us that their premium project, Privana, has sold out. They've generated sales worth nearly 11 to 12,000 crores within a week of their launch. 1,164 units implies that the average unit sale was close to around 10 crores. So you have 10 crore rupee worth flats selling out in a week, and 1,100 of them. That generates 11 to 12,000 crores of sales. That's about DLF. The real estate pack has been doing well lately. DLF just a smidge in the green on the back of that, maybe because the street wasn't surprised by the kind of response that there is to this project. But Vishal Megamart is the other stock listed only in December, where the promoters raised about 8,000 crores via their offer for sale. But now they've gone ahead and sold another 10,000 crore worth paper. Vivek joins in with more. Vivek.
Well, that's right. It's fundraising, especially via the block deal window. Like you mentioned, they took the IPO route to go ahead and garner close to 8,000 crores. That was via the OFS route. Remember, the promoter entity is actually an investment vehicle that is run by Partners Group as well as Kedara Capital. The promoter entity is Samayat Services. And today, last evening, we understood that close to 10% of equity was expected to change hands. Given the good demand, the investment banking team actually went ahead and upsized the particular deal to close to 20% of the total equity. So today, in the trading hours, you actually saw close to 19.8% of equity change hands, helping the promoter entity garner over 10,400 crores, via this particular transaction that has taken place. At the end of FY25, that particular entity, Samayat Services, held over 74.5% stake. So at the end of today's block deal, it will be interesting to see who are the buyers. They'll continue to hold a little over 54% stake, and that's why all eyes will be on. Interestingly, yesterday was the day in which the lock-in window for the pre-IPO investment actually ended.
Okay, all right, Vivek. Thanks very much for that. We'll take a short break, but Sachitanand Utikar of Trade Bills will join in with some trading calls on the other side. Stay tuned.
Welcome back. It's 100 points lower for the Nifty right now. We have the IT index, which is doing extremely well. So just take a look at the Nifty Bank. That's the one which is actually dragging the index right now, down almost 250 points. And what is it that is taking it lower? We have ICICI Bank, Kotak Mahindra Bank, Axis Bank, all of them which have moved to the low point of trade. So the Nifty Bank is actually broken below the 20-day moving average. So that's something we'll most definitely watch out for. This, even as the IT index is up around 1%. And market breadth has weakened. You know, we started with way more stocks advancing than the number of stocks which are declining. And now the difference has completely reversed. We have around 1,500 stocks which are in the red for about 1,000 stocks which are in the green. That tells you a couple of things. One, the Nifty has been facing supply closer to that 25,000 mark. So yesterday's high and today's high have been very close, perilously close to the 25,000 mark. And there has also been a sharp fall in pharmaceutical stocks over the last 20 minutes or so. And it's been notable. Aurobindo Pharma, Lupin, Granules, you look at, Sun Pharma, Cipla, all of them are lower. What this has done is that with the Nifty Bank and the pharmaceutical stocks lower, a lot of call writers are back in action. So we have the 25,000 call, which is seeing writing for about 50 rupees. We have the 24,900 call, that too has seen a fair amount of writing for 84 rupees, telling you that levels closer to today's high and a little above 25,000 will continue to face supply in our market. However, will there be support in the very near future? Well, at 24,900 put, there is 125 rupees of premium. 24,850 put as well. There is a premium of close to around, the 24,850 put should come up for you. That's the one which has some premium on it as well, 100 rupees. So 24,750 to 24,900 is where support is. 24,750 to 24,800 is where the support is. Right now, as we speak, the Nifty is just above the 20-day moving average. The Nifty Bank has broken below that. So it's an important level to watch. A lot of long positions are added on Mazagon Dock. So that is one stock which is outperforming in an otherwise wobbly market. And stocks like CDSL and Manappuram. Remember, 9 stocks are in F&O ban. These two are the ones which are likely to exit F&O ban, if not today, then perhaps in the next couple of days. So I'll keep an eye out on that one.
Okay, all right, Mangalam. Thanks very much for that. Sachidanand Uttikar joins in to discuss the technicals of the market now. Sachidanand, welcome to the show. Well, it's definitely turning out to be a weak session for us. We seem to be on tenterhooks based on what's taking place on the geopolitical front. So in that context, what would your approach be to today's trade?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, if you look at both the indices, Nifty Bank is one shade, a week. Clearly, if you look at the weekly charts, there's a dark cloud cover kind of formation, which is awaiting a confirmation for its activation. But if you look at the overall range, 56,000 remains a very strong hurdle where its 5-day exponential moving average is placed. Unless we don't see the Nifty Bank closing above the same, there could be a possibility of further a decline going forward. But on the other hand, Nifty IT has been, doing phenomenally well. It has, started trending above its 200-day exponential moving average from last week itself. And if you look at the overall structure, it looks like a strong bullish flag formation breakout, which is still indicating that there could be a 1,200 points rally on the upside. So I think for the Nifty, it's a good sign, and the supports which are placed at around 24,700, 24,500, I think these supports will remain valid. And on the higher side, as Mangalam rightly said, 25,000 remains an immediate hurdle. So probably we may see some more range-bound action here. 24,800, 24,770 can be an ideal zone wherein some long positions can be deployed on a decline. The stop loss can be placed at 24,710 on a closing basis. And in a day or so, we may see again a rebound towards 25,000 levels. So I think the bias for Nifty remains positive. But when we look at the Nifty Bank, we still see there could be some supply pressure, which may push the index lower towards 55,000.
So then how do you play in individual stocks? Do you have a long and a short as well to hedge, or both longs?
Both longs, Mangalam. I think the bias for the market is still positive. So if you look at the contributors here from the IT pack, TCS has again given a very strong rebound. It has maintained its closing above its 200 monthly exponential moving average support, which is placed somewhere close to on 3480. If you look at the call writing, put writing data, it is indicating that 3,500 looks like a very strong, dependable support. Even if you look at the weekly RSI, it has managed to give a breakout above its previous swing high. So I think this is a good structure wherein there could be an extension of this particular move. Hence, we are recommending building long positions in TCS, keeping a stop loss at 34.85 on a closing basis. Immediately, we may see an impact towards 35.80. But eventually we see this move unfolding toward 37.10. So a long call on TCS. The other pocket of strength is insurance stocks. And here, if you look at HDFC Life, we have already seen a V-shaped recovery in the last 3 trading sessions. It has maintained its support well at around 740, where its 50-day exponential moving average support is placed. From there, it has displayed a V-shaped recovery. If you look at the weekly charts, it looks like a rising 3 continuation pattern. So we are expecting that this move may extend eventually towards 810. And that's why we are recommending building fresh long positions here on a decline up to 770, keeping a stop loss at 758 for a pattern target somewhere close to around 810.
Okay, all right, Satyananand, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies and stocks. Well, we do have a couple of losers which are extending losses. Sun Pharma is now down around 2.2%. It has been the top loser on the Nifty today, and it's extended its losses. It's now down around 12.6% this year. Divi's Labs is down around 1.7%. Cipla also down around 1.5%, close to 1.5% at this point. So you are seeing weakness coming in to a couple of these pharmaceuticals and healthcare stocks. Apollo Hospitals down around 1.2% as well. We'll take a short break. Manisha Gupta joins in next with Kunal Shah of Nirmal Bang.
Welcome back. Joining us now is Kunal Shah from Nirmal Bang. Kunal, hi, welcome. Thank you for joining us. What's your sense really with the kind of big swings that we are seeing for many of these commodities? And I want to start with gold because we almost did 34.65 or thereabouts, and we're trading at around 33.85 right now. So from the highs of yesterday, we are down by nearly $80.
Yeah, Manisha, every time there is a peace talk and ceasefire kind of, or even a smallest news is coming and gold is immediately going down. So gold is not moving up on its own weight. It's only moving up because of the uncertainty arising from the geopolitical front. So the moment we see a mildest of the de-escalation in Israel and Iran, you will see gold immediately going down. I strongly foresee gold may not be able to move above $3,500 on COMEX, and in India above 1,02,000. I don't see gold going up immediately above those levels. So my view is it's a time to take profit in gold. I'm not saying that it cannot move up. It can move up, but logically this is the right time to book profit.
Kunal, Aziz said that perhaps with the geopolitics going on, it may be a $10 premium in case of crude oil prices at where it trades. How much of a war premium or geopolitical premium would you say is gold carrying right now?
I think gold is having at least $100 of premium with the current prices. So if the geopolitical premium waits out, I think gold can go down by another $100.
What's your sense? I mean, as you said, there could be a profit taking coming in. How down under do you see gold prices then going?
Any ceasefire, and I think gold will go down to the levels of 33.50 or perhaps 3300.
For the silver prices, though, Kunal, we've seen some consolidation happen for a very long time now. Anywhere between 34 to 36 is how it seems to be trading at this point in time. What is your sense? Is silver a better bet, or with the gold prices expected to take or go down in profit taking, silver could follow suit?
Generally, silver follows gold, but I believe this time, in particular this year, silver's fundamentals are extremely bullish, and whatever price spike we saw, and after that prices are not showing any major movement. But I think prices are consolidating, and the likely move would be possibly a big upside, another big upside from here. So silver, I'm pretty optimistic as compared to gold. I don't see silver as a precious metal. I see that commodity as a proxy to industrial metals, EV, and all other stories. So silver's fundamental outlook is very bright, and one should buy the dips.
How are you also looking at the copper prices? Because we've seen some strength come into for that one. The dollar index is slightly on the weaker side. The Chinese retail sales data came in better than Street was expecting, and that has led to some supported metals, especially copper.
Copper, I'm bullish. There is a major supply side issue going on in Chile as far as the concentrated market is concerned. I've been speaking this for quite some time. In spite of China's economic activity have been contracting, we are seeing copper prices holding steadily above 760 rupees. So we are not seeing copper going down. I think the possibility for copper to move up is very high, considering the overall demand-supply scenario, especially the supply scenario, and that makes me believe that copper can test $10,000 in next 3 to 4 months' time.
Kunal, also, what's your sense on crude prices now? $8 of a swing in the markets yesterday, and we're looking at prices holding firm even right now.
I think oil, if you look at any blockage of Suez Canal, that can lead to $5 to $8 spike. Any major oil field getting affected in Iran can lead to a price spike. So there are a lot of ifs and buts, and I cannot tell you that you just buy. So I think I would believe that right now any decline to 6,000 rupees would be a buying opportunity, considering the kind of environment we are. Even if your stop loss gets hit, the right trading strategy, considering the geopolitical event in crude, would be buy.
And also your sense on the dollar index right now, because that also seems to be quite choppy at this point in time, given the fact that we've seen Bank of Japan come out with its central bank monetary policy announcement today. But we have the US Fed that comes in on Wednesday. You also have Swiss National Bank, China, Bank of England, all of those central bank meetings also happening within this week itself. Which one are you watching and what are you expecting?
I think the possibility of rate cut in US is very low, in spite of Mr. Trump has been insisting Jerome Powell to cut the rate. But I don't think so that's going to take place. And with oil prices again back above $72 for the Brent, I don't think so cutting interest rate would serve the purpose. As far as US-China trade war is concerned, that is going to be inflationary. 50% tariff on China and 10% US is going to pay. But that proportion, that is going to be very expensive. And I believe that considering everything, the trend in the US debt is definitely on the lower side. US dollar is heading towards 95 first and 90. So expecting a 10% cut in next. And the pace of de-dollarization is picking up further. So I think the fundamentals are not very positive for the dollar index.
Okay, all right, Manisha as well as Kunal, thanks very much for joining in and giving us all of that perspective. Well, we did have some statements which came in from Donald Trump which you need to be tracking, and that is from CBS, where he said he wants a quote-unquote real end to Iran's nuclear program, and they will be monitoring the Israel-Iran situation from the Situation Room in the morning, and they will decide when he gets back to DC on an Iran meeting. So these are a couple of important statements coming in, not to mention that Iran is quote-unquote very close to having a nuclear weapon. That is Trump talking to CBS, and those are some statements coming in. We'll take a short break, but on the other side, we will get you more on stocks. We'll get you a lot more in terms of specific companies. Stay tuned. Welcome back. Well, let's shift focus to the steel sector. Earlier, we spoke to Sandeep Pandrik, who is the Secretary, Ministry of Steel, on the steps the government is taking to protect the industry. Listen in.
There are like 2-3 kind of imports, as I said earlier. One is where the particular steel is not available inter-country, some specialty steels grades. So that's all right because those are not available. Second is based on lower price or dumping. That what the government has tried to discourage by imposing safeguard duty. I think that we have controlled to a large extent now. Based on the 2 months data of April and May, the total steel imports are much lower as compared to what they were in the last year. And if this trajectory continues, I think the steel imports will be about 50% lower than last year.
All right, so that is some important opinion coming in from the Steel Secretary. Meanwhile, we're still sitting with a cut of almost 100 points on the Nifty, below, actually above the 20-day moving average by just about 10 points. So we'll watch out for that. The market is at the low point of trade. It's led lower by the Nifty Bank, and all the other indices are currently under pressure, barring IT index. Take a short break, come back, get you more on individual stocks and the overall market at large. We were speaking about the pharmaceutical stocks. Just look at Divi's Lab, a big gash on that stock, currently at the low point of trade. Sun Pharma has been weak already and currently continues to remain weak. And now we're seeing some sell-off in a couple of these metal names as well. So we have Hindalco, which has come up for some selling. We have, Tata Motors, which has already been weak, was down 4% yesterday, has moved to the low point now as well. And another Tata Group stock, Tata Consumer, is the one which is at the low point of trade. But amidst all of this selling, there is one stock which is actually mildly higher in today's trading session, and that is on account of a standout brokerage note coming in, Schneider Electric. Nimesh joins in with more on that. Nimesh.
So now the stock is reacting on the back of a double upgrade from Goldman Sachs and Schneider. So they've upgraded the stock to a buy from sell, and they've raised the target price to 910. Now there are 4 key drivers for this upgrade according to the Goldman Sachs note. First and foremost, the increased TAM, which Goldman believes that it can go up to almost $14.5 billion by FY32 versus the current $9.6 billion. And also the market share for Schneider is likely to go up in the same period to almost 3.5% from current 2.9%. So that's the first big trigger. The second big trigger is the further expansion in the margins. So Goldman expects the margins to go up to almost 40% by FY32 versus the current margins of 38.5%. So that's going to improve the earnings as well. Third, the valuation is likely to catch up versus the peers like Hitachi on the back of this large order TAM as well as margin expansion. And fourth, the government support will mean additional revenue drivers for companies like Schneider. In fact, Goldman is expecting a 31% order inflow CAGR between FY25 to FY27 estimate. So on the back of a large TAM, a margin expansion, a double upgrade on Schneider to a buy now from Goldman Sachs, and they've raised the target price to 910.
Okay, all right, Nimesh. Thanks very much for that. We need to wrap up on the show with the news that the markets are seeing further pressure. Mid-cap index down 0.6%, Nifty down over 130 odd points. It's a wrap on Halftime Report. Business Lunch up next.
The escalation of the conflict between Israel and Iran keeps stocks skittish even as there is no disruption in trade so far. Realty and IT notching gains while healthcare and auto stocks are the big drags. Promoters of Vishal Megamart have offloaded a hefty 20% stake via block deals worth about 11,000 crore rupees, bringing their stake down to nearly 55%. Private investors and promoters Kedara and Partners PE rake in the moolah. Zee Entertainment has proposed the issue of nearly 17 crore warrants to its promoters at a price of 132 rupees a share. The warrants, on conversion within 18 months, will up the promoter stake to 18% from just over 4% currently. US President Donald Trump bid the G7 leaders an early adieu to head home as tensions between Israel and Iran escalated. Earlier, Trump had asked people to vacate Tehran, sparking reports of a likely US intervention. And Steel Secretary Sandeep Pondrik tells CNBC-TV18 that the government is plugging loopholes in the import licenses to curb their misuse. He expects steel imports to decline sharply in FY26. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Patakia. It's a slight bit of a pullback in the markets, as you see, and after the move that we saw yesterday, it was a strong start to the week, but the markets are just giving up some of those gains. At the lowest point of the day is where the Nifty currently is, 0.5% lower is where the index lies, 120 points down, nearing that 24,800 mark currently. So still at the higher end of that 24,500 to 25,200 range that the index has been over the last month and a half. As of now, it is the Nifty Bank that was an outperformer yesterday, snapped a 4-day losing streak, but is back in the red today at the lowest point of the day as well, 260 points down on the Nifty Bank, and that too is having a bit of an impact on the index. The Nifty Midcap Index was the only sectoral index in the green just a few hours earlier, but that too has now very convincingly moved lower at the lowest point of the day as well, 300 points down on the Midcap Index. And of course, there are plenty of movers in specific stocks, if you could call them. And on the broader markets end, Shipping Corporation of India, second day of losses for that, giving up some of those gains that it made, 7% lower on that stock, the top loser on the Nifty 500 today. But the big news, though, is the ongoing tensions between Israel and Iran, and the conflict intensified earlier this morning with a barrage of Iranian missiles hitting Israel. Smoke trails left behind by the missiles and sirens were heard in Tel Aviv earlier in the day. Now, this followed Israeli military action on headquarters of Iran's state broadcaster in Tehran on Monday evening. Now, videos and images from the scene showed the Islamic Republic of Iran broadcasting building on fire. Meanwhile, Israeli PM Benjamin Netanyahu has hinted that Israel is not opposed to killing Iran's supreme leader. Now, speaking to a news channel, he said that his killing will end the war. Now, amidst the missile warfare between the two West Asian rivals, this next report gives you a complete picture of the casualties and the hectic backroom parleys that are currently underway to stop the war that has now entered its fifth day. Take a look.
Multiple people have been killed and homes destroyed as Iranian missiles struck Israel's Tel Aviv and the port city of Haifa before dawn on Monday. It prompted Israel's defense minister to warn Tehran residents would pay the price, and soon. Those comments were walked back later, with Israel saying it has no intention of causing deliberate harm to residents. Israel's National Emergency Services raised its death toll to at least 23 civilians since Friday. At least 100 more were wounded in Israel in the overnight blitz, part of the wave of attacks by Tehran in retaliation for Israel's strikes, which targeted Iran's nuclear and ballistic missile programs. Israeli attacks in Iran have killed at least 220 people since Friday, with 90% of the casualties reported to be civilians, Iran's health ministry has said. Several residential buildings in a densely populated Tel Aviv neighborhood were destroyed in a strike just a few hundred meters from the US Embassy branch in the city. The building sustained minor damage and there were no injuries to US personnel. Fires were seen burning at a power plant near the Haifa port, media reported, with search and rescue operations underway, emergency authorities said. Iran's Revolutionary Guard said the latest attack employed a new method, causing Israel's multi-layered defense systems to target each other. It said it allowed Tehran to successfully hit many targets without providing further details. There were no reports in Israel of interceptor missiles hitting each other. Israel's military said on Monday it had struck again at command centers belonging to the Revolutionary Guard and Iran's military. Israel began the assault on Friday, wiping out the top echelon of Iran's military command and damaging its nuclear sites. It says the campaign will escalate in the coming days. Iran has vowed to, quote, open the gates of hell in retaliation. US President Donald Trump has repeatedly said Iran could end the war by agreeing to tough restrictions on its nuclear program. Iran says it is for peaceful purposes, but Western countries and the IAEA nuclear watchdog say it could be used to make an atomic bomb. Iran said its parliament was preparing a bill to leave the nuclear non-proliferation treaty, adding that Tehran remains opposed to developing weapons of mass destruction. Israel is presumed to have a sizable nuclear arsenal, but neither confirms nor denies it. It is the only Middle East state that has not signed the NPT.
Now, French President Emmanuel Macron he also mentioned that an offer has already been made for a ceasefire. Listen to what he had to say.
Écoutez, il y a une offre qui a été faite, en effet.
There is an offer that has been made, indeed, of meetings and exchanges. There is an offer that has been made, especially to have a ceasefire and to initiate broader discussions. And I think this is a very good thing. So now we need to see what the stakeholders will do. The president spoke a few minutes ago to say that there were ongoing discussions, which is a good thing. And so if the United States of America can achieve a ceasefire, it is a very good thing, and France will support it, and we wish for it. Then, I say it is absolutely essential that all strikes from both sides against energy, administrative, and cultural infrastructures, and even more so against the civilian population, cease. Nothing justifies this, and they are absolutely intolerable.
However, just minutes after Donald Trump departed from the G7 summit in Canada, in a Truth Social post, he said, and I quote, "Publicity-seeking President Emmanuel Macron of France mistakenly said that I left the G7 summit in Canada to go back to DC to work on a ceasefire between Israel and Iran. Wrong. He has no idea why I am now on my way to Washington, but it certainly has nothing to do with the ceasefire and a much bigger reason than that." Now, whether purposely or not, Emmanuel always gets it wrong. Stay tuned. End of quote. Now, meanwhile, Donald Trump, speaking to CBS News aboard the Air Force One, said that Iran is very close to having a nuclear weapon and that he wants a real end to Tehran's nuclear program. Let us also now listen to some views on the ongoing Israel-Iran conflict from David Roche, who is a strategist at Quantum Strategy. Listen.
It is that the United States, Trump, wants to have a peace deal with Iran, and it is using Israel to beat up Iran until it agrees to have a peace deal with the United States. That's the first thing. The second thing is the Israeli war aims are different to the United States, which, as I say, is looking for a peace deal. What Israel really wants is regime change in Iran, because that would replace the mullahs with something more secular, which might be hostile to Israel, but not in the kind of ideological zealotry-driven way that the mullahs preach every day, that Israel has got to be wiped off the face of the earth. So those two aims are different. Peace deal on the American side, regime change on the Israeli side.
Now, the Ministry of External Affairs has informed via a post on social media platform X that the Indian students have been moved out of Tehran for safety reasons through arrangements that are made by the embassy. Parikshit is joining in with more details on this. Parikshit, tell us, what are you picking up on this evacuation?
The war between Israel and Iran has led to concerns about the safety of Indians in Israel and Iran as well. Now, there are about 4,000 Indian nationals in Iran itself, and this includes about 1,500 to 2,000 students. The Indian embassy has said that Indian students in Tehran have been moved out of the city for safety reasons. The embassy has made arrangements for their evacuation. Other Indian students have also been advised to move out of Tehran at the earliest if they are making their own arrangements for transportation. Representatives of the Indian High Commission have facilitated the evacuation of some Indians through the border with Armenia. The embassy is keeping in constant touch with the Indian community to help them in the current volatile and fluid situation. A 24/7 control room has also been established in the MEA to answer concerns of all families who have their loved ones in Israel or Iran. The Indian embassy has also set up an emergency hotline for Indian nationals and students in Tehran and other places in the country. Many of the Indian students in Iran are from Jammu and Kashmir, studying in medical universities, professional courses all across Iran. Indian students study in universities in Tehran, Shiraz and Qom areas as well. External Affairs Minister Subramaniam Jaishankar spoke to his Iranian counterpart recently and expressed concern about the escalation. The safety of Indian students and Indians also cropped up during the discussions. Remember, the airspace in Iran and Israel is closed right now. All Indians in Iran are being evacuated by road, and it's an arduous journey. Armenia is about 800 kilometers away, and Turkmenistan, the other place where Indians are being taken, is about 1,000 kilometers by road from Tehran.
All right, Parikshit, important insights there. Thank you for that update. Take a short break here on Business Lunch, but just before we do that, can unlock a new dimension of business intelligence with CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. From market-moving insights and thought leadership to exclusive access to marquee events, journalist interactions, studio tours, and high-impact learning sessions, this is a truly elevated experience, with members also enjoying curated lifestyle privileges and perks. The power of insight, the privilege of access, exclusivity, experience, and influence is yours to claim. You can become a member by logging on to cnbctv18.com/access/plans. Welcome back. Now shifting focus to the steel sector. Earlier we spoke to Sandeep Pondrik, the Secretary of the Ministry of Steel, on the steps taken by the government to protect the industry. Now India's consumption trends for the next 10 years and about the turnaround in RINL and a whole host of such issues. Listen into what he had to say.
There are like 2-3 kind of imports, as I said earlier. One is where the particular steel is not available inter-country, some specialty steels grades. So that's all right because those are not available. Second is based on lower price or dumping. That what the government has tried to discourage by imposing safeguard duty. I think that we have controlled to a large extent now. Based on the 2 months data of April and May, the total steel imports are much lower as compared to what they were in the last year. And if this trajectory continues, I think the steel imports will be about 50% lower than last year. So for now, RINL till now has been a success. I would put that in the success category till now. In September, it was on the verge of closure. Now in May, they are running 2 blast furnaces above 100%. They have become cash positive for last 3-4 months. About the merger or any other thing, for now it is that the government decision is to keep RINL as a going concern. So there is no proposal merger with the sale or any other thing for now on the table.
Shifting focus then, sources have said that the government is evaluating a proposal to clarify ambiguities in the applicability of GST on cab aggregators. Timsy is joining in with more details on this. Timsy.
Well, that's right. What sources are telling us is the fact that the government is evaluating proposal to clarify ambiguities in applicability of GST for cab aggregators. Industry has sought similar GST treatment for cab aggregators working on commission as on those which is being levied for the cab aggregators that are working on SaaS model. Just to remind our viewers, cab aggregators working on commission model are taxed at 12% GST with ITC or 5% without ITC per ride. Cab aggregators working on SaaS model are taxed at 18% GST on the one-time or the monthly or the daily fees that they charge to the drivers. So now what the issue over here is, what sources indicate that industry has written to Finance Ministry and they say that there is a need for parity of GST for cab aggregators as model may be different, but final service is the same. Commission-based cab aggregators are losing market to SaaS-based model apps. The cab aggregators on SaaS model charge drivers 18% GST only once a day or a month, which makes rides much cheaper. Varying applicable GST rates leads to same service being cheaper, costlier basis who is providing the service. Just to remind our viewers here again, Ola, Uber use commission-based model and charge 12% or 5% GST depending on the ITC treatment, whereas apps like Rapido, Namayatri work on SaaS model. They don't charge passengers GST at all. They only charge GST to the cab drivers for the daily or the monthly fees, which is very small quantum, and thus the 18%, which might sound larger, actually comes out to be a very minimalistic pay. So cab aggregators on SaaS model collect 18% GST from drivers only, and that is what is giving a tough time to cab aggregators who are working on the commission or per ride based model. Let's see what happens finally. Does Finance Ministry step into it and come up with clarity or not? Something that we'll have to wait and watch for.
Timsy, thanks a lot for that update. Take a short break. News and updates continue on the other side. Stay tuned.
investing.
Welcome back. Now, the leaders of the group of 7 nations arrived in Canada to attend the 51st G7 summit. The discussions at the summit will focus on major topics such as energy, technology and innovation. Meanwhile, a fresh round of attacks from both sides has also prompted leaders of the G7 nations to issue a joint statement declaring that Iran can never have a nuclear weapon, while calling for an immediate de-escalation across West Asia. CNBC's Megan Casella gets us the latest from Canada.
A full day of headlines from the first day of the G7 summit here in Alberta, Canada. President Trump sat down with at least 5 different world leaders for bilateral meetings and pull-asides that we know of, included the leaders of Canada, France, Germany, the UK, and the European Union, making news as well on a number of topics. First, on the ongoing tensions in the Middle East, the president maintaining throughout the day his support for Israel, saying they were doing very well, and saying that Iran was foolish not to sign on to a deal. He also said the Iranians are basically at the negotiating table and, quote, as soon as I leave here, meaning Canada, we will be doing something. So keeping hope alive for some sort of a negotiated nuclear deal, especially as markets were up on the day on the hopes that some sort of an agreement could be reached in the Middle East. A White House official did, though, confirm to NBC News that the U.S. would not sign on to any joint statement coming out of the G7 that urges de-escalation in the Middle East. It is likely that other G7 leaders would sign some sort of a statement, but the White House will not be a part of it. On Russia, the president was a little bit non-committal on this first day of the G7 on the idea of sanctions, saying first that it could happen when asked about it by a reporter, but saying later in the day that sanctions are very expensive for the United States, so not making it clear there which way he would move forward. And then finally, the other big topic here at the G7 has been trade, with President Trump's tariffs really being the elephant in the room for every ongoing bilateral meeting that we've been tracking. The U.S. and the UK did seem to advance the trade framework that they first announced in the Oval Office just about a month ago. Furthered that, put some more meat on the bones there. But otherwise, even though every other G7 leader is anxious for some sort of a trade deal, we have not seen any concrete news on that front. Everybody is looking for a way to try to avoid those tariffs that are set to kick back into effect just next month, July 9th being the tariff deadline. But so far, despite these bilateral meetings, no concrete details of any actual trade agreements between the U.S. and any of these other G7 nations.
Well, with that, we call time on this edition of Business Lunch. We leave you with the Nifty still 100 points lower, but the Dow futures, though, have extended their losses. They are now down 300 points, so we need to keep an eye out on the developments coming in from West Asia. The mid-cap index, as we speak, is down just about 0.5%. Take your leave here. Mid-cap radar on the other side. Thank you so much for watching.
Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Bamakshi Doria and with me is Vivek Iyer. Well, a very good afternoon to you, Vivek. The markets for today are taking a bit of a breather. We are seeing some selling pressure emerge at higher levels.
That's right. Good afternoon, Bamakshi. Like you mentioned, markets are seeing selling pressure at higher levels. In the broader end of the markets, the mid-cap and small-cap trades, the market breadth has weakened considerably, especially in the last half hour of trade. But we have a lot lined up on the show, so let's start off with the top headlines. Market drags to the day's lowest point as the escalation of the conflict between Israel and Iran keeps stocks skittish, even as there is no disruption in trade so far. Mid-caps also fall in sync with other key indices. Only IT manages to hold on to gains.
US President Donald Trump bid G7 leaders an earlier due to head home as tensions between Israel and Iran escalated. Earlier, Trump had asked people to vacate Tehran, sparking reports of likely US intervention.
Sterlite Technologies shares gains 50% in 5 sessions on the back of recently signed 2,631 crore agreement with BSNL. The management tells CNBC-TV18 that they will supply optical fiber cables and connectivity solutions for this project, which accounts for 5 to 10% of capex. They also expect margins to be 18 to 20% by the end of the year.
Promoters of Vishal Mega Mart offload a hefty near 20% stake via block deals for about 9,900 crores, bringing their stake down to near 55%. Private investors and promoters Kedara and partners PE rake in the moolah. Zee Entertainment has also proposed the issue of near 17 crore warrants to promoters at a price of 132 rupees per share. The warrants, once converted within 18 months, will up the promoter stake to over 18% from 4% now.
Schneider Electric Infra gains after Goldman Sachs double upgrades the stock to a buy from a sell rating, with the target price of 910 rupees a share, with a growing total addressable market and government support expected to be key growth drivers.
Well, 24,850 thereabouts is where the Nifty is at, close to 100-point fall as far as the main benchmark indices are concerned. But when you look at the mid-cap end of the market, that too is, is down in trade, down nearly 0.4% in tandem with what the benchmark indices are doing. The broader markets, when you look at the advanced decline ratio, that is largely in favor of the advances. As far as some sectoral indices are concerned, most of them are trading in the red. The losses are being led by the pharma index, which is under significant pressure, down almost 1.5% now. The leading the fall is actually Granules. We spoke to the management a couple of minutes ago. Nifty Metal Pack also not doing too well in trade today, down almost 1.23%. The fall being led by Hindustan Zinc as well as Hindustan Copper. The Nifty IT index, though, holding in the green. But lots of stock-specific action in today's trading session. And to take us through that, we now have Hormaz in our special segment, Midcap Movers, to take us through that list. Good afternoon, Hormaz.
Good afternoon, Mamakshi. Here around the same time yesterday, we were talking about the advanced decline line converging towards the advances, but unfortunately that does not appear to be the case today. We'll start off with the losers then in the broader markets, and you can see that gap now widening, and Shipping Corporation of India has nearly given up all the gains that it saw over the last couple of days due to the West Asia crisis, 7% lower, as has Jubilant Ingravia, another 6% down after being lower yesterday as well. Reliance Power is in a lower circuit, and Hindustan Zinc recently announced a capex plan just a few minutes earlier, that too at the lowest point of the day, 4% lower on that stock. Some of the other movers in today's session and the brokerage impact, Happiest Minds is up 10% now as an Anand Rathi initiation coming in earlier in the day. Naveen Fluorine after another positive brokerage note coming in today. And IGI, it's an initiation with a reduced recommendation, so it's 4% lower. And MGL among the top brokerage picks from Nomura today, 2.5% higher on that stock as well. Pharma and metals are two pockets that are not doing well today, and that's showing up as well. All of these stocks at the lowest point of the day. Divi's, Hindustan Copper, we just spoke of Hindustan Zinc. Look at NMDC, look at Laurus Labs, all the stocks in the metals index trading lower in today's trading session. Stocks that are doing well on the volumes front, Vishal Mega Mart, look at the recovery that the stock has seen, 3.5% lower after that huge block deal that took place earlier in the day. Supreme Industries is up at the highest point of the day on strong volumes, but Tanda Platforms has given up most of its gains at still 3% higher on strong volumes. And lastly, stocks that are bucking the trend otherwise as well. CRISIL is up 5% after a 2-day sell-off. MMTC is in an upper circuit. IKS, another recent listing, 5% higher. And Hitachi Energy, a potential MSCI inclusion in August, is now 5% higher at the highest point of the day. Back to you guys.
Thank you so much, Hormaz, for joining us, giving us a sense of what exactly is transpiring, the market breadth, the broader end of the markets. Well, a couple of stocks on the radar, a bit of recovery that's been seen, especially in the last 10 minutes. AB Capital, one stock from the NBFC space, is doing quite well. And names like Tech Mahindra from the IT pack, that's another stock that's doing quite well. But it's a good time to welcome Rajesh Palvia from Axis Securities for a quick technical check on the market. Good afternoon, Rajesh. Thank you so much for joining us. What are you making of the markets at current levels? Are you witnessing exhaustion for the Nifty, especially near the 24,900 mark?
Good afternoon. So again, Nifty is witnessing supply pressure at the major call concentration area of 25,000, 24,900. That's the major call concentration area for the Nifty for near-term perspective. So the once Nifty crosses about 25,000 level, then we may see some short covering action. But till the time it is not able to cross, I think some consolidation is likely to be there in Nifty. On the downside, 24,700 is the immediate support area for Nifty on the downside. As Nifty as well as Bank Nifty both are, now hovering near to 20-day moving average support area. So 24,800 to 24,700 is the key level to watch for in the decline. Volatility is likely to be there as geopolitical tension is still there. So I think market is likely to remain in the volatile manner only. Bank Nifty is facing supply pressure at 55,800 to 56,000 zone, which is a major call concentration area. So I think till Bank Nifty not crosses above 56,000 level, here also we may see some consolidation in range of 55,400 on the downside and 56,000 on the higher side. So range bound activity is likely to be there for both the indices for next couple of days, and either side breakout or breakdown will decide the major direction. But looking at the broader market, looking at the buying interest at lower level is giving us sign that there is a possibility that we may see a breakout on the higher side. But yes, after consolidation of next 2-3 days.
Hi Rajesh, thank you so much for your views. So over the last couple of trading sessions, this is what we've seen is, there has been a buy on dips, over the last couple of weeks at least. So in such a situation wherein, today we're down almost 100 points for the benchmark index, what would be some of your top stock recommendations?
I think IT is the sector where, a sustained buying action is taking place. So I think from IT space, LTIMindtree is looking promising. The way stock is moving on the weekly as well as on the daily chart, we believe that, this stock has potential to continue furthermore upside. We are projecting target towards 5,600 to 5,650 for LTIMindtree. One can buy and accumulate this stock with stop loss of 5,460. Another stock where we are focusing is Voltas. After a consolidation of almost 7-8 weeks in very narrow price range now, stock managed to give breakout of this consolidation range. Looking at the breakout, we believe that Voltas can extend its gain. 1360 to 1370 would be the next target. One can buy and accumulate with stop loss of 1295.
Thank you so much, Rajesh, for joining us, giving us a sense and your view as far as markets are concerned, as well as the individual trading calls. Well, it's a good time to slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
You have stood up and stood by many of India's dreamers.
I became a magnet for entrepreneurs. So there's one man who will hold our hand and take us all the way.
So what is the art of deal making?
So whenever the deal maker wants to become too big, oh, I'm God, okay, you say this and you say that, kind of attitude, not literally, but I've seen that. What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regrets.
What is holding us back?
Promote and protect the good. prevent and punish the bad. We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a news story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But वो हम एक scene दिखाते हैं, फिर we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back. You're watching Midcap Radar on CNBC TV18. Let's put the spotlight on Navin Fluorine. The stock is bucking a trend after a brokerage note that has come in from Jefferies. And to understand just that, we now have Ria joining us. Ria, tell us why.
Well, yes, Navin Fluorine has been trading higher in today's session, and this is on the back of a note from Jefferies. They have a buy call on the stock with a target price of rupees 5,280. What they've said is that the company is well positioned to monetize rupees 4,000 crores worth of capex commissioned by the company in the past 3 years by entering into long-term contracts. And they've also said that this going ahead should improve asset turns and drive a 35% EPS CAGR over FY25 to FY27. Another thing they've highlighted is that a pipeline of new contracts in the specialty chemical, CDMO and HPP segments should fructify in FY26 and should also provide growth visibility FY28 onwards. And despite the recent run-up that we've seen in the stock has underperformed the Nifty by around 23% since January of 2023. So overall positive view on Navin Fluorine from Jefferies. Yesterday, in fact, Morgan Stanley had also come out with a note on the company. They had upgraded it to an equal weight rating with a target price of rupees 4,160. They've also raised the multiple on the company's contract manufacturing and high performance segment to 25 times from the earlier 20 to 22 times to reflect on the company's commendable delivery in improving operations and margin profiles and also building order books. So on the back of these positive notes, the stock is up around 3 to 4% today.
Thank you so much, Ria, for joining us, telling us exactly why Navin Fluorine is in focus. The stock's doing quite well last couple of days. You've seen a whole slew of brokerages right on the prospects of the company. But moving on, Tanla Platforms is another stock that's gaining today. This on the back of a board approval for a buyback. Now, Winnie joins in with more details on this particular buyback.
Hi, Vivek. Afternoon. So in terms of the board approval that's coming, it's for 175 crore rupees is what the buyback will be happening. 20 lakh shares, price is 875 rupees. That's around 1.5% of the total capital, that is the paid up capital, equity capital, that is there for the company. Now, obviously, 875 is the buyback price. The stock yesterday was trading around somewhere at 675. So that is why we're seeing the run-up coming in. The buyback price is higher than the yesterday's closing price as well. So stock is buzzing in trade. The cash on the books that they had was around 1,000 crore rupees at the end of FY25. And the last time they'd done a buyback was somewhere around in 2022, 2023, December 22 and beginning of Jan 23. That was also around 170 crores and that was at a price of 1,200 rupees per share. So on the back of this, Tanla Platforms is buzzing in trade.
Thank you so much, Vinny, for joining us, telling us about Tanla Platforms. But Vamaxi, you've been tracking Siemens, right? And an important order win coming in. Give us more details.
Well, absolutely, Vivek. The stock is surging in trade today. Last time I checked, Siemens was up almost 2%. Of course, it has cooled down, up 1.5% now. But, the consortium, which included Siemens, has been awarded a contract. This is from National High Speed Rail Corporation Limited. The order is valued at 4,100 odd crores, out of which Siemens Limited share stands at 1,230 crores. And this project is actually for the Mumbai-Ahmedabad bullet train project. Now, keep in mind that the contract win was largely known. And I say this because the company was already, the consortium rather, was declared as an L1 bidder a month ago. LOA was also received a week ago. There were some reports going around on that as well. But it has been declared on exchanges now, which is why we're seeing that up move. Now, the scope of work for Siemens includes providing design, installation, as well as long-term maintenance of advanced signaling as well as telecommunications tech. The project will be executed over a period of 54 months and Siemens will be providing nearly 15 years of maintenance services. So given the kind of contract that has come Siemens' way, it's a big one. 1,230 crores. So certainly the stock is up and away in trade today. But on to a CNBC-TV18 exclusive, then we have Yash joining in with the latest. He is speaking on the decision on expiry days for exchanges. Yash?
Well, there has been a lot of discussions which have happened on which exchange is likely to get Tuesday and which exchange is likely to get Thursday as its weekly expiry date. What we've been given to understand, though, is that SEBI is likely to come out with final regulations on allotting expiry days out of Tuesday and Thursday to NSE and BSE. Today itself, what we've been told is that a decision is likely to have been made at market regulators' desk in terms of which exchange will get what date as its weekly expiry. In April, CNBC-TV18 had reported that NSE had applied for Tuesday as its expiry day. The regulator was at that point in the process of considering NSE's request on whether to grant Tuesday to NSE or not as far as its expiry day is concerned. That very crucial decision for the exchanges is likely to have been made, and the final regulation specifying the details of which is expected today itself.
Well, thank you so much, Yash, for joining us. So today, the entire speculation on which exchange gets which expiry day should be put to rest. Vamakshi, you've also been tracking this for a while. You have something to add.
Well, absolutely, Vivek. You know, BSE after this news flow has actually tanked because the fear was that maybe if NSE changes its expiry day from Thursday to Tuesday, the sort of volume market share that BSE had been gaining could come under pressure. But in fact, you know, there was a note that came in from Jefferies yesterday as well, which said that probably the volumes may not decline for BSE and the market share may not decline. But let's slip into a very short break. Up next, we get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back to Mid-Cap Radar. Well, markets continue to be quite volatile. The auto pack seeing a bit of a bounce back, names like Hero as well as Bajaj Auto seeing a bit of a bounce back from intraday lows. But one stock that's under significant pressure today is Vishal Mega Mart. Now, late last evening, we received the term sheet for a likely block deal, which was going to be in excess of 5,500 crore, indicating that there could be 10% of equity that could exchange hands. But today morning, given the kind of demand that the banking community saw, the investment banking community saw, they went ahead and decided to upsize this particular block deal to close to 20% of the total equity, a little over 19.5% to be precise, indicating that almost 10,000 crore worth of shares exchanged hands today. Who was the seller? As per the term sheet we managed to access last evening, the seller is none other than the promoter entity. Remember, the promoter entity over here is actually an investment vehicle of both Kedara Capital as well as the Partners Group. At the end of FY25, they held a little over 74.5% stake, indicating that after today's block deal, they'll continue to hold over 54% stake. And the key question, Vamakshi, would be, what is it that they intend to do with the over 54% stake? Remember, the promoter entity here is actually a clutch of PE investors, and they sold via the OFS route through the IPO. And again, as soon as the lock-in ended, they've gone ahead and offloaded a significant chunk in today's block deal.
Sure, Vivek. I think that really explains why the stock is down and out in trade, down almost 2.5%, although it has seen a fair bit of recovery from the day's lowest point then. But on the flip side, when we look at stocks like Z Entertainment, the promoters actually infusing funds in there. So that's seeing an uptick. So just some contrasting moves out there. But, on that note, that's all we have on this edition of Midcap Radar. Don't go anywhere because MF Corner when we return.
Hello, good afternoon, and welcome to MF Corner on CNBC TV18. I'm Vinny Motiwala, and thank you so much for tuning in as always. Now, today we're going to be putting the spotlight on allocation of the bonuses you must have received. It's end of the year, everyone's receiving the bonuses. So, how would you allocate them to mutual funds if that's your strategy? Where should you be investing it? How should you be investing? Should it be SIP? Should it be lump sum? How much of your financial goals matter in this scenario as well? To talk to us about all of this, we have Tarun Birani joining in with us, who is the founder and CEO at TVNG Capital Advisors. Tarun, very good afternoon. Surely we have a lot of people cheering at the end of this year with, the bonuses that are coming in now in their salaries. So what are the key factors to start with that an investor should consider before deciding on how they should be allocating their annual bonuses?
Good afternoon, and thank you for having me here. Yes, it is a very happy topic to discuss. I think this is the time of the year with many of us are very happy with the way payouts we are receiving, and we are actively looking at how to make the most of it. Right. So I think coming to the factors investors should consider before deciding how to allocate their annual bonus, I feel money is money. Everything is same. So my first and most important suggestion is we should not get emotional about this part. We need to be completely unemotional. It is a money in the bank account, right? So we need to make sure that how we can align it best for our long-term goals and purpose, right? So again, I'm a very strong believer of aligning our goals in three buckets: safety bucket, stability bucket, and aspiration bucket, right? Safety bucket talks about ensuring that I don't want to be poorer than before. I need to have a strong contingency. Stability talks about building financial freedom, building, let's say, children future goal, or anything which is related to stability. And aspiration is more about getting that extra push, looking at more concentrated investment. So we need to figure out which bucket currently we need to invest in, whether it's safety, which is deficit right now for me. Again, this money can go in the safety corpus. If stability is weak for the freedom part, one can look at that. Again, a lot of things one can look at. If you are running a lot of high cost personal loans, my strong suggestion would be to first repay those personal loans, because this can really help you reduce your I think high cost loans you can repay. Second, one should look at ensuring that this money is going into rebalancing the portfolio. If your portfolio or your risk tolerance level is high on equity, but because of some situation you are sitting on low equity, it is a great time to increase your equity in the portfolio. Again, similarly for the debt portion also. So rebalancing again can be looked at actively. I have seen one very large challenge at this time. A lot of left unallocated people get into a lot of lifestyle inflationary structures where they end up buying a lot of unconscious lifestyle spending happens there. So investing creates that intentionality in us, right? So again, one can look at actively using this opportunity to make the most. And there are a lot of tax saving opportunities one has available, like ELSS, NPS, and all those structures. So maybe one can see how they want to realign with that.
Okay, surely interesting, right? Safety bet, stability bet, or your aspirational, depending on each of the pockets, you can look at moving there. But then how should you invest this amount, right? Because you're receiving a lump sum amount. Is it better to invest this once and for all in a lump sum manner, look at something like an STP plan, an SIP plan, or how should you go about with this?
Right. So again, this is a very evergreen question, and most of the time I get this question and there is no straightforward answer to it. It again depends on two, three things. First is the market conditions where you are in. Is it undervalued, overvalued? Again, you need to have a matrix which should tell you that the current environment is conducive for equity investing, or it looks very overvalued and you want to stagger your investor for a longer period. So let me talk about today's market. And again, I look at 3-4 large parameters like price to earning, price to book value, market cap to GDP, and yield gap, which gives me one matrix where current valuations are. And this tells me that we are in a neutral kind of market positioning right now. So in the current environment, I will take, say, another 6 to 8 months to deploy my money. I would not go lump sum today. I will try to use tools like STP, value investing strategies, to ensure my money goes in a smaller phase rather than investing lump sum, because market looks neutral or fairly priced to me today. Again, it depends on investor psychology also. I think some investors are high risk taker. They can look at lump sum investing, and investors who are, let's say, have a lower risk appetite can look at staggered investing. Again, the best part about staggering that money, it manages your behavior well. It gives you psychological reassurance, that creating that emotional discipline, right, which helps investor stay committed to the various market cycle, right? So but my practical thumb rule is, for recurring bonus, if you are expecting your bonus to be recurring under certain threshold, a lump sum might be a pragmatic thing, because if you are expecting monies to come on a stagger level, right? But if you are expecting a one-time amount, maybe a staggering and going for a STP SIP option is a better option.
Okay. And are there any specific mutual fund categories, like in equity also there are so many available? There's debt, there is hybrid, balanced advantage fund. What is more suitable for which kind of investors, and how should they go about it?
Okay. So I spoke about that safety, stability, aspiration buckets, right? So one need to create their own financial plan, and based on that, they need to define which category of investment or mutual fund scheme could be most useful for them. But again, for lump sum investing, I think what I have observed from a rolling return data, asset allocation structures like balance advantage fund, multi-asset fund, equity savings fund, these are much better structure from a lump sum investing point of view. But again, and if you have a short-term goals, you can look at short duration debt funds, you can look at liquid funds and all that, to ensure safety and liquidity of the portfolio is there. But if you're really looking at long-term horizon and you feel this, you can deploy this money for 10 years, I feel a staggered strategy, where currently putting the money in a low risk debt fund and staggering that money into high risk equity flexi cap strategy could be a very good thing to do, to make sure that you are mitigating that concentration risk and the growth opportunities taken.
Okay. Tarun, you're dealing with so many people, right? You advise everyone. What is the common mistake normally that you've seen with investors in such a situation? Or, they tend to do while they're deploying their bonuses into mutual funds? And anything you would advise them to for sure avoid? Like, this is the big red flag. Please do not do this.
So I think one of the very good question, and one of the largest mistake I have seen people do is we all as human being react to the recent performance. I think we forgot what has happened at the COVID time. We forgot what has happened at the global financial crisis time. I think we are slaves of what we see in last 6 months, 3 months, 8 months, right? That is how the human brains are wired, right? And again, due to this, investor frequently chased past year winners instead of evaluating returns based on rolling return, which according to me is one of the best way to identify the best fund managers and to identify their skill. But I think most of the time people look at last 1 year, 6 months, and maybe they land up into a best defense fund, best infrastructure fund, or a best thematic fund, which may or may not be useful for their long-term investing. So I think recent performance is one of the very large mistake, due to which I have seen long-term returns of investors get compromised. And again, you must have seen that data, right? Over a 10 year, 15 years, though investments have returned great return, but investor returns are low. It is because of we investing based on past performance, right? We don't look at long term, or we don't look at rolling data and our goals, financial goals, before investing. And ignoring asset allocation is also one of the largest mistake investor make. I have seen people invest money just randomly, just because their friends and families are investing somewhere, or for their without identify their financial goal, they randomly investing into it. So due to which most of the time bonuses amount pours. And if I look at 5 years, it is going in only equities, which amplify portfolio volatility. So always recalibrate towards your strategic asset allocation framework. What is the right framework? And maybe you want to invest based on that. And last, and one of the another mistake people do is overconfidence or neglecting rebalancing. I have seen people don't look at rebalancing seriously. Maybe because we have seen last 15 years of secular rise in the market, but I think asset allocation rebalancing is very critical and it can give you a better long-term investing experience.
Okay, that's interesting. Surely important mistakes to avoid. How you should be going about is also what Tarun has spoken about before as well. What basket you want to invest in terms of your financial goals, whether it's safety, stability, or aspiration. And on the back of that, he's highlighted how you could go about investing as well. So that is on investing your bonuses. On that note, we're actually going to slip into a very short break, viewers. We'll come back and we will be discussing more in terms of global mutual funds, and that too through Gift City. How should you be going about that? Tarun will be continuing that conversation after the break. Welcome back to MF Corner on CNBC TV18. We still have with us Tarun Birani of TBNG Capital Advisors. Now we're going to shift focus and talk about investing in global mutual funds, and this is through Gift City. And what are the pros and cons of this? How should you actually go about this as well? Tarun, this is a very interesting topic. I just want to start by, helping our viewers understand, one, how should they go about this? Gift City, what is that? How does it enable Indian investors to actually access global mutual funds or other international financial products? What is the process for this?
Sure. So Gift City, or the Gujarat International Finance High-Tech City, is India's first operational international financial services center, similar to the concept of financial hubs like Singapore or Dubai. It essentially acts as an onshore-offshore financial ecosystem, allowing Indian investors seamless access to international mutual fund, ETFs, or structured financial products. Again, just talking specifically for investors. What's unique in Gift City is it eliminates the traditional hurdles associated with global investing, like complex documentation, foreign currency transaction, and offshore account management, while it provides a regulatory oversight from India's IFCA. IFSCA is the regulator which regulates the entire Gift City investor experience completely there.
Okay. Could you walk us through the step-by-step process for an Indian resident to invest in global funds via this, including account opening, and what is the regulatory requirement also that we have here?
Right. So as we look at currently from the Indian investor point of view, RBI has put in restriction to the Indian mutual fund investor to invest into global mutual fund through the feeder fund route which we had available. So now Gift City is becoming a very attractive option. So there are two ways one can participate. So one is there is a need to invest outside India to diversify your money, right? So first route is you can open a broking account there. So you can select a IFSC platform, choose a IFSCA regulated platform or broker in Gift City, do the KYC like your typical PAN, Aadhaar, passport and all that, and sign a declaration under the LRS scheme. You need to open an IFSC account, which should be my suggestion would be to open a USD denominated bank and trading account with the authorized bank operating in Gift City. Then fund the account, and again there is a limit, not more than USD 250,000 per financial year from your regular bank account into that USD dominated Gift City account seamlessly, which converts your INR to USD. And after this, you can, step 5 is to invest globally to all these international mutual fund, ETFs, US stocks, offshore bonds, or thematic global portfolio available on your platform. So this is one route through which you get access to all these portfolios by opening a broking account. Another route, which is again, we have seen a lot of launches happening, which is like the outbound funds. There are a lot of outbound funds which asset management companies are launching right now, and they invest into the portfolio mimicking the global funds, right? So that is another route if you're looking at a managed portfolio. But if you yourself has the skill set to pick up the best stock globally, or you can pick up a best ETF yourself, I think then you can go ahead and open a broking account. So these are the two routes available to Indian investor to participate in Gift City.
Okay, so you mean broking account, and if they're individually doing it, means I could go buy a stock in the US market on my own as well, like how I would buy in an Indian market. That's how it would work.
That's correct. You need to open a broking account there.
Okay, so those are the options that are available, and how you could actually start investing in the global markets and funds as well. Are there any taxes or tax advantages are there, or what is the taxation here? What is the flexibility in terms of repatriation as well as diversification? How does all that work as well?
Right. So first of all, you need to be aware that it will be under the LRS option, right? So any money which you get into LRS, you are subject to TCS, and for investment there is a 20% TCS which is applicable. So let's say if you are investing $1 lakh, 20% of that you need to keep aside for TCS, which you can adjust against your tax commitments, like your advanced tax and TDS part. So that can be adjusted. That is the first part you need to be aware. Second, long-term capital gains investment more than 24 months are taxed attractively at to 12.5%. Additionally, there is an operational simplicity. Investor can avoid complexity around offshore account, foreign exchange conversion, and dual taxation. Furthermore, Gift City offers you easy capital repatriation under RBI LRS rules, removing that traditional liquidity hurdles. Essentially, it gives you a global diversification in a very transparent, regulated, and cost-efficient manner.
Okay, surely that's the word coming in there in terms of the taxation point of view. What are the types of global mutual funds that are currently accessible through this Gift City? What are the plans in terms of the range of availability of products? What is the understanding there, right? Because your international funds, now you cannot normally invest through it. There's a limit, and it's reached that limit right now. So what are the options available there if I'm going through the mutual fund route?
So technically right now, if you open a broking account gives you access to all the global ETFs, right? So US markets, whatever ETFs are available through the broking platform with the likes of S&P 500, NASDAQ, and a lot of thematic like technology, healthcare, ESG strategies, multi-asset, fixed income, tracking treasury yields, all denominated in dollars kind of structures will be available through these broking platforms. Again, I have seen there are a lot of innovations and a lot of expansion of products happening there, where a lot of new ETF structure, a lot of fund structures, a lot of USD denominated PMS AIF are coming. So again, those are also in making as we talk right now. So I can see there would be a lot of options and opportunities available for investor going forward to invest outside India.
Okay, hoping and we'll discuss more of these opportunities as and when they come as well. But what are the challenges or what are the risks that an investor should be aware about when you are investing, through Gift City into these funds, into the mutual funds, currency risk, regulatory changes? What are these that we are watching out for?
Right. So as you rightly said, one of the very largest risk investor need to be aware is currency volatility. ISD UNR exchange fluctuation can impact your investment returns significantly. So depreciation benefit returns, but appreciation of INR reduces your repatriate value. So that you need to be aware. Again, the liquidity and settlement cycles are not same as what is there available in India. So international funds might take a longer settlement period, typically T+2 or T+3 days, possibly affecting your short-term liquidity planning. Again, regulatory evolution is also taking place where Gift City regulatory landscape overseen by IFCA is continuously evolving, making it important for investors and to be aware and updated regularly, because I think we are evolving as we talk. And again, tax compliance clarity. Again, we need to accurately report foreign holding annually. Errors on omission can trigger regulatory scrutiny. So that is also something we need to be very careful.
Okay, certainly a lot of points to be careful about as well, but an interesting opportunity that is shaping up for investors. So you have to keep the pros and cons and weigh them perfectly and then invest. But Tarun, thank you so much for joining in with us today, explaining us how to go about this process as well. So thanks for joining in with us on the show. And viewers, thank you so much as always for joining in with us on the show. And, don't go anywhere. Last 1 hour of trade is left. And to take you through that, we have Closing Bell up next.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Nikkei, that's managing to hold on to gains of 0.5%. ASX 200, that's the Australian index, is also quite muted, but slight bit of a positive bias there.
Support stands at the 20-day, which is 24,832, and the lower end of the range which the market has been in, which is 24,500. It's absolutely flat. So blinking red and green, at least on the Nifty. It's more, actually not really definitive on the Nifty Bank as well. So it's flat actually on both. So 24,930 on the Nifty.
So for now, RINL till now has been a success.
All eyes on the Israel-Iran talks and what the America role would be out here itself.
The markets are on the edge, not just the Indian markets, but global equities across the board.
The broader markets, when you look at the advance decline ratio, that is largely in favor of the advances.
SEBI is...
Okay, that is the day so far, and is it a consequential day? Is it an inconsequential day? It's actually neither. It's neither here nor there. It's about 0.4% lower. So really no big signaling through the course of the day is what we've had. Market breadth is slightly negative. And I think much of the discussion, of course, will be on single stocks. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel with me. Nigel, hi.
Well, that's right. I think the breadth of the market that's got increasingly negative from the start of trade, I think that's what's not making portfolios feel very, very good. And now I don't know whether the street should be hopeful as well of getting a resolution in the near term, because overnight, there was some positivity. But otherwise, the soundbites that have come out have not indicated much in terms of a de-escalation between Israel as well as Iran. And that's the next big trigger in terms of a leg up for a year for the markets. But if you had to say that crude oil prices spike so much and still the markets are still around that 24,800, 24,900, I think the bulls would take it.
No, absolutely. And they'd also take the fact that oil prices are not up more.
Yeah.
They're kind of sort of contained for the last 2 days. The initial spike happened, but after that, not very much at all. It's 24,860 or so as far as the Nifty is concerned, which is actually, I think, pretty close to its 20-day moving average. So let me just actually pull that up. Where is the 20-day exactly? I think we are exactly the 20-day right now. So 24,841 is the 20-day. And we are basically about 15 points away from the 20-day moving average. Well, the news flow doesn't stop. Look at the flash at the bottom of the screen. Trump says pharma tariffs are coming very soon. So there is that. The sectorial tariffs, remember, that's they're being imposed under a different section, and they're not covered by what the court remember the court system blocked the tariffs, and then there was a stay on the block, which means that they're still effective. The case perhaps goes to the Supreme Court, but these sectorial tariffs, pharma, etc., and everything else are being imposed under a different section in the US. Stocks, I think, are taking a bit of a leg down very clearly. Dr. Reddy's is down 2% very sharply, suddenly. Lupin is down about 3%, and I think many others will come up on your screen as well, which are down. Cipla is down about 1.75%, and so on and so forth. I remember we had a discussion with the Lupin management sometime back. This is early on. And what he had told us is that, we basically, in terms of the US imports which come through, drug imports which come through, it's about $700-800 million or so, on which there are about 10% tariffs which we impose. So I remember Mr. Swaminathan of Lupin's point was that it's very easy to kind of negotiate on that. If we wanted to, we could give some concessions because it's not that large an amount, etc. But who knows? We'll have to take it as we seek. We'll try and get Winnie up on this as well, maybe with some feedback from analysts, etc. But that's the latest which is coming through. Nigel.
Well, that's right. Well, let's get in Mitesh to help us out with how do you position yourself at the final hour of trade. Hi, Mitesh. Good afternoon. We've come off the day's low, actually. We're sitting with a cutoff around 80 points. Today, the problem is the mid-cap index has taken a harder knock. What's your view in terms of trading action? What are the goalposts you're looking at on the Nifty first? And then if you could give us your individual picks.
Very nice. So in the last
3-4 hours, it was a very quiet market. We kind of declined from 24,900 to about 24,820 and then bounced back to about 24,870. So contracting market. My still belief is that, that we are basically going through some kind of consolidation between 24,500 to about 25,000, 25,050 on the upside. And that remains the range in the short term. We had that brief move beyond that range last week, but then that kind of was immediately taken out. So we assume that the range is in place. Also, the volatility indicators are shrinking. So not much sign of a trended move is there. And therefore, you must believe that till you get some kind of a signal, I think the market is ranged.
Okay, all right. What about individual stocks?
So I think Nifty IT is an index which is looking interesting to me. Infosys is one stock which was a buy a few days back as well. Now it's showing some continuations. So buy here with the stop at 1625. Look for a 1680, 1690 kind of a target over here. And have a sell on Jindal Steel and Power with a stop at about 910, 911 for targets of around 865.
Now, okay, got that. By the way, the move in pharma, we should maybe just look at it. Nifty Pharma Index per se, if you have a call or anything out there in terms of stocks, any view?
On the Nifty Pharma, my belief is that a lot of signs were positive. And I think, yesterday and today we've got some kind of a negative outlook. In fact, today I had a sell on Lupin. I think the Sun Pharma stock is also showing some kind of a negative trend. So I think pharma is just showing first signs of profit movement correction. If you look at the Nifty Pharma per se, I think the breakout should have happened about 22,100. We did get there on Thursday, but then we didn't close and close below that. Then the follow through is missing. So I think the bigger support is at 21,300. So I think it's a market which is between 21,300 and 22,100. And only if you get past 22,100, we'll turn positive again.
All right. Also, I wanted your view, Mitesh, on Mazagon Dock. That stock is up close to 4%, one of the top winners in the F&O basket. And also, I'm just looking at some probabilities with regard to the next MSCI inclusion. That will be announced in early August. The cutoff date will be in July. But for the time being, the street is anticipating that going by current calculations, Mazagon Dock could come in, which will lead to some MSCI flows. How is it looking at the charts, though?
Well, I think the stock went to about 3770 during the last week of May, and then went into correction. It's bouncing back, but I'm not sure of a trend reversal. Maybe it's a bounce back with some anticipative news which could take it to about 3470, 80. In case there is some actual good news, the upthrust could even extend about 3600, 3650, but I'm not sure of moves beyond that.
Got it. Okay, all right. Got that. Thanks a lot, Mitesh, for joining in. We'll come back to you for a fresh call in terms of the markets at around 3 p.m. today. But let's focus on Siemens. That stock is gaining on the back of a big order win. Vamakshi joins us to tell us why is it important for the company and with the further details. Vama?
Well, Nigel, Siemens Consortium has been awarded a contract. This is from the National High Speed Rail Corporation, and this is for the Mumbai-Ahmedabad bullet train project. The order is valued at 4,100 crores, and out of which Siemens limited share stands at 1,230 odd crores. Now, it is important to note that largely the news was known. It was published, in a report. It was declared as an L1 bidder a month ago, and the LOA came just a week ago. So largely it was known, but it was declared on the exchanges today. So therefore, we're seeing an uptick in the counter. The scope of work for Siemens includes providing design, installation, as well as long-term maintenance of advanced signaling and telecommunications tech. The project will be executed over a period of 54 months, and Siemens has a contract which is a maintenance service contract for the next 15 years for the same. So it's a big contract. Nevertheless, 1,230 crores for Siemens. The stock is certainly seeing an uptick today.
Okay, all right. Thanks a lot for that, Vamakshi. Well, Ashish Chaturmurtha, MD and Fund Manager PMS at JM Financial, joins us on the show. Hi, Ashish. Good afternoon. Good to speak to you after a while. What's your view on Siemens?
Good afternoon, Nigel. Thanks for having me on the show. So, Siemens obviously is a very big beneficiary of the entire capex cycle which we are witnessing. If you look at the gross fixed capital formation as a percentage of GDP, which is currently around 32%, is going to go to almost the peak of 2008 levels, which is close to 36. My sense is cements, obviously, into railways, into power, into a lot of high-end technologies, is going to be a biggest beneficiary of the trend change which is happening in the entire capex cycle. We firmly believe, and this is a stock we have been holding in our portfolios also for a reasonably long period of time. My sense is this is going to be very positive, and in the next couple of quarters, we expect the earning growth momentum to be very strong, not just for cements but also for players like Hitachi Energy, ABB, and we continue to hold this stock. And I think this looks quite positive as a news flow for the stock.
Ashish, good afternoon, and good to see you in your new avatar. Congratulations! I think we're speaking for the first time with you in this role. Is it time to be a little cautious overall markets? Ashish, what's the broader overlay?
Thank you, Prashant. So yes, I think a little caution is definitely advised, because when we are looking into the geopolitical instability which is there, plus there's a lot of tariff-related risk which is still hovering around us, and we have seen a very significant jump in the crude prices in the last couple of days. Although yes, Iran has almost a production of 3.4 million barrels per day. But if you look at the export numbers, it is close to 1.5 million barrels per day. Now, even if there is a risk, it might get hit to the extent of maybe 0.5 to 1 million barrel per day. So that has a limited impact of maybe 5 to 10 rupees jump in the crude prices. But if you see that in terms of the trade routes, if it gets impacted, then definitely crude has a significant upside risk. And if it happens, it can definitely impact the fiscal position we have to face. And with the kind of uncertainty we are dealing with, tariffs, with geopolitical risk, it looks like little, one should be a little cautious. At the same time, if you look at the small cap or mid cap, they are trading at good 20% premium to their 5-year, 10-year averages. So that comfort in terms of valuation is a little missing. So what we are advising, or what we are doing in our portfolios, is we are very, very selective in terms of our approach, where we are seeing very strong earning growth momentum going to get up in the next 2 years time frame. Those are the places where we have concentrated our position, rather than a very broad based kind of selection. So like, we are very positive on, we have been very constructive about defense for a reasonably long period of time. We continue to hold the position. We like CDMO as a great opportunity, because that's a space which is going to grow at 15-16%, and there are individual stock where the growth could be about 20-25% because of the strong capex these companies have done. So very selective opportunities is what we believe. But yes, at a broader level, some caution is required at current juncture.
All right. Thanks very much, Ashish, for that. Just coming back to you with a specific stock-specific question, really. This is a CNBC-TV18 exclusive, and this is something we've reported on in the past as well. My colleague Yash is joining in with what he's picking up with regards to the decision on expiry days for exchanges. Yash, tell us.
Well, Prashant, there's been so much discussion on this, right, in terms of whether Tuesday would be allotted to NSE as its weekly expiry day, or to BSE as its weekly expiry day. Remember, we had reported earlier as well that NSE had applied for Tuesday to be given as its expiry day, weekly expiry day by SEBI. After that, of course, SEBI came out with its consultation paper, and it has been talking to exchanges. But the fresh update that we've been given to understand is that the final regulations on who gets Tuesday and who gets Thursday as their weekly expiry day is expected to come out today itself. SEBI is likely to have made a final decision in terms of whether to give Tuesday to NSE or BSE as its expiry date, and this holds a significant importance. We've discussed this in the past as well, in terms of how Tuesday becomes a lot more beneficial as an expiry day to exchanges. But of course, the big story is that SEBI is expected to come out with final regulations today. NSE has applied it before, and we had reported on May 22nd that SEBI was in the process of considering NSE's request in terms of allotting it Tuesday as its expiry day. The final call, nevertheless, is expected to be taken today.
All right, Yash, you're going to have a late evening, looks like. Thanks a lot for joining in and giving us that information with regard to that exclusive. Ashish, what do you make of this? BSE has defied gravity. If I look at it in the last 6 months, 1 year, 2 years, 2.5 years as well, it didn't move for a long period. And the last 3 years, it's made people very, very rich. It's already corrected 10% from the top. But if in case they don't get the Tuesday that they currently have, and if it's shifted to Thursday, that could result in some market share loss. What is your view on the stock in the backdrop that it's not trading cheap at all?
Yes. So on a trailing basis, yes, Nigel, it's trading at 82 PE multiple. We have been riding this trend for a very, very long time. In fact, couple of days back, we finally decided to take an exit in BSE. The reason being because there is a lot of uncertainty with regards to this expiry day, and I think it will definitely impact BSE in case if the Tuesday expiry business goes to NSE. Already we have seen very significant drop in terms of the volume, in terms of the overall average daily turnover numbers have come down for BSE. And in case if Tuesday expiry goes to NSE, then we think that the market share loss can happen to BSE, which has gained almost double-digit market gain in the entire derivatives market. So if that happens, then definitely some shorter-term correction could not be ruled out in BSE.
Okay, all right. Got that, Ashish. I wanted to ask you about a couple of metal stocks, but first up, let's update our viewers with regard to the news flow on Hindustan Zinc. They finally announced the phase 1 of their growth capex, where it plans to expand the refined zinc capacity by around 250,000 tons per annum. This along with matching mining capacities, which is targeted to be completed within 3 years from today. And in fact, the total capex that they've earmarked for this is around 12,000 crores odd. And they've mentioned that all of this will be funded via a mix of internal accruals as well as on debt. Let's tell you a little bit more. Now, the rationale for the capacity expansion is likely to see, because we're likely to see a big growth in zinc consumption, which will be driven by strong demand in steel as well as infrastructure projects. Now, post the completion of the phase 1, capex that they've lined out, the total refined metal capacity will move to around 1.379 million tons. And the refined silver capacity will move to around 830 tons per annum. Phase 2, that will take the full refined metal capacity to double to around 2 million tons, while the silver capacity will move from this 800 tons odd to around 1,500 tons. Now, why is this positive? It's positive because Hindustan Zinc delivered a refined metal volume CAGR of sub 2% over the last 10 years. And it's already operating close to around peak capacity utilization levels. So because they have announced this capex, it will provide some kind of visibility with regard to growth from FY28 onwards. But the problem is that the stock is trading expensive. It's at around 10 times on a forward EV upon EBITDA basis. And also there's always that fear, right? When the stock is trading expensive, you have two large players in there, two large holders of the stock. Vedanta, which is its parent, as well as the government of India. They could look at paring stake at these elevated valuations. So the big expansion has been announced. The problem is the stock is not cheap and there's always that supply overhang. What do you make of it, Ashish? Hindustan Zinc, a view on the stock? It's a very volatile one. It goes up 5 to 8% in a single trading session, comes down as well with the equivalent velocity. But your view on it, and what would your take be if you want to play Hindustan Zinc? You rather play Vedanta, more liquid, it's got the demerger trigger as well, and valuation much cheaper.
So metal is always a very tricky place, Nigel, you know that, because of the volatility which we see in terms of whether the raw material prices or eventually the realizations. And that always keep us on a tool whether we want to have a metal exposure. And if we really want to have a metal exposure, then we would like to have someone as an integrated play where they have good control on the mining assets, and along with that they are doing some value addition. That's the reason, at this point of time we don't have exposure to Hindustan Zinc. But yes, one thing is for sure, if we look at Hindustan Zinc currently, it's giving a dividend yield of close to 6%. It's trading on a forward basis of 10 times 11 times EV EBITDA. If you look at in terms of earning growth, we expect that the Zinc's volume growth is going to be very good, and because the rising silver prices is also a very good positive trigger for Hindustan Zinc. If you look at from a stock perspective, stock has underperformed the entire metal basket in the last cycle. So keeping this in mind, my thought is the downside is limited. Maybe a tactical bet on upside could not be ruled out, where the stock can reach to almost 12 to 13 times EV/EBITDA, which might give a decent 30% kind of upside from 25 to 30% kind of upside from current levels. But I would think it as more as a tactical bet. What we have been holding on the metal as a space is Lloyd Metals for a reasonably long period of time, because this is a stock where we have got very strong mining assets, plus the realizations has been continuously going up. So that's a bet we have been holding in our portfolios. Hindustan Zinc, from a tactical perspective, looks interesting.
Got it. Okay, all right. Lloyd Metal is something that you like, and in fact, the other Lloyd Group stock as well, which is Lloyd Engineering, they are the ones that will be involved in that capacity expansion for Lloyd Metals as well. So maybe keep an eye out on that one as well. Thanks a lot, Ashish. To speak to you, we look forward to chatting up with you more often. For the time being, we slip into a short break, but on the other side, we have Rajesh Kothari, who's waiting for us.
Okay, welcome back. Markets, of course, down 100 points, but they've been holding on in that position for a while without too much of a recovery or additional sell-off as well. Rajesh Kothari is now with us of Alpha Accurate Advisors. Rajesh, good to have you with us here as always. Thank you very much for your time. Just before you came, Rajesh, this news came again. For the nth time, I think, Trump is going to impose pharma tariffs. Pharma tariffs are coming soon. But, but whenever I've asked all these conferences, we had the Morgan conference, BofA, and the global analysts were here. And I remember asking all of them whether the sectoral tariffs are coming. And all of them actually said yes, because they are under a different section or whatever. So, I mean, they are going to be imposed on a variety of things, and pharma is one of them. Any thoughts on the space, Rajesh?
See, basically, you are absolutely right. So when you think from the US perspective, from president perspective, he is comparing the US pricing of the products compared to the patented products in the Europe region, be it Germany, be it France, or any other country. And there is a huge gap in this, correct? Because the pricing in US, that products are significantly higher than the same products in the European markets. And therefore, this entire concept of tariff. So, tariff is not on the generics or only keeping in mind India. It is more to do with the global countries in which these similar products are available to their citizens. And that's where this tariff is going to come to make sure there is a level playing field. Now, coming to India specific, we are more into generics market, correct? And here there is significant amount of, I would say, capacity consolidation has happened over last 5-10 years. Because the competition was intense and there was a huge pricing pressure. So there is no significant capacity addition by any major countries. In fact, if you look at the number of sites, they've actually reduced in last 10 years. So I'm not too much worried about as far as Indian pharma companies goes in terms of our generic pricing, in the US market. So let's assume hypothetically, there is about, say, 10% price increase from the Indian company's perspective. Surely it will not be 100% will be absorbed by Indian company. It might be one third. Like if you speak with any of the textile company in India, they also say the similar thing. 1/3 is to be borne by the consumer. 1/3 is to be borne by the US player, the particular manufacturer, the brand, and 1/3 might be absorbed by the Indian companies. Now, of this 1/3 which is to be consumed by the Indian companies, there is basically roughly about, say, 200-300 bips kind of an impact on the US business. To offset that, of course, there are again levers to be used. Can there be some product mix changes? Possible. Can there be cost reduction programs? Possible. Can there be more kind of a raw material related cost benefits? Possible. So net impact is not going to be significant. There will be some impact surely. Maybe 2-3% plus minus EPS is possible. But I don't see a significant major damage to the Indian pharma companies because of this Trump tariff.
Hi, Rajesh. Good afternoon. Good to see you in. It's been a while since we spoke. Hi. Rajesh, I wanted to ask you about another theme. That's the tech pack. If we plot the distance of various indices away from its recent high, well, the tech pack is still a distance away. That's because of the uncertainty on Trump, the argument that maybe in the next year or so, the growth is going to be still very anemic as well. And valuations are not particularly cheap to some part of the street. But that index has been actually the best performer in the last 4-5 trading sessions. Even today, it's doing quite well. How are you all placed on tech and what do you like?
Well, I think you have summarized it well, that, this entire tech pack is, first of all, it is more linked to the US economic growth. It means you need to predict the US inflation. It means you need to predict the US BFSI and non-BFSI total technology spend. And of course, that picture is right now not much brighter. Now, there is a hope that second half is going to be better compared to what we are seeing in first half. But increasingly, even this second half is not going to be so bright spot. It is going to be from probably, poor, it will go to average. It is not going to be good. There is a hope that FY27 is going to be good. So there are a lot of, I would say, assumptions which are getting built in. Having said that, for Indian IT companies, the valuations, people look at from the dividend yield perspective, the free cash flow yield perspective, because they throw huge cash flow. And therefore, that acts as a downside support. So I would say it is going to be very, very narrow band. If you ask my personal view, we are not too much excited. We are a little bit underweight on this theme. Not too underweight because of some valuation cushion is always there. And as and when US enters into the printing cycle again or interest rate reversal cycle again, that's where the US economy growth will bounce back. And that's where IT spend will also, to a certain extent, bounce back. But if you look at the last 10 years, the top mega companies, IT companies growth, be it a earnings growth or be it a revenue growth or be it a market cap kind of thing, it's around 10-12%. So these are like 10-12% stories as far as large cap goes. So we are focusing a little bit on the tier 2 players where there is a more visibility. They are working more on AI, they are working more on cloud, the new technologies, and there is some M&A which has already happened in the last 2-3 years. And therefore those companies probably can grow at 15, 17, 18%, which is definitely much better than 10-11% growth, what the top 2-3 companies offers. So nothing to be too much excited about. Yes, I understand last 4 days they are performing, because you must remember that before that they underperformed, because before that there was something else which outperformed. So this weekly performance keep changing, but nothing much to I would say to get bull about it as on now basis. We'll keep reviewing.
Again, as you were coming on, Rajesh, we just got the news that CG Power has got an order, transformer order. That's a space that you've been very bullish on. I mean, I think Hitachi has been one of your top ideas there, and it's done very, very well. I think there was a note on, again, in the industrial space, Schneider from one of the brokers this morning, something we've been highlighting. Anything new there, or holding on to the same set of names which have done well?
I think nothing much new to talk about. I think this entire space looks quite exciting. It is a much more, I would say, 4 or 5 year thematic in terms of the tailwinds which are going to support you. So look at in this market, what you need is you can't predict this Israel, Iran, and all that stuff, and Donald Trump daily Twitter. Very difficult to position your portfolio on these tweets. But what is more important, therefore, you increasingly look for that your short term, medium term, and long term. 1 year, 3 and 5 year, the theme should be in your favor. The tailwind should be in your favor, because you cannot swim against it. Am I right? And therefore, this entire space, particularly renewable energy, the transformer-related space, the HVDC technology-related space, a metro capital expenditure-related space, this entire EMS space. So these are the very few, I would say, sweet pockets where the tailwinds are going to support you. The growth is going to support you. Of course, there can be quarterly volatility, but otherwise, the growth is going to support you. And that's where probably, at least we are positioned from the portfolio perspective. So capital goods is one thing which we like, and specialty chemical, which I've been saying from last 2-3 months, is another thing where we have increased. We are almost like 0% weightage a few quarters back, and from 0 we are back to 9-10% in last 2 quarters or so. So these are the 3 C's what we like. Capital goods, chemicals, and consumer discretionary. So these are the three C's. What we like from the portfolio perspective.
You added Swiggy lately, right, Rajesh?
Yeah, we would not like to disclose, but yes, you are right. We added Swiggy. It's a very small weightage. It's not a huge weight.
Okay.
And the primary reason, because we believe that one of the competitor in quick commerce, unlisted player, is probably getting more discipline over the next 12 months. And if that happens, then clearly, the profitability will improve, which is the biggest, most important thing to track for in such business models. And if profitability improves, the yield improves, and if that improves, the entire, your numbers will change over the next 2-3 years. So, that's the reason we added this name in our portfolio.
Okay, all right. Thanks a lot, Rajesh, for joining in and filling us in with your take on the individual sectors as well as on the market themes. Well, by the way, before we slip into a short break, just keep an eye out on Vishal Mega Mart. There was a mega deal that took place today. The demand was extremely strong, and the stock all through the trading session has been that one that you wanted to buy on the dip. So from the time it was down close to 10%, now Vishal Mega Mart has made a mega move into the green after that mega block deal. So keep an eye out on that stock. Well, we'll slip into a short break, but as always, we'll tell you what's going on in dealing rooms in our special segment, D Street Chatter. Mitesh as well will be back to give us a buy or a sell call. Stay with us. Welcome back. Well, as promised, let's get to Nimesh, who's standing by to tell us what is he picking up in terms of D Street chatter. Well, Nimesh, the problem today is the broader markets. They have come in for a bit of a knock, though the headline index still appears to be pretty much in a range.
Yeah. So, Nigel, again, I guess it's more to do with the fact that there is so much of noise on the global front as far as the geopolitical risk is concerned. So that's going to have an impact on sentiment, at least in the near term. But do remember, today's fall is not backed by very large, institutional selling. So the volumes are on the lower side, is what I understand. Flows are mixed, but watch out for a large, the number may look large today because of the large Vishal megawatt block deal. I understand the almost 70-80% of the book was bid by domestic mutual funds. At least 3 or 4 large domestic mutual funds were anchor investors in that Vishal megawatt block. So the DI number could look very large today on the back of that large block. From a sector point of view, pharma has seen a bit of profit booking today on the back of that Trump tweet on potential tariffs. So that's having an impact on some of the pharma names today. But again, it's not backed by very large delivery selling, is what I understand. Technically, 24,800 is a first crucial support to watch out for. If they are taken out, then 24,400, 450 is the next level. But broadly, I guess today's fall is on low volumes. And also, as I said earlier, the DI number may look large because of that large Vishal megawatt block.
Okay, let's get to individual stocks then. Nimesh, what are you picking up today in terms of individual counters?
So the first stock on my list today is Keynes Technologies. I've been tracking this for a while now. We knew about the promoter block. That's done. And now I understand the QIP is very much around the corner. The company has actually confirmed to us that they are going to raise funds via QIP. I guess it's a 1,600 crore QIP, which might get open today, tomorrow. And there's a very strong demand is what I get a sense of. So Keynes is the first stock on my list on a potential QIP. Second stock is MGL, Mahanagar Gas. That's been buzzing in trade, one of the big F&O gainers today. Well, there was a Nomura upgrade in the morning, but essentially this move today is backed by very strong FI buying as well. So expect high delivery volumes, and there is a bit of interest back in MGL. The third couple of stocks where there has been delivery-based buying in the last couple of days, KDDL and RHI Magnesita. Actually, KDDL was up to almost 18-20% yesterday on very large volumes. I understand one domestic mutual fund has been accumulating both KDDL and RHI in the last couple of days. And the last one is Ogro Capital. Again, while the stock has been consolidating of late, I understand there could be a corporate development very soon. A potential inorganic move by the company is something which the street is anticipating. So watch out for that in Ogro Capital.
Okay, all right, Nimesh, thanks very much for that. So that's basically stocks on Nimesh's radar. We'll keep an eye out on as well. Well, I think Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Yeah. So on the BTSC side, I think on the short-term trade side, I have a STVT that's on JSL. It's just breaking below its averages. Last 3-4 days, the stock has been striking the downside, so we'll take a tight stop at 694. Look for 680 to about 678 kind of a target. And Kotak Bank can be a BTST with a stop at about 21.25 for target to 21.60.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on another stock, a beaten, battered down stock. Zee Entertainment. From the peaks, its stock corrected to a sub 100 rupees. And earlier this year, you had the promoter entry that came in there and, chipped in there with some purchases from the open market. Yesterday, there was a big board meet and they are talking about pumping some money into the company. Interesting times. Vamakshi, fill us in with the details.
Absolutely interesting times for Zee Entertainment. Nothing short of entertainment when it comes to this, stock. The board has gone ahead and approved issuance of almost 17 crores fully convertible warrants to promoter group entities. The issue price for the warrant is at 130 rupees, which when we compare it to the closing price yesterday is at a discount of almost 4.5%. The promoters are looking to invest 2,237 crores in the company, and because of that, their shareholding is expected to rise to over 18% from 4% now. This in turn shows promoter intent, which is why this is a positive development for the company. In fact, Motilal Oswal believes that the promoter funding is largely being driven by recovery of dues of SL Group, which is somewhere around 600 odd crores. This investment from the promoters in terms of warrants could lead to an equity dilution as well, assuming all the warrants get converted into equity. 15% equity dilution can be expected. As far as the cash position for the company is concerned, nearly 25% of the issue price is expected to be paid upfront. Therefore, the company will receive 560 crores, taking their cash balance on an immediate basis to approximately 2,965 crores. So therefore, they're sitting on very strong cash. But the question then arises, what was the need to go ahead with the equity dilution? In fact, last year as well, in July 2024, the board had given an order to raise almost 2,000 crores via FCCBs, and only the first tranche of which is around 200 crores, was withdrawn. So therefore, that question does arise. But apart from that, what the street also needs clarity on is the utilization of funds. Now, of course, the board has gone ahead and given us a brief or a qualitative roadmap, but capital allocation is an important factor that the street will be looking out for as far as the entertainment is concerned.
Okay, all right. Thanks a lot for that, Vamakshi. So various question marks are there. A positive sign, but why do they need their money when they already have cash in their books? Will they convert it? Because you have an 18-month horizon now. And that explains why the stock, after seeing a big rally in the last few trading sessions, it's coming from profit taking. In fact, it's 3% off the high point of the day. Some uncertainties, with regard to how will this be done, and promoter funding as well. For the time being, stock more or less flattish. But Jay Bal of Cash Secures joins us on the show. Hi Jay, how are you feeling about the markets? The last 1 month or so, we have absolutely gone nowhere, which is not such a bad outcome, because globally things have become so uncertain. Where are we headed though?
That's right, Nigel. When the markets go sideways after the move, that's a consolidation. Now, the fact that the markets went up vertically from April to May, and then it's going sideways, it's a bullish consolidation. So there is little doubt over there. But with the short term, what is not completely clear is that did the Friday's low complete the short-term consolidation, bullish consolidation, or is there one more lower low? If the markets don't go below 24,300 support, I think the market could rally straight away above the June 11th high, and then rally much quicker to the all-time highs. But if the support of 24,300 were given, the market would drop to about 23,500, and then once again, the path to 29,000 from a 6 to 12 months perspective. In both these cases, in my opinion, remains intact.
Got that. In terms of just get the stocks out of the way, and then we'll get into other stuff which is moving around. Jay, what are your trades?
I have two positional calls, Prashant. The first is on ABB, again from the capital goods space, where I'm quite bullish. ABB has already broken out, but the pullback recently is a bullish consolidation. So I don't think that the stock is likely to drop below 51.90. I'm anticipating the stock to cross somewhere about 7,400, if not, retest the all-time high. So now I'm being conservative. I'll assume it's going to be just a corrective rally to 7,400. The second stock is a conditional trade on TCS. If the sector rotation that's been happening in the markets is likely to spill into the IT sector, which is currently seeing a bounce already. If it is more than just a counter-trend bounce, I think TCS would be the candidate. About 35.50, TCS would complete an inverse head and shoulders pattern, and a stop loss of 33.50 would be essential, and that will lift the entire IT sector. So wait for the stock to close above 35.50. That will only then it will complete the inverse head and shoulders pattern. Until that, the pattern is complete. If the stock were to drop below 33.50 before 35.50, then this setup is invalid.
All right, Jay, the most talked about asset class in the last few sessions because of the geopolitical tensions has been crude. I think you had called out, right, that crude is likely to bounce from the recent lows. It's at around $74 per barrel mark. Where is it headed? Where does resistance come in at? And also the other asset classes, dollar index. In uncertain times, you normally see the dollar index strengthen, which actually this time around hasn't happened. Where is that asset class headed?
Yeah, crude. We've been pointing out for crude to complete a double bottom and rise to $78 per barrel, and that's exactly the high it registered yesterday. And I think that in the current run-up, the run-up of crude is done. I don't anticipate it to exceed the January high of 80.77, and I'm anticipating it to retest the April low. So if the January high value exceed, then it'll signal that there's a major uptrend already underway. And we've spoken about this in my personal visit to CNBC studios. That from our 12 months to 18 months perspective, I'm anticipating crude to rally to about $170. So that will signal that it's already underway. I don't anticipate that to be the case. I'm anticipating one more retest of the April lows. When it comes to the dollar index, the long-term supports are about 96.5, 95.5. There's a reasonable possibility that the low it registered a couple of days ago, that could be a low. Still, evidence is pending. If that is the case, I'm anticipating the dollar index will rally to somewhere about 103, 104 as a short-term bounce.
Okay. I got that. So near term, Jay, on oil, on Brent, what's the view?
Near term, if you are very aggressive, you can place a stop above $78 and go short. It's a very aggressive trade, not for conservative trades. I'm anticipating a retest of $55 from a 6 to 8 weeks time frame. Time frame is slightly approximate. So I think the rise due to geopolitical tensions, that's done for the moment. So there is a pullback coming through for Brent. It may or may not break the $55, but it's proceeding towards that direction. We'll have more evidence as the commodity progresses.
Okay, 6 to 8 weeks in the 50s zone, basically, broadly, right?
Yeah.
And if that has to happen, then all this has to cool down. I mean, the actual real conflict also has to cool off. That's maybe another way to look at it. Jay, stay with us. We're going to take a quick commercial break here. Markets are still down by that much. Silver on MCX has hit a record high, and that's the latest. Silver, by the way, quietly posted a strong breakout, I think a week and a half back. And now silver prices are moving up to new record levels. We'll take a break, but maybe we can just quickly now also highlight US President Trump's latest post on Truth Social. This is, I'm assuming this is, should we take a break? I think we'll take a break and then we'll come back and then get you some of what he has posted lately, I guess, on his flight from Canada back to Washington, D.C. Stay tuned. Okay, welcome back. 6 minutes and 30 seconds to go for market close. US President Trump, of course, has kept himself busy even on his way back from the G7 meeting in Canada back to Washington. And, a flurry of messages. This one, of course, coming in on Truth Social, the social media platform, is saying, and I'm quoting, "I have not reached out to Iran for peace talks in any way, shape or form. This is just more highly fabricated fake news. If they want to talk," presumably he's talking about, of course, Iran, "they know how to reach me. They should have taken the deal that was on the table, would have saved a lot of lives." So that's what is coming through from President Trump. But of course, he said so much. It's, of course, very difficult to gauge what he's really going to do. Also, I mean, hear what he had to say while sort of getting off Air Force One after sort of leaving early from that G7 summit.
You just posted right before we took off that you're not leaving because of a ceasefire. Why are you? Can you elaborate?
Looking at better than ceasefire. We're not looking for a ceasefire. I didn't say I was looking for a ceasefire. That was Emmanuel, nice guy, but he doesn't get it right too often. But we're looking for better than a ceasefire.
What's yours only to get into this war? You're not going to involve the U.S. at this stage. You're going to do anything more for Israel right now?
Do pretty well. Right now, we're doing pretty well. Remember, Iran cannot have a nuclear weapon. It's very simple. We don't have to go too deep into it. They just can't have a nuclear weapon.
Well, what is thinking on the call for Tehran to evacuate? Is there a threat or is there incoming? What was the thing around?
I want people to be safe. And that's always possible. Thing like that could happen. I just want people to be safe. Is there any new concern about U.S. troops or assets in the region at all? Should I rate people that know how to protect themselves? When you say better, we'll come down so hard if they do anything to our beat. We'll come down so hard that the gloves are off so beautifully. Now, I think they know that to touch our troops.
Are you sending the vice?
Yeah, I'm not kidding.
Do you plan to send the vice president and Steve Witkoff? There's reports that you want to send the vice president and Steve Witkoff to meet with the Iranians and have discussions. Is that something you're considering?
Not sure yet. I may. Depends on what happens when I get back. What specifically is better than a ceasefire? What are you looking for here? An end. A real end, not a ceasefire. An end. Is there something that will be permanent? Yeah, or giving up entirely. Is this okay too?
President Trump also signaling a new direction on trade, hinting at the possibility of sector-specific tariffs. Here he's sort of talking about pharma, perhaps, the next one which could get these tariffs from the U.S.
We're going to be doing pharmaceuticals very soon. It's going to bring all the companies back into America. All of them are focusing on. It's going to bring most of them back in, at least partially back in.
Jay, I mean, if you're a trader in the West, and you are a trader in the West, actually, you're in London, somebody would have invented some algo or something, right, to track all these comments, because he's the main mover.
That's right. That's right. I mean, see, the impact. I trade the Nasdaq quite frequently. In fact, I do it every day, and I do it on the 1 minute time frame. So the impact of his comments don't last beyond a few hours. So if you are such a micro trader, you need to have an algo, and they do tend to have a material impact. But I'm sure some algo traders have developed such trades. But the trend is supreme. Even in that 1 minute time frame, if you are having a higher time frame objective from a 15 minutes time frame, it still doesn't have major impact. The comments tend to have an effect in the direction of that trend. So there are algos that's running and they're working, and they try to fade after a few hours.
So, what is that? Taco.
That's right.
Yeah. Taco markets, taco traders.
Yeah. Taco and Mako.
What is Mako?
Musk also chicken soda.
Okay. Is that one? I didn't know that. Okay. Anything else on your macro dashboard which warrants attention? We talked about oil. Yeah. Anything else?
The most important thing is the US 10-year yields, Prashant, and that's been stuck in a range. And it's stuck between 410 bips and 466 bips until I'm watching for a breakout on either direction. And there have been specific comments that the bond market would crack and things like that. So watch 466 on the higher side. That'll signal a crack. If it were to break below 410 on the US 10-year yields, that'll signal bullish bond market and bearish yields.
Okay, all right. Stay with us, Jay. I think, post-market as well on Markets Forward, we have a few questions for you. But let's wind down trade then. Before we do that, actually, just pull up Vishal Mega Mart. Incredible move is what we have seen. The large trade took place at a sharp discount. And from there, it's recovered more than 10% from the low point of the day. So Vishal Mega Mart is the stock of the day, actually. 10% equity changing hands. And the street believes that this is a cleared out trade and things will move ahead from here on. Big demand out there. But in terms of the Nifty, we ended with a cut of around 100 points. Adani Enterprises, that stock was under pressure. Dr. Reddy's as well was lower in trade in today's trading session. Tata Motors continues to see selling. Even yesterday, it was one of the top losers. Today as well, goes home with a cut. What did well? Tech. Tech's been the space to hide. Tech Mahindra, Infosys, both of them did do well. TCS as well was up close to 0.5%. We have seen some very large trades on Asian Paints in the last few trading sessions. But that one, post those large trades, it appears it's prepared to move ahead. What did well from the broader markets? Plenty. Federal Mogul Gods, stock up close to 12%. Sterlite Technology, stock up more than 10%. Happiest Minds, stock up 10% in today's trading session. Yet Supreme Petro as well, not a name we discuss very often, but that stock as well was up close to around 5%. In the last few trading sessions, it's been rallying quite well. So there are a lot of gainers from the broader markets. And Hitachi Energy, one would say it was expensive at 10,000, then at around 15,000. Well, in today's trading session, it was at around 18,500 odd. So plenty of winners actually from the broader markets, Prashant.
Absolutely. And as you said, lots and lots of movers coming through. Hindustan, some of the losers, Hindustan Zinc, Shipping Corporation, Jubilant Engraver, R Power, DB Realty, Hindustan Copper, Tilak Nagar, Prince Pipe, Aster DM. So yeah, enough action both sides. So very much a two-way market coming through. There's the flash at the bottom of the screen. I'm not sure whether this is coming from sources to see. Okay, this is sources to CNBC, and that flash disappeared. But anyway, 24,838 is where the Nifty is at, about 108 points lower, 0.4% down. Nifty Bank down about 230 points, 55,714 coming through as well. I think now we are finally putting this out. Sources to CNBC-TV18, NSE likely to have got the SEBI approval for Tuesday expiry, right at 3:30 after markets shut. That news coming through. We put out, of course, the story earlier, a couple hours back, that circular from SEBI is going to be coming out today. And of course, now sources are telling us that NSE is likely to have, NSE had applied, they wanted Tuesday, and they likely have gotten it. This is all source-based information until, of course, it's official in that SEBI circular. So this, in a way, confirms what we put out on the 22nd of May, which is the fact that NSE has applied for Tuesday, and that SEBI is actively considering NSE's request. So more on this with our colleague Yash Jain, who's been on top of the story. We'll take a quick commercial break here. Markets Forward with all the action in just a bit.
Market ends in the red amidst US President Donald Trump tariff threats and ongoing tensions in West Asia. Market closes at the day's low, with Nifty ending below 25,000. Meanwhile, all sectoral indices close in the red except IT and defense. Promoters of Vishal Mega Mart offloaded 20% stake through block deal for about 9,900 crore rupees, bringing their stake down to near 55%. Private investor and promoter Kedara and partners PE rack in the mall. Zee Entertainment has proposed the issue of a near 17 crore warrants to the promoters at a price of 132 rupees per share. The warrants, once converted within 18 months, will up the promoter stake to over 18% from current 4%.
You're watching us here on Markets Forward. This is your go-to show where we aim to get you all the key data points to gear up for the next trading session while we wrap up today's trading session as well. And today's day was on the downside. We saw, recovery in yesterday's trading session, but today it was a 93-point downtick that we saw on the Nifty, led lower by the Nifty Bank as well as Reliance. The one sector that did well today was the IT pack, so that supported the Nifty at lower levels, and as a result of which we did not see a big gash. The Nifty still held on to the 20-day moving average. The problem point was the broader markets. We had 1,800 stocks declining for about 800 stocks which were advancing, and that's something that we need to monitor at a time where there is a fair amount of global uncertainty. The question that one asks is that post, the RBI policy up move that we saw in the markets, are we back into that range that we were looking at? I'm Mangalam Malu, with me, Vinny Motiwala. Hi, Vinny.
Hi, Mangalam. So, yes, it's been a very interesting day, right? We've been in that range as well, what you're talking about right now. It's not managed to go below 24,800 in terms of a level there today. And on the higher end, we maintained the 24,000, around the 24,982 mark was the day's highest point. But then we again saw that fall coming in, but just around that range. So, nothing interesting that happened. Broader end of the markets, obviously, like you mentioned, that also saw a bit of an underperformance today. Pharma, that was something that extended its decline further on in the day as well and almost ended the trading session with down of almost 2% cut, is what we could say, 1.9% to be precise. So that's to watch out for in the trading session. And other than that, what was lagging was also the metals pack. So that also is something that was not doing well in the trading session. But here's an exciting lineup for you all on the show today. So what we'll start with is going to be the top movers and shakers of the day with Vivek, and then move on to some of the stocks which were in focus today. Vishal Mega Mart was buzzing in trade, and this came in after a large block deal that took place there. Zee Entertainment also witnessed an uptick after receiving board's approval for issuance of convertible warrants. Schneider Electric was buzzing in trade after a rating upgrade came in for the stock. Also, we will talk about, the key events to watch out for as well. But let's move on and get started with our first segment for the day. Vivek is joining in with us from the big world to tell us the top movers and shakers for the day. Vivek, over to you.
Well, thank you so much for that. Like you mentioned at the start of the show, a day where you actually saw the declines outpacing the advances, and a slightly muted session when you look at it in that particular manner. What did well? Well, the entire IT pack managed to do quite well in the session today. Most of the IT stocks ended with gains, especially the mid-cap IT continued to outperform, although most of the stocks gave quite a bit of the gains, especially in the second half of the trading session. One stock, from the broader end of the markets that did quite well, Tanla Platform, you did see a buyback announcement come in that particular name. So Tanla Platform was one particular stock that did quite well in the broader end of the market, cooled off a little bit towards the end of the session, like the rest of the market. Happiest Minds, this particular stock was the top gainer as far as the NSE 500 was concerned, stood out clearly on very strong volumes, over 10% higher, and Anand Rathi initiating coverage note 2, aiding the rally as far as Happiest Mind was concerned. Siemens, one stock from the capital goods space that managed to end with gains of over 1.5%. A company as part of a consortium won a contract, this is for a bullet train from the National High Speed Rail Corporation. And Navin Fluorine, this particular stock from the chemical pack doing very well. A slew of upgrades. Yesterday, I did see an upgrade from Morgan Stanley, a whole host of positive brokerage notes aiding the rally as far as Navin Fluorine was concerned. On the other hand, quite a few stocks, that did see selling pressure as well. You have to talk about the entire pharma pack. All of the stocks tanked, and this is after US President Donald Trump indicated to reporters that there could be tariffs for the entire pharma pack coming in quite soon. Also look at a name like Shipping Corporation of India on strong volumes, this particular stock amongst the top NSE laggard, and along with this, a whole host of consumer durable names, all of them did see selling pressure emerge, especially in the second half or in the later half of the trading session today.
All right, Vivek, thanks a lot for that. So that's about the individual stocks that were buzzing around in today's trading session. But let's focus once back on the market. We have our guests joining us as well. Jay Bala of cashthechaos.com joins in, and alongside that we do have Amrish Baliga as well. Thanks a lot, gentlemen, for joining in. For the market, Jay, chartically, we're back in the range. You're bullish. When do we get the breakout, and what really leads that breakout?
There's a reasonable possibility, Mangalam, that Friday's low marked the end of the correction. But it's not a hands-down setup. But in the event that markets were to break below the 24,300 support, which is slightly below the Friday's low, I think a slightly deeper pullback to about 23,500 is possible. But in either of those cases, the markets are headed for 29,000, in my opinion, from a 6-12 months perspective. Where does the breakout occur? If the markets were to take out the 11th June high. And for this, either Reliance, SBI, or TCS needs to provide the lift. So watch out. Any breakout on one of these three stocks is likely to result in the Nifty crossing the June 11th high.
All right, Jay, just as market closed, there was important breaking news that came in as well, and which is the fact that the NSE may have gotten the nod from the SEBI for the expiry to shift from Thursday to Tuesday. Yash joins in with more. Yash earlier told us that this was a possibility, and a couple of weeks later, it looks like it is fructifying. Yash.
So, Mangalam, I'll just give a couple of dates on which we had reported the story. This was on May 22nd that we had informed our viewers that NSE, the National Stock Exchange, has applied to receive Tuesday as its expiry day, and SEBI is considering NSE's request to grant the exchange Tuesday as its expiry day. At that time, no decision was, of course, made, but it was under consideration. 15th June was the last day to submit the applications on SEBI's consultation paper. And today morning itself, we reported that a final decision on which exchange gets Tuesday and which exchange gets Thursday as its expiry is expected today itself. My sources tell me that that particular regulation, the circular, has indeed been communicated so far to the exchanges. It hasn't been uploaded on SEBI's website yet, which will soon happen. But sources tell me that NSE has indeed received Tuesday as its expiry day, which means that BSE will have to work with Thursday as its expiry day. Now, at the end of it, both of them have one day in the week as their expiry day. But these 2 days make a lot of difference because there is fear as far as the street is concerned that if BSE does not receive Tuesday, or whichever exchange receives Tuesday, will be able to attract more volumes, will be able to attract more market share when it comes to the trading volume on expiry day. This is the significance of the 2 days, that is Tuesday and Thursday, as expiry days. But indeed, as of now, the big news, and of course courtesy sources, is that Tuesday as the expiry day has been approved for NSE, which means Thursday will go to BSE.
Okay, Yash, Tuesday is going to NSE as of now. Thursdays will go to BSE. Amrish, what's your take coming in on this one as well? Yash mentioned 22nd of May when we first reported the story of this coming in as well. And that day we had seen BSE see a fall also in terms after the announcement or more in terms of the story. So what is your outlook now for BSE that you have?
No, because of this, again, I think there'll be a decent amount of shift of volumes, and NSE could in fact gain because of the Tuesday expiry. And this would be negative for BSE. So we had seen a decent move in BSE in the last couple of months. I think there could be some reversal now.
What was interesting, Amrish, is there were a bunch of brokerages which did say that BSE's market share in options hasn't grown as much over the last couple of weeks or so, and more so now the belief is that there could be more downside when it comes to market share if the expiry was to move from Thursday to Tuesday. Some of them pinned that amount to almost 300 basis points of market share loss. The stock already has seen a correction from close to 3,000 to about 2,600 rupees. How much do you think would be in the price a 300 basis points market share erosion? Would that be priced in with a 10-11% market price fall, or do you think there is more on the downside?
I think there could be some more on the downside. I mean, I'll not be surprised. I mean, after this news, if in case we see another possibly 7 to 8% more fall in BSE.
And Jay, chartically, how does the stock look? Because it had seen a one-way rally. Then there was a mild dip when Yash first reported that story way back in late May. And that it was quickly bought into. It's just the last few trading sessions where the stock has seen a bit of a decline. What is your thought? Chartically, what are the important levels to watch out for BSE?
My thinking is that the stock has probably got one more higher highs to come through in the short term. And I don't think the decline that we're seeing is going to print 25.35. I think it will hold above that. And even if you try to print, the key level is 25.35 and 2400. As long as it stays above 2400, I would still believe that the stock has got one more high above 3000 to come through.
Okay, that's the view there coming in on BSE as of now, but we'll keep an eye out on more in terms of this coming.
Probably try and get some experts to comment in on this as well, and I'm sure our teams are having a conversation with the exchanges themselves, and we'll await the SEBI nod that will come by. So the BSE NSE story, extremely important, came immediately after market close.
Absolutely, immediately came after market close. But coming back to some of the announcements that came in during the market hours, the entertainment that gained, and this is coming in after the board has approved the issuance of nearly 17 crore fully convertible warrants. Vamakshi is joining in with us to give us details on this front. Vamakshi.
Well, Vinny, the board has given an approval for issuance of almost 17 crore fully convertible warrants to promoter group entities. Keep in mind that the issue price per warrant stood at 132 rupees. This is coming in at a 4.5% discount as to the closing price yesterday. The shareholders are looking to infuse around 2,237 crore in the company, and after that, their shareholding is expected to rise from 4% currently to over 18%. This would also result to equity dilution, because assuming all warrants get converted into equity, nearly 15% equity dilution can be expected. The company also has a very strong cash position. Keep in mind that 25% of issue price is expected to be paid upfront. They will be receiving 560 crore, taking their cash on books on an immediate basis to somewhere around 2,965 crores. And this brings a question in investors' mind: was the equity dilution needed? Because they, in addition to this, they also had an in-principle nod from the board to raise 2,000 crores via FCCBs, and only the first tranche of this was withdrawn of almost 200 crores. Broadly, they've given how they want to utilize the funds, but the capital allocation, specific quantum of this would be need to monitor.
All right, we will monitor that. Vamakshi, thanks a lot for that. So that's about Z Entertainment. Another stock which was doing well in an otherwise wobbly market, especially in the broader end of things, was Schneider Electric. It's got a rating boost, a double upgrade coming in from Goldman Sachs. Nimesh joins in with more on that one. Nimesh.
So now the stock is reacting on the back of a double upgrade from Goldman Sachs and Schneider. So they've upgraded the stock to a buy from sell, and they've raised the target price to 910. Now there are four key drivers for this upgrade according to the Goldman Sachs note. First and foremost, the increased TAM, which Goldman believes that it can go up to almost $14.5 billion by FY32 versus the current $9.6 billion. And also the market share for Schneider is likely to go up in the same period to almost 3.5% from current 2.9%. So that's the first big trigger. The second big trigger is the further expansion in the margins. So Goldman expects the margins to go up to almost 40% by FY32 versus the current margins of 38.5%. So that's going to improve the earnings as well. Third, the valuation is likely to catch up versus the peers like Hitachi on the back of this large order TAM as well as margin expansion. And fourth, the government support will mean additional revenue drivers for companies like Schneider. In fact, Goldman is expecting a 31% order inflow CAGR between FY25 to FY27 estimate. So on the back of a large TAM, a margin expansion, a double upgrade on Schneider to a buy now from Goldman Sachs, and they've raised the target price to 910.
Okay, a double upgrade that's come in for Schneider Electric from Goldman Sachs. Amrish, what is your view coming in for Schneider Electric? Do you see now there's a lot of value here, and valuation catch-up is something that we're watching out for?
Absolutely. I mean, with the sort of order flows which are there, and clearly it's expected that the market share will increase from that 2.9% to 3.3%. There'll be a margin expansion going ahead. So I think all this will add up to the valuation, which I think should move up. So the sort of target price which Goldman Sachs has given of 910, I think it's easily achievable. And in case we're talking of the next 18 to 24 months, I think it should be much, much higher than that.
Wow, that'll be much higher than that. That's the view coming in on Schneider Electric. Jay, do you have a technical view on Schneider Electric or any of the stocks from this industrial electric utility sort of space that does well?
I had a call on Schneider Electric on the 25th of May on CNBC-TV18, and I know the stock went up, limit up the next day, and I have a price objective of about 960 to 1,000. So very similar to what Ambrish is saying. I'm more bullish than Goldman Sachs.
All right, you are more bullish than them. Meanwhile, while we move on and we try and get a handle on what took place post the markets with regards to the SEBI news that is likely to come by, where we do have, we do understand from our sources, and Yash has spoken about this, that the BSE or rather the NSE will now get Tuesday expiry, the SEBI circular, which is likely to come by. We'll just get, the confirmation on that. Yes, we do have Mr. Sriram Krishnan, who's the Chief Business Development Officer at NSE, joining in. Thanks a lot, sir, for joining in. First up, sources tell us that the SEBI has issued this circular already, not on the website yet, but can you confirm that you have gotten the SEBI nod indeed for Tuesday expiry?
Hello?
Yes, sir.
Yeah, sorry.
So can you confirm whether you have gotten the nod from SEBI for Tuesday expiry?
I'm traveling right now, but, I can get back to you on this one. This is something that we had been waiting for, so it's quite possible. I'm outside the country right now.
Got that.
If you can give me a couple of minutes, maybe I can just check and come back to you.
Sure, our team will reach out to you in a couple of minutes as well. While you do the confirmations from there, we're also awaiting the nod coming in from the SEBI's website. But Mr. Krishnan, were this to happen, and consider this has happened on Tuesday, what could be the increase in market share on options volumes? Because over the last few quarters, we've seen you see a decline in your market share. Could you quantify how much beneficial it would be when it comes to your market share?
No, I think, it's important for us to understand what ecosystem wants to see from NSE. NSE has been a pioneer in equity derivatives, and, NSE contracts are deeply liquid and very preferred, even now. Even now, if you see on a Tuesday or on a Monday or even Friday, and we don't have an expiry, for example, our market share is still in the high 80s, and which goes to show how much the product is traded. So I think in the overall interest of the ecosystem, we had sought feedback, and the feedback was overwhelmingly in favor of having expiry on Monday, which we proposed. But then, given that the consultation paper came in, SEBI had requested us to keep that on hold and instead go by the consultation paper and the thought process which is set out therein, which we did. And given that Tuesday was the next best, closer to Monday, and we also had strong feedback from our ecosystem players that Tuesday would be a good day, if not Monday, to go with. We chose to apply for permission to go with Tuesday. Assuming that has come through, it's great news, and I think the ecosystem will immensely benefit from NSE contracts having Tuesday expiry.
So how much would that increase in market share be? I just want you could quantify that. If you could just give us a number on that front as well. What would the increase be if you're still holding majority over there?
Well, if I have to take a guess, this is going to be a little significant, although it's, we don't really look at market share as such as a market infrastructure institution.
Right.
But I think, with 3 days before the expiry, the ecosystem market participants will trade heavily, and therefore it could have a positive impact for NSE in terms of market share if one were to calculate it strictly, assuming we were like a commercial organization. But like I said, we don't really look at market share as such in that manner.
Right.
But overall, I think it will be a significant positive.
You know, there are two ways to look at it, Mr. Sriram Krishnan. You know, one part is that had there been two exchanges doing the expiry on the same day, then obviously there would be that nudge for capital and that nudge for market share. But now this is moving from Thursday to Tuesday, while the other days are now open for the other exchange to keep their expiry. So you're getting your exclusive day for expiry. Just by virtue of moving from Thursday to Tuesday, what changes? I mean, why is it that there could be higher volumes on a Tuesday than Thursday when the days are exclusive?
No, it's not higher volumes on Tuesday versus Thursday. See, as you know, the premium tends to go down towards zero as you progress towards the expiry date. And therefore, you know, it's what's important is where is the previous expiry in the week. So if the previous expiry in the week is Thursday, Friday onwards, people generally look at the next expiry that's coming up because premiums are going to be lower in that next expiry-oriented contract. And therefore, you know, it's logical that a lot of action can be seen on Friday, Monday, and Tuesday on the NSE contracts, a bit more than what is currently seen. That's all I'm trying to say. This is just a logical analysis and a logical perspective.
Mr. Krishnan, thank you so much for getting connected to CNBC TV18. You spoke about how Tuesday becomes, beneficial versus Thursday in that sense, and that's the logical conclusion. But there were also reports which spoke about how about 20% of the volumes could move away from Sensex, if NSE indeed gets Tuesday as its expiry. Fair to assume that most of that volume could come to NSE, and could you speak about the trading volumes itself? As far as Tuesday expiry is concerned, what is the kind of share that you have alongside BSE on these days with, BSE having it on Tuesday and you having it on, of course, Thursday?
No, if you see, the way the activity has been in the last many weeks, typically when it's our expiry day, we seem to have a market share of around 92 to 93% of the total premium on the expiry day. So it varies. Some days it's even 95, for example. If you even look at one day before the expiry day, we see similar market share even one day before the expiry day. If you look at even 2 days before the expiry day, typically it would be like this, assuming we have expiry on Tuesday. 2 days before expiry would be Friday, the previous Friday, which is just the first day of the new cycle for the exchange, which has the expiry on Thursday. So logically, 3 of the trading days would be beneficial to the exchange that has expiry on Tuesday. Again, this is pure logic, nothing else. And that's what we have seen as well play out in the last many weeks. And so if you flip it around and say that the NSE expiry is going to be on Tuesday henceforth, which is confirmed now. And if that's the case, then obviously this is a huge positive for NSE. And I think that's what the market ecosystem wanted to see. And we've received feedback in the past. We never changed our expiry day, although we had a chance to do so when the other exchange went from Friday to Tuesday. We never announced a change at that point in time. So the change that we wanted to make was to Monday. However, given the consultation paper and the developments post the consultation paper, we opted for Tuesday, which was also a suggestion and which I think has now come through.
We take that point entirely, Mr. Sriram Krishnan. Thank you so much for joining us at a short notice on your overseas travel as well. But what we'll do is we'll leave you for a bit to get confirmations and perhaps get the strategic outlook for this as well, with a promise that we'll reconnect with you and get an outlook on what the plan going forward is as well. For now, if assuming you've gotten this nod and this is a positive, congratulations to you and your team. With that, we've entirely run out of time on this edition of Markets Forward. Thank you so much for watching. Stay tuned to CNBC TV18. More news and updates continue.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Israel steps up attacks on Iran, bombs Iran's state-run media outlet during a live broadcast. Israeli military claims to have killed Iran's top military commander who took charge just days ago. Explosions rocked Tehran and Tel Aviv for the 5th day in a row. US President Donald Trump issues calls to immediately evacuate Tehran as he cuts short his G7 visit. Trump denies talks of a ceasefire, says he's working on something much bigger and wants a real end to the war. Adds Iran should give up nukes entirely. Indian students in Tehran relocated, says the External Affairs Ministry. Government advises all Indian nationals to move out of the city. Some Indians have left Iran through the border with Armenia. Prime Minister Modi all set to hold bilateral talks with Canada's Mark Carney at the sidelines of the G7 summit. The meeting comes after a period of strained relations triggered by Canada alleging India's involvement in the killing of a Sikh separatist in 2023. India has strongly rejected the charges. A late sell-off on Dalal Street as geopolitical tensions sink markets. Sensex and Nifty end at the low point of the day. Pharma stocks plunge after President Trump says tariffs are coming soon. Crude oil prices gain with Brent nearing the $75 mark. CNBC-TV18 exclusive confirmed. NSE tells CNBC-TV18 that SEBI has approved its request for Tuesday expiry. 5 days after the Air India plane crash, many grieving families still wait for the bodies of their loved ones as DNA matching continues. 144 bodies have been identified so far. Family members and friends bid an emotional farewell to Captain Sumit Sabharwal, the pilot of the ill-fated flight. Union Steel Secretary says government is plugging loopholes in import licenses to curb their misuse. Expect steel imports to decline sharply this financial year. Cab aggregators seek clarity on GST. Sources say industry wants same treatment for those working on commission model on apps like Ola and Uber with those working on SaaS model on apps like Rapido. All right, straight to news just coming in. NSE has confirmed to CNBC-TV18 that SEBI has accepted its demand. This is the big news that we are tracking, that it's accepted its proposal to allow FNO expiry on Tuesdays. Yes, Jen is here with more. Over to you.
Well, Archana, of course, the big news, as you pointed out, is that market regulator SEBI has approved Tuesday as the expiry day for National Stock Exchange or NSE. This is something where a lot of chatter has been going on over the last 1.5 months. Of course, we were the first ones on CNBC TV18 to report that was on May 22nd that NSE had submitted its application with market regulator SEBI. That was to seek an approval to get Tuesday as its expiry day. Of course, we had also reported that market regulator was considering NSE's request to grant the exchange Tuesday as the expiry day, but at that point of time, no final call had been taken from market regulator SEBI. That indeed has changed today, where market regulator SEBI has taken a final call approving Tuesday as the expiry day for the National Stock Exchange, which naturally means that Thursday becomes the expiry day for the Bombay Stock Exchange or BSE. Now, of course, if you go to look at it that way, these are just 2 days of the week where weekly expiries would happen. But both these 2 days hold a lot of significance for both exchanges. Analysts on the street believe that a lot of volume, significant amount of volume takes place on Tuesday when it comes to the expiry. And hence, the exchange which receives Tuesday as the expiry day tends to get traction of that volume and market share along with it. And of course, the exchange which gets Thursday, of course, does not get that traction because it gets consumed on the first expiry day, that is Tuesday itself. From that standpoint, of course, NSE tends to benefit with receiving Tuesday as the expiry day as against BSE. Of course, I was reading a report which spoke about how at least 20% of the Sensex options volume could migrate out of, Sensex or BSE, and majority of that could flow towards NSE as far as Tuesday expiry is concerned. This would mean that NSE could be helped as much as 5% increase when it comes to its market share in options contracts itself. So these are important numbers which will become beneficial for the National Stock Exchange. But this is the big story which is coming at this point of time. We are joined by two very important guests who've observed and followed this particular issue very closely, Mr. Rajesh Baheti as well as Gurmeet Chadha. Rajesh, to start this discussion with you, I mean, for our viewers, for investors, just explain to us in a nutshell, in a very simplified way, what is the significance, according to you, when it comes to Tuesday as an expiry over Thursday when it comes to these exchanges?
So if you recall, till some time ago, the BSE almost didn't have any market share in the derivatives segment. And then when BSE introduced a different expiry day from the NSE, they started getting some traction. But last November, SEBI designated that many of the weekly contracts we discontinued and that each exchange is allowed one contract. And now we are talking one expiry day per exchange. What happens then if NSE retains Thursday? Post the BSE expiry on Tuesday, there are basically 2 trading days that are available to the NSE today. Whereas if you move it to Tuesday and BSE goes to Thursday, then NSE gets 3 days to expiry, Friday, Monday, and Tuesday. So I think it's just to claw back the market share a little bit from the BSE. NSE might have told SEBI that it's lost out the most in terms of the reforms that SEBI has started. And BSE was nowhere in the picture till about a couple of years ago. And that it would only be fair if it got 3 days to expiry versus the BSE to be allowed to get 2 days to expiry. From the investor's point of view, honestly, not much change. From traders' point of view, for algos, there'll be a little bit of a problem because your backtest data will probably get a little jumbled up because you don't have any backtest for Tuesday expiries. Apart from that, I think over a period of time, NSE might claw back maybe 10 to 20% share, as you just said.
Okay. Gurmeet, coming to you, of course, Rajesh spoke about the fact how, there is an additional before the expiry that NSE gets with this particular change of getting Tuesday as its expiry day. In terms of numbers, what are you looking at that would come through in terms of options volume moving towards NSE as well as the market share moving towards NSE because of this important change?
Yeah, I think it is short-term important, as Rajesh also pointed out. So if you see, BSE average daily turnover was around 34 trillion. And with Tuesday expiry at the peak, it actually crossed 3-digit. In fact, almost was in 3-digit, almost 100, 104, 105, which led to significant gains in market share from, almost at a point of having no market share. And that was evident in the way the stock also went up. Just look at the stock price trajectory BSE had, in last few quarters. And I think if you see past few days, the way, and I always tell market probably knows it all. There was some hint of things changing. And now with NSE getting back Tuesday, I agree that in the short term there will be some changes in market share. Maybe they can claw back some of it. So so on the face of it, it's positive for NSE, but I would want to see a detailed announcement from SEBI and want to go level 2, level 3 in terms of nitty-gritties. Also, the majority of the F&O volume now is increasingly the algos are gaining more market share. The sophisticated hedge funds and long-short funds are obviously making hay while the retail traders, especially option writers, suffer. So I think it will be interesting to see what algos change. I think SEBI is also concerned in terms of heightened algo activities. So I would also look at that aspect as well. But right now, at the face of it, obviously looks like, on the margin positive for NSE.
Oh, that's certainly the case that we're hearing from the street. Of course, Dipan, before I come to you, let me just play a very short bite from Sriram Krishnan from the National Stock Exchange, who gave his first reaction to CNBC-TV18 right after the changes were announced. So let's just hear what he had to say in terms of movement of options, volumes and market share to NSE, how this could become beneficial for NSE, and of course, confirming that they've indeed received the communication from market regulators.
And so if you flip it around and say that the NSE expiry is going to be on Tuesday henceforth, which is confirmed now. And if that's the case, then Obviously, this is a huge positive for NSE. And I think that's what the market ecosystem wanted to see, and we've received feedback in the past.
Dipan, I want to come to you, and this is now with respect to BSE, which has received Thursday as the expiry day. Of course, both our guests did speak about how BSE has been experiencing a surge when it comes to the options volume. Its market share was steadily increasing. And that was, I mean, more than that was clearly reflected as far as the stock price and the valuations for BSE itself is concerned. Now, with this decision coming through, and of course now the market trying to understand the ramification and the impact of NSE receiving Tuesday as the expiry day, as far as BSE stock itself is concerned, which has seen a significant surge in the last 3 to 4 months, how do you view that position?
Yeah, good afternoon, and thank you for having me on your show. I think that whatever gains BSE had to make in the options trading and the connected related fees to it, I think all of that has got priced into the stock price, and it's trading at extremely rich valuations. I think 80 times trailing 12 month, and to an extent all the optimism in my opinion has got priced in. No doubt exchanges have a nice moat around them. They're difficult businesses to run, even more difficult to enter. But at the end of the day, cyclical businesses, and you cannot be paying such high valuation multiples for such businesses. And whenever NSE's IPO comes, I think that would be a more interesting investment proposition than BSE at this point of time. But for the time being, I think BSE's valuations are really daunting. They are highest compared to some of the other exchanges also. And in terms of growth rates, I think also it could have peaked out because there's only so much more options volume that can grow. So I would be a bit circumspect when it came to BSE Limited shares.
Correct. And you did speak about NSE's IPO. I'll come to that a little later. But just, Rajesh, to come to you, and this was surprising to me as well. If you read what BSE has put on its website, it says that the exchange expresses its intention to, of course, shift the expiry day from Tuesday to Thursday. And this is as per what BSE had sought from SEBI, which means BSE in the first place itself had sought Thursday as its expiry day. I mean, it sort of initially amazed me that why, if it's widely being understood that Tuesday would be more beneficial, in your sense, why would BSE in the first place seek Thursday as its expiry day?
I think because NSE was clear in its intention that it wanted to switch to Tuesday, and BSE didn't want to leave the door open for the other fledgling exchanges like the NCDEX or the MSCI to, come in case SEBI designated both the exchanges as Tuesday. That would leave the field wide open for new exchanges to come and introduce Thursday contracts. So the BSE understood that the writing was on the wall, and therefore it preemptively applied for Thursday. That's all I can think of.
Fair point, fair point. Gurmeet, to come to you, and I mean, the most interesting question as far as this discussion is concerned, NSE's IPO, I mean, it's more liquid than a listed company itself many listed companies that we have on the exchanges. Just about a month ago, it was trading at somewhere around 1650, 1700. It's gone all the way to about 2200, 2250. Now, with, of course, this falling in favor of NSE, what's the fate that you see for NSE's IPO and the valuations there?
No, I think it's been a big jump in NSE after, especially in last month, almost a 40% kind of a jump in unlisted prices, closer to 2250, 2300 now. But, I think some of it was getting priced in, yes, because there was already talks of different bites coming, that they want a Tuesday expiry, etc. Also, week-on-week data which came last week for BSE showed some dip on the week-of-week market share as well. But even NSE now, the market cap is almost 6 lakh crores. Now, if you take estimates, and I think even that's now it's valued above 50, 60 times. So, I just want to hear investors need to understand this is, it's a great business, as Deepan also said, but it is highly cyclical in nature. If you have one soft quarter, the volumes can dry up, and derivative volumes make up a significant part of the revenue. It may fluctuate from 60 to 80%, and then you derive charges out of it, and that number can widely vary. So there could be big fluctuation of what it's not like a bank NBFC where you can factor in a certain credit cost and name and work yourself way out. So, to pay 50, 60, 70 multiples on exchange over medium to long term doesn't look sustainable. Worldwide exchanges trade at 20, 25 times. India is a high growth market. You can give a 30, 40 multiple, but trading at 60, 80 times to me is a bit of a stretch. And I think that at some point of time, so the market will realize that the growth is as much it can happen. It's not a market which can, we can continue growing 40, 50% volumes, year after year.
Absolutely. I mean, of course, the comparison with global markets as far as exchanges is concerned, despite the growth which India provides, needs to come in place. One final question as we conclude this discussion to you, Dipan. Tomorrow, of course, if we look at BSE, the stock itself, it's moved, of course, in a significant fashion on the upside. But very recently, we've seen that it's lost also about 10% from its peak. Tomorrow, what's the first reaction as far as you expect BSE to have, the stock to have, on the back of this particular announcement?
No, I think some of the negative news was to an extent priced in. Knee-jerk would be a stock may trade a little bit lower, but it's not going to be a complete sell-off. I don't think so, because in a way, the liquidity also is quite tight in the counter. So I don't think it's going to be like a major correction, but I could be wrong. Trying to predict intraday or next day price movement is very difficult. And let's see, I think, how BSE also kind of takes what efforts they make to continue to grow their market share. They may certainly have a few aces up their sleeves as well.
All right. Thank you, Mr. Mehta, and thank you, Yash, and all our guests for weighing in on this big update that we are breaking on CNBC-TV18. SEBI has accepted NSE's proposal to allow FNO expiry on Tuesdays. This is the big update. On that note, we'll slip into a short break. News and updates continue right here when we return. Welcome back. Israel has stepped up its attacks on Iran as both long-standing enemies trade fire for the fifth straight day. A state-run media outlet was bombed in Tehran during a live broadcast. The news anchor had to flee the studio midway through the broadcast. The entire building was on fire after the attack. Multiple blasts rocked Tehran as Tel Aviv claimed to have air superiority over Iran. The Israeli military claimed to have killed Ali Shadmani, Iran's top military commander who took charge just days ago after his predecessor was killed in Israeli strikes. Iran launched a new wave of missile attacks. Tel Aviv said that most of them were intercepted, but some made an impact. Iranian media claimed that preparations were underway for what they call the largest and most intense missile attack on Israeli soil. Meanwhile, panic-stricken citizens have started fleeing the Iranian capital hours after Donald Trump issued an evacuate Tehran call. Long queues of vehicles were seen moving westward from Tehran. US President Donald Trump cut short his G7 visit. Speaking to reporters on board the Air Force One, Trump said that he was working on something better than a ceasefire and wanted a real end to the war, adding that Iran should give up entirely.
You just posted right before we took off that you're not leaving because of a ceasefire. Why are you? Can you elaborate?
Looking at better than ceasefire. We're not looking for a ceasefire. I didn't say I was looking for a ceasefire. That was Emmanuel, nice guy, but he doesn't get it right too often. But we're looking for better than a ceasefire.
What's yours only to get into this war? You're not going to follow the U.S. at this pops up. This state, you're going to do anything more for Israel right now?
Do pretty well. Right now, we're doing pretty well. Remember, Iran cannot have a nuclear weapon. It's very simple. We don't have to go too deep into it. They just can't have a nuclear weapon.
Well, what is he thinking on the call for Tehran to evacuate? Is there a threat or is there incoming? What was the thing around?
I want people to be safe. And that's always Mosul. Thing like that could happen. I just want people to be safe. Is there any new concern about U.S. troops for assets in the region at all? Should I rate people that know how to protect themselves? When you say better, we'll come down so hard if they do anything to our beat. We'll come down so hard that the gloves are off so beautifully. Now, I think they know that to touch our troops.
Are you sending the vice?
Yeah, I'm not kidding.
Do you plan to send the vice president and Steve Witkoff? There's reports that you want to send the vice president and Steve Witkoff to meet with the Iranians and have discussions. Is that something you're considering?
Not sure yet. I may. Depends on what happens when I get back. What specifically is better than a ceasefire? What are you looking for here? An end. A real end, not a ceasefire. An end. Is there something that will be permanent? Yeah, or giving up entirely. Is this okay too?
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
We are 6 months into 2025 and global gold prices have already surged nearly 30% so far. The yellow metal has outperformed traditional safe havens like the Japanese yen, Swiss franc and US treasuries. In India, the price has crossed 1 lakh rupees per 10 grams for the first time this year. The demand for gold has surged amid heightened global uncertainty and most recently due to the rising tensions between Iran and Israel. Prices have also been supported by global central bank purchases. As per a report by the European Central Bank, gold overtook euro as the world's second most important reserve asset last year. The central banks bought over 1,000 tons of gold for the third straight year in 2024, taking the total holdings to a huge 36,000 tons. Gold has accounted for 20% of global official reserves in 2024, while the US dollar remained the most important reserve with a 45% share. Hello and welcome to Commodity Champions. I'm Manisha Gupta, and over the next 30 minutes, we will throw the spotlight on the outlook for bullion as well as diamonds. Our very first guest is Shaukar Fan of World Gold Council. He's the head of Asia Pacific Division, except China, and also the global head for central banks for the council. Thank you so much for being with us, and straight to the gold and the kind of survey that you've done for 2025, Mr. Fan, where you have respondents as the global central banks. What are they really telling you? The kind of buying that we've seen in the last 3 years clearly has been on the record numbers, but is that expected to continue going forward?
Sure. Well, first of all, thank you very much and good afternoon. It's a pleasure to be here. I think that our survey, which was just released earlier today, points to continued bullishness and optimism toward gold among central banks. As you mentioned, central banks have been buying gold in very large quantity, over 1,000 tons per year in the last 3 years. And despite higher prices, we've seen central banks still continue to buy during the first few months of this year as well. What our survey points to is that optimism among central banks for gold is going to most likely continue. 43% of the survey respondents said that they have plans to add gold to their reserves in the coming 12 months. And then 95%, so almost all of the survey respondents, believe that central banks overall, as a group, will add more gold in the coming year.
But do you think that the quantum would continue to be so high? Because 1,000 tons is what we've seen in the last 3 years. For this year, is there any sense that you at World Gold Council are making, or anything that the survey throws at you?
That it would be a little bit harder to discern, I think, because one thing that we can measure in the survey is, of course, sentiment, attitude, bullishness, which is very strong in the survey. But what we don't measure, of course, is how much gold they might be buying. Now, we have respondents from all over the world in the survey. Some are big central banks, some are small central banks. But we don't know by design who said what in the survey. So therefore, we can't really extrapolate how much gold will be bought by central banks this year. Although the general view among my team in the World Gold Council is that central banks will continue to be net buyers and strong supporters of gold this year. We just don't know exactly how much they'll buy.
And what is the major reason that you see many of these central banks putting forth that they are adding so much gold to their reserves?
So one of the questions we ask in the survey is, if you hold gold, why do you hold gold? And we give them a bunch of factors and we ask them to say, is this a relevant factor or not for you? The top most relevant factor this year for central banks to hold gold was gold's performance during times of crisis. And you mentioned at the top of the segment about some of the things happening in the world right now. Honestly, in the last few years, it feels like the world has not really had a breather, from pandemics to wars to various different policy challenges and now trade challenges. I think central banks are navigating an increasingly uncertain and unstable world, and they're trying to seek ways to bring more resilience and more safety to their portfolios. And one way to do that is through gold.
We also do understand that when the global central banks start to buy gold, it is more a long-term thing. It is bought in a phased manner as well. So would you say it is safe to understand and estimate from your survey that this could go on for many more years to come?
I think there's certainly a lot more room for central banks, especially emerging market central banks, to add more gold to their reserves. On average, emerging market central banks only have maybe around 10% of their total reserves in gold. So there's more room for them to grow, especially as their reserves overall continue to grow. So although the survey doesn't ask, are you buying gold over a longer term horizon? I think you're right to say that central banks might have a buying program in place. They might have a target, and then they'll execute slowly toward that target until they reach it. So we might see some of these central banks continue to buy over time.
Mr. Fan, this is as per your understanding, because you've been in touch with many of these central banks as well. For the longest time, it was 400 to 500 tons that we would see many of these banks buy Suddenly, it's doubled at 1,000 tons. Do you see this, at the higher side of the range, or do you think the numbers can get better as we go ahead? Because we clearly are living in a lot of uncertainty now.
Uncertainty, I think, is the name of the game these days. But unfortunately, it's just impossible to say how much central banks might buy. Unlike other segments of gold demand, where you can roughly say, let's say, Indian jewelry demand, for instance, it might be some function of GDP growth in India that year, how the wedding season might play out. You might be able to discern how much gold will be bought. There are only about 150 central banks or so. So you're looking at 150 distinct, discrete operators that have their own visions of how they want to run their reserves, their own specific domestic and international challenges. It's very hard to say exactly what they'll do, let alone what they'll do as a group. But certainly the last 3 years have seen over 1,000 tons of buying, and that was probably sparked by all the additional geopolitical instability brought about by the Ukraine war, which started in 2022. With all this uncertainty still spiraling out there, I think that that's still supportive of central banks and their desire to diversify their reserve assets and seek safety in gold.
Would you say that the gold prices, the way they have moved, also impacts global central banks in sense of buying? Are they price sensitive at all? Because when we hit $3,500 an ounce, there was an expectation that the global central banks perhaps could slow their buying until the price is correct. Do you see that as a phenomenon at all?
So central banks, like all other investors, do have some price sensitivity, maybe less than the ordinary investor might. Generally speaking, how a central bank might approach this is they have a mandate from their leadership saying, I want to increase gold reserves from, let's say, 5 to 10%. Now, you and the reserve management team figure out the most cost-effective way to do it. In this background of gold prices rising, of course, central bank reserve managers still need to execute that mandate somehow. So during the first quarter of this year, as gold prices rose, we still saw central banks buying 244 tons of gold on a net basis. There was still a lot of demand among central banks. As gold prices move higher, of course, we'll have to see how central banks react to that. So short answer is they're not price insensitive, but they do have longer term targets which they have to fulfill.
Just to get that number right, 244 tons has been bought by banks in this year until now, until May?
No, just in Q1, so the first 3 months of the year.
First 3 months, the first quarter that is then. I also want to understand, while there was a lot of mentioned themes, the reasons that the central banks are buying, would you say de-dollarization is one of them?
So when we ask about de-dollarization outright in our survey, it actually doesn't get that many responses saying that that's a specific reason why central banks are buying gold. But if you look at some of the broader factors, like I mentioned, gold's performance during times of crisis, its ability to act as a diversifier, the fact that it has no political risk, you can certainly see that central banks are trying to navigate this much trickier political environment on top of a trickier financial market environment as well. So while I think that the majority of the respondents aren't actively trying to de-dollarize in a political sense, I think that they are trying to add more diversity and more resilience in their portfolios, and they're trying to seek that through gold.
How would you also, apart from the survey, how do you also see China constantly buying for many months now, barring a couple of months when we didn't see those numbers update? And the other one is India. After a big gap, India started buying in the last few years and has continued to add as well. How would you look at overall Asia when it comes to global central banks buying, and specifically China and India?
So Asia has been a center of central bank gold buying, and most of the, if not all of the gold that's being bought by central banks has come from emerging market countries, with a big chunk of that coming from countries in Asia specifically. So to go to your two specific central banks that you mentioned, the People's Bank of China has been buying gold now for the last few months. There was a brief pause, but they've returned to buying. Of course, in previous cycles where they bought gold, they would not announce any gold purchases for a while, and then in 1 month they would announce a very large increase in their gold holdings. So we'll see how it plays out with China. Of course, they have very, very big reserves. And even with this most recent buying, gold is still a relatively small proportion of their reserves. So definitely room to grow. With the RBI, with India, they have been buying consecutively now for a number of months, even I think stretching over a number of years now. And they've added quite a bit of gold to their reserves. And they've been consistent buyers. Now, of course, I can't speak for their exact strategy and what their motivations and their target is. But, the fact that they're continuing to buy gold means that they certainly see value in adding gold to their reserves.
With the kind of situation that we are into right now, geopolitics is one part of it, but we did see a lot of gold move around ahead of those tariffs and after that tariffs as well. How have you seen that impacted the overall global holdings in sense of gold?
So in terms of the physical movement of gold, of course, at the beginning of the year, we had that dislocation between London and New York as there was fears of tariffs being placed on gold, which turned out not to be the case. For central banks, the decision on where they store their gold is also a very important decision. As you can imagine, a very sensitive decision as well. We do ask that question in our central bank survey. In the Bank of England, so London is still the most popular location for central banks to store gold. But in this year's survey, we saw a pretty hefty increase in the number of respondents saying that they store gold domestically, so in their home country as well. And we've observed that trend over the past few years of central banks wanting to move gold away from certain markets and back to the home market, whether it's in response to geopolitical uncertainty, political risk in the country that might be holding the gold, or maybe some domestic concerns and domestic political pressure. We've seen the RBI, of course, move about 100 tons of gold back to India last year. So it's a theme that might be common, might be well understood by your viewers, but I think central banks around the world are also considering repatriation of gold too.
Oh, clearly that. Well, very, very interesting survey there and so many insights into that one, Mr. Fan. Thank you so much for joining in and taking us through that. Of course, this makes for a longer conversation, but we'll do that another time. For now, I really, really appreciate your time. And on that note, it's time for a short break as well. But don't go anywhere. We will be joined by two top Indian jewelers with their outlook on the other side of this break. Welcome back. You're watching Commodity Champions. Joining us now on the show is Saurabh Gadgil, his Managing Director and CEO at PNG Jewelers. Mr. Gadgil, I thank you so much for joining in. Well, we've been talking about gold prices and the way the global central banks buy gold. But when it comes to India, we've seen a bit of a decline when it comes to retail buying. The investment numbers still seem on the higher side. What has been your sense in this year until now?
Good afternoon, Manisha. Like rightly said, high prices have taken a little sheen off gold buying, especially festive buying, especially the big ticket items where budgets have been a constraint on people's mind. And that has led to a lot of people using old gold as a currency to buy new gold. Old gold today is almost 50% of the entire purchase of gold jewelry. But having said that, we have seen a little dampening in terms of heavy jewelry sales. And that's the reason why jewelers at PNG, we're doing two things. One is we're looking at trying to experiment with 18 karat gold jewelry, even a part of the wedding jewelry collection, and looking at the lightweight jewelry collections in 18 and 14 karat, which can be easy on the pocket and make this anytime buying or casual buying, impulse buying category, which is today fast growing, be more on that space, because prices today seem to be heading northwards, and people for the last 2 months were in a little wait and watch mode, and that has had an impact on the entire festive buying and big ticket items in gold jewelry.
Oh, well, absolutely. I do understand, Mr. Gadgil, that you also have come out with a new collection, keeping all of that in mind.
Yes, so we realize that there are three categories of jewelry buying. One is investment buying, which is gold bars and bullions. The second is the most important, the festive and the wedding season buying. And the third category we realize is this what we call as anytime gold buying, which is you're buying for your own self, for different occasions which are important for you. This is for working women. This is targeting women who want to just have some jewelry for going out for a coffee. It can be a party wear jewelry, and this anytime jewelry market we feel is growing at a very fast rate. This is a market where the ticket values are in the range of around 50,000, primarily gold studded, and both 14, 18 karat. And that's the market which we're entering into by a brand called Lifestyle by PNG, LS by PNG. It's a brand which we're launching in physical stores and also online. And by this weekend, this brand should be available online at lifestyle.com and also at all our PNG stores. We are confident that this category is something which will help us to push gold sales, push diamond sales, and target that customer which is not very price conscious, but which is more design conscious. So the focus here will be high on designs and light on prices. So the tagline also is lifestyle jewelry, light on pocket, but very seriously on fashion.
All right. High on design, on light on pocket is a good one there. Sort of another thing is that the online offering that you're making with this jewelry, is it going to be pan-India?
Yeah, online will be pan-India, and later on we'll also look at pan in a worldwide. So this will be completely omni-commerce. So the entire inventory in all the stores would be online. So people can browse online, buy offline, or they can even make the entire purchase online and get free shipping. So we are looking at both the options because we feel that this category, anytime jewelry shopping, will really click online, because this is something which is impulse, which is because you want to make yourself feel special. It's light budgets, so it's something which will definitely pick up online.
Saurabh, also with the way the gold prices have been moving and markets expanding, what really has been the sense for 2025 now? Because the first quarter wasn't so great, but going forward, would you say, as always is the case, post-August, when the festivities and the wedding season comes back, is when the sales will start picking up?
I think Q1 will be flat. If you look at, I think Q1 and Q4 would be looking at almost a flat or maybe a single-digit, growth. But like you're saying, Q2 is looking strong. Primarily 2-3 reasons. The month of Shravan starts in mid of July, followed that by Rakhi, Ganpati. So it will be a festive mode. Also, Q2 will be a time when people will be done with their June is normally a time when people take a break. School, colleges start. The focus is shifting more towards family. In again July, August, the focus will move to a festive mode. And most importantly, the price of 95,000, 1 lakh is something which was making people wait and watch. And now we're seeing that people somewhere are getting the feeling that gold prices don't seem to be coming down. And if we wait further longer, we'll end up buying at a still higher price. So people are entering the market slowly and steadily. So we feel that festive buying, wedding shopping would also commence by July, August. So overall, Q2 and Q3, I think, look bright, and prices should not be a dampener, is what we feel.
All right. Congratulations, Saurabh, on Lifestyle by P&G. And as you said, those designs and that collection will start coming in, start hitting us by this weekend. So we'll, of course, keep an eye out on that. Thank you so much for your time joining us. Well, with that, let's move ahead. And Varghese Alucas, Managing Director, Just Alucas, now joins us on the show with his sense on what really is happening in southern part of India with these high gold prices and what is jewelry as an industry looking at in sense of sales. Mr. Alucas, thank you for joining in. While, of course, the gold prices have been on the higher side and everybody is coming out with new launches, new designs and new schemes and offers and ways to clear the market. What is it that you see, first of all, in sense of gold prices, and how have the numbers been in this year until now?
Good afternoon, Manisha. So as you mentioned about the gold price, last 2 weeks there was a small correction, but again, 2 days back after this Iran-Israel conflict, again the gold price has gone up again, about 10,000 it has come. So almost it is above 1 lakh, and per gram it was around 9,000 and already come up. So more of the customers who are looking to buy jewelry are now doing the exchange of their old gold jewelry, which comes around, earlier was 50, now it has gone to 60%. And jewelers are trying to give more offers, promotions like 50% off in the making charge to make the customers to come back into the jewelry, even though there is a slowness because the prices are going up also in a time. But when the prices falls, then there is a slowness in the market, like thinking whether the price will further go down, but again goes up. So once this price have to get stabilized for customers to come in a previous ways, that is what we feel. Anyway, we are still looking for a better days to come after the June, July, during the school rainy season in South. Maybe things may be better when the time comes in August. And still the one who are looking to buy for immediate marriage functions are buying, but still then people are waiting for the price to get stabilized.
All right, that perhaps may take a longer time than expected. But Mr. Alucas, the other thing also is about, southern India, known for buying gold at whatever the price may be. Has that changed now, or is the high prices making South India also think?
Yeah, there are small changes has come. Like earlier, when people have some income, they used to buy jewelry. But now, because of the pricing, which is not stable, because if it is going high, it was okay. But sometimes the price goes down also. That is one where people thinking that this is not the right time. Maybe we can buy it later. But there are people who are buying coins or bullion bars for investment, which can be later on exchanged with the jewelry when they require to buy it. Like, so there are buying happening in coin or bullion bars, or the daily wear products have been sold. But most of the exchange policies are helping the customers to come back and exchange their old jewelry to the new jewelry. So that is one part people are now looking into rather than buying in a higher price. Also, jewelers are giving more promotions, offers for making the customers to come back. Even though there is less in sales, we are offering less making charges for the time being because the prices has gone up so high.
Oh, well, absolutely. A diamond is another area to look at, Mr. Alucas, because we've seen the Natural Diamond Council through various other natural diamond pushes happening within the country. Is diamond started to pick up now?
Yes, we are trying to convince the customers on the diamond jewelry when they were not able to buy such big gold jewelry. We prefer customers, why not you have a small diamond jewelry which can be used for occasions like party wear or wedding wear. So people, some of them are looking into natural diamonds or the real diamonds to have it as a small gifting jewelry or party wear. So people are now also looking into diamond jewelry where the gold are very less in volume, and there is diamond jewelry which has more shining in their product. So even platinum jewelry also is doing good nowadays. Apart from that, even silver jewelry is also been liked by customers who are looking to buy something from the jewelry as the prices, the gold prices have gone so high.
All right. So what is gold's loss perhaps is diamond, platinum and silver's gain. And as you said, 60% of what gold buying in sense of jewelry we're looking at is more exchange on that side of it. Mr. Varghese,
Yes.
thank you so much for joining in with a sense on what really is happening within the industry and what is retail really doing. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.
Hello and welcome to News Center. I'm Parikshit Luthra. Israel has stepped up its attacks on Iran as both long-standing enemies trade fire for the fifth straight day. What started off as Israel's surprise attack on Iran's nuclear facilities on Friday has since escalated into a full-fledged conflict. A state-run media outlet was bombed in Tehran during a live broadcast. The news anchor had to flee the studio midway. The broadcast, the entire building was on fire. Multiple blasts rocked Tehran as Tel Aviv claimed to have air superiority over Iran. The Israel military claimed to have killed Ali Shadmani, Iran's top military commander who took charge just a few days ago after his predecessor was killed in Israeli strikes. Iran launched a new wave of missile attacks. Tel Aviv said that most of them were intercepted, but some made an impact. Iranian media claimed that preparations were underway for what they called the largest and most intense missile attack on Israeli soil. Meanwhile, panic-stricken citizens have started fleeing the Iranian capital hours after Donald Trump issued a evacuate Tehran call. Long queues of vehicles were seen moving westward from Tehran. US President Donald Trump's cut short his G7 visit. Speaking to reporters on board the Air Force One, Trump said that he was working on something better than a ceasefire and wanted a real end to the war, adding that Iran should give up entirely.
You just posted right before we took off that you're not leaving because of a ceasefire. Why are you? Can you elaborate?
Looking at better than ceasefire. We're not looking for a ceasefire. I didn't say I was looking for a ceasefire. That was Emmanuel, nice guy, but he doesn't get it right too often. But we're looking for better than a ceasefire. What specifically is better than a ceasefire? What are you looking for here? An end, a real end, not a ceasefire. An end. Is there something that would be permanent? Yeah, or giving up entirely. Is this okay too?
The escalating conflict has led to concerns surrounding the safety of Indians in Israel and Iran. There are about 4,000 Indian nationals in Iran. Close to 50% of them are students. The Indian embassy has said that Indian students in Tehran have been moved out of the city for safety reasons. Other Indian residents have also been advised to move out of Iran's capital at the earliest. The government said that representatives of the Indian High Commission have facilitated the evacuation of some Indians to the border with Armenia. A 24/7 control room has also been set up to answer calls from families. And the Indian embassy has also set up an emergency hotline in Tehran for Indian nationals and students who want to approach for help. Many of the Indian students in Iran are from Jammu and Kashmir, studying in medical universities. And we're also speaking to a number of students who are there. Many of them have been moved to safe locations in Armenia. Joining us right now to speak more about the escalation in Iran and Israel is Faizan Nabi. He's an Indian student at Iran's Kerman University of Medical Sciences. Thank you for joining us, Faizan. Could you give us a sense of what is the situation where you are right now over the last few days?
If you tell me about Kerman was relatively peaceful. Rather, it is relatively peaceful if you compare it with the cities like Tehran, Shiraz. But as I can say, the fear, the uncertainty is still the same. If you talk about, with a student in Tehran or you talk with a student in Kerman, the certainty, the traumatization, it is still same. But yes, Kerman, our university was functional till 2 days ago. It was functional. Our exams were scheduled for today. It was on 17th of June, which means today. It was our first paper of final exam. But all the exams have been cancelled by the university authorities. Its notes was received by us the other day. And all the exams as of now stand cancelled till mid of October.
How are you being evacuated? Give us a sense of the kind of assistance the Indian embassy is providing.
Okay. Since day one, since this tension has arisen, it was, I guess, Friday morning. Since day one, embassy has been playing a key role in our evacuation and ensuring our safety. And they have issued the helpline numbers, emergency numbers on the day one itself. For now, the students who were in war zone areas like it was Tehran, Urmia, Shiraz, they have been relocated to safer places. And regarding Urmia, I just heard they have been taken to Armenia, through the Armenia border, because it was the nearest border to them. For students of universities which are located in Tehran, they have been taken to Qom. It's a religious place in northern Iran. They have been taken there for now. Maybe after 1 or 2 days, their relocation route or their evacuation route will be planned. For us students in Kerman, we have been said to pack our luggage and we may be relocated by tonight.
And what's the biggest fear of the students in the region, considering the very volatile situation? Can you give us a sense of the uncertainty and the fears the students are facing?
We could, in the first day, we could think this will die down in an hour or two, but to our surprise, it escalated so much that our parents started going to a press colony in Kashmir. They started talking to media. They are very frightful. They are very horrified. And that, I guess, that makes us horrified the most, because we get 10, 12 calls a day from our parents from home to ensure that we are safe, we have eaten anything. I guess that's the most fear that we are facing right now.
All right. Thank you, Faizan, for joining us. Let's also get in former Foreign Secretary Shashank. He's joining us exclusively on CNBC-TV18. Ambassador Shashank, considering that students have to be evacuated by road and the distance to Armenia from Tehran is about 1,000 kilometers by road, Turkmenistan would be another 700 or 750 kilometers. How difficult would this evacuation operation be for the Indian embassy?
Well, obviously, the initiative will have to be taken by the Indian embassy in Tehran, and also they will have to keep in touch with the other embassies, how they are evacuating their nationals, and the Iranian government as to what kind of routes they are facilitating and providing security cover to our people. Generally, I find that Armenia is a place for many of the students who are living closer to Armenia. They are being sent there. Others are being sent to places which are considered safe for the time being, like Qom. So perhaps they will be sent to these kind of places which do not have any military intelligence or nuclear kind of targets, so that they can gradually be evacuated from there. Right now, the warning seems to be more for Tehran and for other places which are being attacked by the Israeli defense forces.
So what is at stake for India? If you had to speak about the presence of the Indian diaspora in Iran, the presence of Indian businesses, Indian industry, some of the top corporate players in Iran, what would be our presence like?
I don't know exactly how many Indian businesses are still there. The embassy has perhaps said there are about 10,000 Indian nationals, including about 4,000 students. And so they are keeping in touch with them, trying to establish contact with as many Indians as possible. And I'm sure that in such situations, the Indian residents also form their own associations and representatives who can then keep in touch with the Indian missions. And I think the difficult situation is there. I'm quite sure that the Ministry of External Affairs and the embassy in Tehran would be doing its very best to ensure the safe evacuation for the Indian nationals. I think this place, for the time being, I think seems to be number one place seems to be Armenia, because then the evacuation can be undertaken from Armenia. I'm quite sure that other neighboring countries are also being spoken to see which will provide the safest route, because many of the airspaces in that area have been closed down. So one should not think in terms of moving to places which are rather complicated, which are difficult at this stage.
Right. We would also like to ask you about what's at stake for India if things deteriorate between Iran and Israel. Now, if Israel attacks further and the US, as it is being speculated, that they have this option of using bunker buster bombs to eliminate those underground nuclear facilities in Iran. If things come to that, what is going to be the impact on India, India's economy, and geopolitically, how are we going to be hit?
Well, so far it appeared that President Trump and President Putin were talking about bringing out some kind of an end to the conflict between Israel and Iran seemed to be sending some messages through the intermediaries like Qatar and Oman that they would be quite willing to have a negotiated settlement, but they would like that their attack on Israel should be the final one, because Israel started the attack, so they should be the ones to finish it off. Now, that was the situation till President Trump recently announced to the reporters that he would like to achieve something better than ceasefire. And he felt that the French president had got it all wrong, that the Americans would be trying only for ceasefire. Actually, he said that we would try something better than that. Now, whether that better thing would be accepted by the Iranians in the present stage, that is something difficult to see. Israelis have been asking for a long time the Americans to either give them or to directly attack with the bunker buster bombs, heavy bombs. Americans had not yet agreed. So I do not know whether it is something to persuade Iran to agree to what the Israelis are, because Israelis are afraid of their existence itself. Because IAEA apparently had come up with some reports recently that some enrichment of uranium had been done up to 80% and a few samples perhaps up to 90%. So therefore, knowing that even they, for example, the anchor at the Tehran broadcast studio was saying that death to Israel, death to Israel. So that has been the established position of Iranian leadership so far, that as soon as they get the nuclear bomb, they would like to destroy Israel. So Israel cannot wait for that kind of situation to arise. And I think that is the reason why they have decided to take preemptive action and make sure that Iran does not reach that stage of having a nuclear bomb. People are, of course, they are constantly bringing out the old interview given by Netanyahu, where he had said that these things cannot go together, terrorism-related approach and a nuclear bomb.
Ambassador, when it comes to balancing our relations, now we have very close diplomatic relations with Israel and many of our defense platforms. There is technology sharing there. Iran too, we have historical ties which have got downgraded over the years because of sanctions on Iran. What kind of balancing act does India need to play right now?
I think the first priority at this stage is not balancing, but it is to make sure the security of the Indian nationals in Iran and Israel. And if any other country comes into this conflict zone, to make sure of the security of the Indian nationals. So that becomes the first priority. Second one would be about the likelihood that, as the Iranians have said, that they might close the Gulf of Hormuz. So that's about 21-kilometer wide Gulf. If that gets stopped, then I think the supply of oil and gas to India would be affected severely. So that will have a great impact in the short run. Of course, long term, perhaps India will have to come up with some alternative sources of supply and alternative routes. The other thing is that, yes, we have a civilization relationship, that we had set up a strategic partnership trilaterally with Iran and Afghanistan. And USA had given special exemption to this trilateral partnership for use of Chabahar port. So India would very much like that this Chabahar port should continue to function, that we should have the other kind of linkages through to Central Asia, to Eastern Europe, through Iran. So we hope that whatever is taking place will not destroy the infrastructure which Iran and India have been using together. Now, as far as the directly targets of the Iranians are concerned, or what the Americans are saying, I think the approach has to be based on what the Iranians think would be their approach, and we have to wait for their decision in this regard.
Right. My final question, sir, if you can briefly tell us about Iran's ability to hit back. Now, Western experts and Israelis are saying that Iran's ability to hit back has been severely minimized and they can't continue fighting. Would you agree with that estimate and that prediction, or you believe that Iran does have an ability to use very advanced and serious weapons right now?
Well, I don't think Iran has directly any more serious weapons. It has been using its ballistic missiles, which are of very good quality. And I have a feeling that perhaps the Pakistanis wanted access to those ballistic missiles for use against India. And in return, they might have offered the nuclear control to Iran in case the battle between Iran and Israel turns toward the nuclear arena. But I feel that in the region, whether the Hamas, the Houthis, or the Hezbollahs, and that is what Israel has now decided, that, well, enough is enough. Now they would like to make sure that since Iran is now very close to the nuclear threshold, so they should now try to take the action so that they will not be troubled anymore. And hopefully all the Arab countries who are directly in that zone, they would come up together to bring about peaceful relations and some kind of a closure of this conflict between Iran and Israel. And I think USA and Russia should also be consulting each other, because anything going beyond a limit will hurt everybody's interest. India would get affected, but I'm quite sure that many of these other countries which are closer to the zone of conflict and the major power, the big powers, also will get affected.
Okay. All right. Thank you very much, Ambassador Shashank, for joining us with that view. That was the former Foreign Secretary Shashank speaking about Israel-Iran tensions and how this could impact India. Time for us to take a break, but news and updates continue on the other side. A CNBC TV18 news break has been confirmed. NSE has told CNBC TV18 that SEBI has accepted its proposal to allow weekly F&O expiry on Tuesdays. BSE will have the expiry on Thursdays. Yash Jain is here with more.
Well, the big news, of course, is that market regulator SEBI has approved Tuesday as the day of expiry for National Stock Exchange or NSE, which naturally means that BSE will be shifting its expiry day to Thursday. Of course, SEBI has made it very clear through its consultation paper and the final regulations that there would only be 2 days of expiry in every week. That would be Tuesday and Thursday. Now, if you want to talk about these 2 days, these are just 2 days of the week where 2 expiries would happen, Tuesday for NSE and Thursday for BSE. But both these 2 days, in the order that they appear, hold a lot of significance. People, of course, on the street, analysts expect that a significant portion of volumes when it comes to, expiry day trading comes on the first day of expiry, that is Tuesday, followed by, of course, the next day of expiry, which would be Thursday. Also, NSE would get 3 days before its expiry, which means it gets to sort of encapsulate events out of these 3 days before its expiry really turns up. BSE, on the other hand, gets only 2 days when it comes to capturing global events, capturing domestic events in terms of the prices and the expiry on Thursday. These are 2 straightaway important advantage when it comes to NSE getting Tuesday as its expiry day, and disadvantage, of course, on the other side, BSE getting Thursday as its expiry day. In terms of numbers, of course, there are reports and analysts which suggest that this could lead, as in NSE getting Tuesday as its expiry, could lead to a migration of as much as 20% of options volume away from Bombay Stock Exchange or BSE, and naturally most of those volumes could move to NSE. Also, this could help NSE gain market share in terms of options trading or expiry day trading by as much as 500 basis points. As far as MSCI, another exchange, is concerned, they will be sharing their expiry with NSE on Tuesday, but that's a very, very small exchange to begin with, and hardly any volume as far as that particular exchange itself is concerned. Important to note that BSE, in its confirmation on its website, says that they had sought Thursday as its expiry. Seems like there was a consensus between the 2 exchanges before SEBI actually could come out with its final regulations or the consultation paper, and both exchanges amicably decided to have Tuesday as NSE's expiry day and Thursday as BSE's expiry day.
All right, let's move on. Cab aggregators seek clarity on GST. Sources say industry wants same treatment for those working on commission model on apps like Ola and Uber with those working on SaaS models on apps like Rapido. Timsi Jaipuria gets us more.
Well, that's right. What sources are telling us is the fact that the government is evaluating proposal to clarify ambiguities in applicability of GST for cab aggregators. Industry has sought similar GST treatment for cab aggregators working on commission as on those which is being levied for the cab aggregators that are working on SaaS model. Just to remind our viewers, cab aggregators working on commission model are taxed at 12% GST with ITC or 5% without ITC per ride. Cab aggregators working on SaaS model are taxed at 18% GST on the one-time or the monthly or the daily fees that they charge to the drivers. So now what the issue over here is, what sources indicate that industry has written to Finance Ministry, and they say that there is a need for parity of GST for cab aggregators, as model may be different but final service is the same. Commission-based cab aggregators are losing market to SaaS-based model apps. The cab aggregators on SaaS model charge drivers 18% GST only once a day or a month, which makes rides much cheaper. Varying applicable GST rates leads to same service being cheaper, costlier basis who is providing the service. Just to remind our viewers here again, Ola, Uber, use commission-based model and charge 12% or 5% GST depending on the ITC treatment, whereas apps like Rapido, Namayatri work on SaaS model. They don't charge passengers GST at all. They only charge GST to the cab drivers for the daily or the monthly fees, which is very small quantum, and thus the 18%, which might sound larger, actually comes out to be a very minimalistic pay. So cab aggregators on SaaS model collect 18% GST from drivers only, and that is what is giving a tough time to cab aggregators who are working on the commission or per ride based model. Let's see what happens finally. Does Finance Ministry step into it and come up with clarity or not? Something that we'll have to wait and watch for.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Europe is starting to spend more on defense after a wake-up call from US President Donald Trump, who has been steadfast in demanding defense spending of at least 5% of GDP. Self-reliance is India's new war cry after Operation Sindoor, and India could be spending or deepening its ties with Russia, along with other nations as well. Sources say that the Indian government is actively considering Russia's Su-57 fighters to expand its fleet. There is no proposal to acquire the American F-35s, at least as of now. From Ukraine to West Asia to civil uprisings in Sudan, Congo, Ethiopia and several other African nations, this is the era of conflicts in many ways, and every country is looking to bolster its defense resources. Hello and welcome to our brand new series, the CNBC-TV18 Editors Playbook. Each week, our team of editors puts the spotlight on some of the most compelling events and stories that are playing out across the world, and we try and decode what these events could mean for all of us sitting here in India. I'm Surabhi Upadhyay, and with me, as always, editors Prashant. Of course, Nimesh is here with us. We have Sriram here with me in the Mumbai studios. And joining in, of course, is Parikshit from New Delhi. Gentlemen, it's a great conversation that we're having. And we are revisiting defense in a matter of, just 2-3 weeks, right? The first editor's playbook was on India's defense might and what we're doing because Operation Sindoor had just happened. And now we realize that, it's conflicts everywhere. And who knows? The latest headlines as we walked into this show is that Iran could be the latest flashpoint. So never a dull moment, Prashant.
Never a dull moment, guys. And glad that we're all together again, although we're missing Shireen.
Yeah.
But I think, if you think about it, is it so much about newer conflicts or is it preparing for potential conflicts? I think it is the latter, right? And I think that if you kind of go back, maybe take 2 steps back, that that preparation is coming because of this changed the potentially changed world order.
Call it offense budget, not defense budget.
Exactly. No, but where is it coming from? It's coming from the fact that US is withdrawn. US was always there as this, big daddy. Keeping order. Everybody stay in your own lane. And now America is saying, well, I want to mind my own business. So
you guys take
other NATO members, you
figure out your own way.
It's in a way free for all. So actually, in terms of newer conflicts, not so much, but it's just preparing for what may happen because you don't have that one single entity which was like the center of, all of this, which kind of kept order, which is not there.
And, contrary to what the big expectations were in the run-up to his inauguration, the 2 major flashpoints in the world, those 2 conflicts, there's no sign of a resolution, whether it's, Ukraine and Russia or even the Middle East. Whatever's happening with Israel and with,
upside of having a
Gaza.
bully in the room is only the bully can start a fight. So they can go to Iran when they want to, they can go to Afghanistan when they want to, but they won't let others. But now it's a free-for-all market.
No, absolutely. And, let me just set this up with a couple of points. And I think it's exactly, I'm just going to repeat pretty much what we're talking about, how US is now asking, and I thought, by the way, that US is only asking Europe. That security blanket which US provided for 50, 60 years, US weapon system placed and pointed towards Russia, but on European soil. But now, US is saying either you pay me for what the services I'm providing or you do your own stuff, right? And but it's not just Europe; it's countries in Asia as well. So there was a security conference, the Shangri-La Security Conference. Parikshit, of course, was covering that, and the US Defense Secretary has delivered pretty much a forceful call for Indo-Pacific allies to sharply increase their defense budgets. That 5% number of spend 5% of your GDP is not just for Europe; it's for Asian countries as well. So that same thing he's asked Asian countries, Indo-Pacific allies to do as well. Commit 5% of GDP to defense spending, and of course aim to counter a real and potentially imminent threat from China. That's the some would say the rivalry with Russia is a thing of the past. It's China, which is the conflict of the future in that sense. I just looked at numbers in terms of what Asia spent so far. Asia spent about 2% of GDP on defense on an average in 2024. And you're saying you add another 3% on top of it to a potentially larger GDP, hopefully. So you're talking about very, very large.
It has a vested interest in saying that, right? You increase the budget, where will you buy it from? It's either from US or Russia?
Hopefully not. We'll make it. But that will come to, right? But military, and again, military expenditure in East Asia, this part of the world, rose 8% in 2024. It was the biggest year-on-year increase since 2009. And it hit about $450 billion. But that is at 2%. Right? We're talking about 5% potentially. If this warning is this, if countries start to spend a lot more. And of course, there is the European thing. It's the same thing. Spend 5% as new spending target. there is a NATO summit which is coming up in the middle of June.
That's going to be very important.
And I think in that, they, some of these things will be finalized.
Yeah.
And again, there we're talking about if countries start to spend 5% instead of actually Europe spends even less than Asia, surprisingly. Yeah. But if they get to 5%, we're talking about almost 700-800 billion euros.
That's the irony of Europe, right? They get to call themselves like a very chill place, very developed, work-life balance, all kinds of progressive thoughts, because you don't have a defense budget. Yeah. You didn't have to have one for decades. Yeah. You could spend on, Autobahn.
Security blanket.
Correct.
Which, so I was looking at some numbers and data points. And I'll come to the rest of it later, but this is just a quick snippet before we get to Parikshit to understand what India's been doing. So India's defense spending today, and this is numbers as per the World Economic Forum and the Stockholm Institute for Peace Research. So according to that, our defense spending as of 2024 is more than Germany, it's more than the UK, and it's increased many-fold. In fact, if I could just...
one of the biggest military powers
so
by number.
I looked at the delta over the last decade in terms of how the top 5 or 6 spenders, how much are they spending more? So from 2014 to 2024, this is a percentage change that I'm just going to quickly throw out. For US, that increases 54%. For China, it's 72%. So US is still the largest, with $997 billion, roughly rounded off, is what they're doing. China comes in at number 2, $313 billion, and their spends in the last decade have gone up 72%. Russia's increase is also 76%. Germany has doubled its spend. In 2014, it was just about $44 billion. Now it's almost $88-89 billion. And then kind of we come in at roughly $86 billion. This is 2024 data. Of course, numbers for calendar year 25 would be very different, and 26 it'll be very different as well. Parikshit, in fact, talk about this and...
Surabhi, just one thing. US, you said US number 1, right? I think US outspends, if you add the next 9 combined, US outspends
absolutely.
them.
And the distance is so, we're talking almost $1 trillion, and the next is China at 320
that shows
billion.
Up everywhere, even in terms of the top market cap companies in the US, in terms of defense and all. It's all US.
And by the way,
in terms of spend, in terms of market cap,
saying we're not look after yourself. It's not as if that $900 billion is going to come down. It's only, if you look at what has been proposed, they're looking at significantly expanding defense spending. So that's the other thing.
Absolutely. But for us, of course, we've been taking big strides. And again, if I go back in time, again, same sort of resource that I looked at, the Stockholm International Peace Research Institute, in 2000 at the...
Expiry, right?
Yeah, it's easier. I don't know how many people would understand Expiry.
You've done that. You've done the hard work once.
It sounds like Shivli.
Exactly. So I was like, Expiry, people will not know what is the Expiry she's quoting. But anyway, at the turn of the millennium, in 2000, our defense spend, was a small trickle. It was about 14.5 billion. Now we're talking 86 to 87 billion. So we've come a long way in the last 2.5 decades, but there's a long distance to cover as well. So let me get to Parikshit, because Parikshit's the one that's been telling us. And Parikshit, we're so, we are being wooed by international powers. It feels good, right? The Americans want us, the Russians want to do business with us. Of course, we've been buying from the French as well. So what's the latest as we continue to build on our, our defense arsenal?
One thing is for certain, the defense budget has been increasing significantly year on year, and we are going to see a significant increase in the next year's budget as well, especially the capital acquisition part. But what is more important is how they will structure it. And the big focus right now of the government, according to sources, is to have domestic capabilities and capacities to have drones, combat drones, early warning systems, satellite imagery, and be ready for new age warfare. So this seems to be the big focus of the government on how to make sure that the private sector can buy technologies from abroad or develop them, collaborate with DRDO, and make these combat drone technologies in India itself. As far as the total procurement from the private sector goes and from the public sector, we're learning it could be in the range of 2 lakh crore in FY26 or even more. And it's in line with what had happened last year as well. You're very right that there are different countries wooing India right now. And Israel is one of them, which is leading right now. And they are looking to partner with many companies in the private sector in India to make domestically, because co-production, co-development is the focus for India. Now, let's start with the United States. US wants to sell F-35s to India. India has not really considered and is not looking at buying F-35s from the United States. And and this is probably because we have never got the kind of weapons platforms or the weapons package we wanted from the US. Russian Su-57s are being considered because Russia will offer you technology transfer. It's ready to make in India, and there is already an existing Su-30 line in Nasik. At the same time, we want to see whether a collaboration with Safran or Rolls-Royce for making fighter jet engines in India can be a reality as well. And both these companies are the only ones giving full technology transfer and IP transfer as well. Then you've got the AMCA program, the Advanced Medium Combat Aircraft, our own 5th generation fighter development program. And we've opened this up. Next week, a request for proposal would be issued. So there is a 3-pronged strategy that the government is implementing. Now, going back to the United States, we're looking at diversifying our military strengths across Russia, across Israel, France, Sweden, and the US. And for example, with the US, we are considering making and also buying Stryker land combat vehicles. We're thinking of buying more Javelin vehicles, Javelin missiles from the United States as well. But there is also a concern that many of the contracts that the US and India have had, such as Apache, Romeo, F-404 engines, all of them are running behind schedule. So there is a hope that while we will buy more from the US, hopefully all the defense contracts, the timelines will be honored in the months and years to come.
If you look at the last 30 years, all the wars that we've seen around the world, there are 2 trends that are very visible. One is nobody goes to war with an equal, right? It's only a weaker power gets bullied, and it's pretty much a sort of, a proxy war for something else that is at play. And the second trend is that even if it is a weaker power, A, it does not guarantee submission, B, the result is not what you desire. On paper, US could have thumped, Afghanistan or Vietnam or any other. Russia can, gobble up Ukraine in a day. Israel and Hamas are no match for, Hamas is no match for Israel. But the result is not exactly, it's not a walk in and win the war, right? Nobody storms into the capital and takes over. So that really makes me ask the question, is offense really the best form of defense anymore?
Defense is the best form of offense. Therefore, I turn it on its head.
So I have a point here. I think the deterrence, if at all, any, will come in 3 forms. Deterrence does not have 1 D. It works better with 3 Ds. Debt, demography, and diplomacy. Debt and demography are already in favor of deterrence. Most countries which can afford to go to war have more debt than national income. And most of them are aging societies. So if they want to increase their defense budget, the money has to come from somewhere. And it is coming out of healthcare, environment. Climate action is possibly more important now than ever before. You don't need to wait for China to come and bomb you or US to come and bomb you. The sun will do it. So in such a situation, if the money is going to be, and aging societies need more healthcare, not less of it. So debt and demography is already against war. It's an impediment to war, and it's going to be increasingly so in the coming years. Diplomacy is what is missing in an era of alpha males running governments everywhere. I think diplomacy, the art of diplomacy is required. Maybe the so-called global south can take the lead, form a new something like a non-aligned movement, build a coalition. I think a coalition. See, what is stopping China from taking over Taiwan? The only uncertainty is how is US react, right? Otherwise, Taiwan is no match. So such coalitions need to be built than building up defense arsenal or budget side. But Nimesh, I mean, with so much money that's flowing into defense, what are the valuations looking like? I mean, is there a bubble there?
So, okay, a bubble or no bubble, only time will tell. But let me put into context as to what defense is all about and what kind of market caps companies command and where India stands in that global setup, right? So first look at the top 5 big market cap companies in the world. 3 are from US, 2 are from France. Cap company in the world currently is General Atlantic. It commands a market cap of $270 billion. Wow. And guess what? We talk about bubbles at 50, 60, 70 times. G is trading at, on a 5-year average PE of 266 times, 288 times.
5-year forward PE?
5-year average PE.
Average, okay.
5-year average PE is 288 times, almost 300 times. So that's what GE commands currently right now. Okay, that's the biggest market cap company in the world.
Somebody at the peak of the pandemic said there's going to be a war.
So the second big company, again from US, is RTX Corp. That commands a market cap of $190 billion. Third is Boeing, commands a market cap of $164 billion, followed by Airbus from France, $150 billion. And Safran is the other France company which commands a market cap of close to $130 billion. So these are the top 5 in terms of market cap companies. Come to India now. The biggest company in the country right now in terms of market cap is HAL. It's commanding a market cap of $40 billion. So it's still 1/3 of what the 5th largest market cap company in the world is. Forget you're comparing to GEs of the world, but
it starts delivering on time, maybe it'll get a better premium.
Well, and it will, right? But again, at a $40 billion, it's still quoting at almost 20 times on 5-year average. It's not very expensive or like a bubble kind of a territory. So that's the first name. The second big stock within the defense in India is BEL. That commands a market cap of $33.5 billion. Then you follow Mazgaon Dock, Bharat Dynamics, Garden Reach, all between $4 to $16 billion. So as I said, the biggest company in India right now commands a market cap of $40 billion, which is compared to your
multiple
of 20 times on a 5-year average. So there is a lot of room
even the
for multiples to upgrade and even the market cap to go up. So it's not a bubble kind of a thing, so to speak. But I also talk about the top 5 most expensive companies in the defense space in terms of where they trade in terms of PE. Of course, GE I spoke about 288 times. There is a company called Aero Windrow. That is quoting at a valuation of close to 185 times. There is a company called Evic that is at 113 times. Then there is a company called AECC that is commanding that is trading at a multiple of close to 110 times. So there are companies in the defense space trading over 100 times to all the way up to 288 times, which GE is commanding. So as far as India is concerned, the problem is not with the HALs and BELs because they're going to get orders, they're going to go big, and they will expand the PE as well. The problem with a lot of the companies in India currently, Shriram, is there are a lot of smaller companies which are just talking about being into defense, but the contribution to defense is very minuscule. So from an investor point of view, one needs to be careful about the smaller defense
differentiating
names,
the wheat from the
using defense as
the thing is, if you I went onto the websites of a lot of the smaller companies. Yeah. Some are obscure, some are unlisted, some are listed. So the thing is that phrases like systems integrator, they become catchphrases, and you will find them.
Drones.
Supplier, key systems integrator, facilitator.
Comes and fixes the radar.
Yes, all that we're talking about.
They're being used very, very loosely as well, and that's where investors also need to be cautious.
When we spoke about drones and everything, Idea Forge got listed last year, and from there it's half.
Oh, okay.
It's half or more than half.
By the way, Idea for absolutely is
and it came at some crazy valuations, and then people realize, after a year.
Yeah. Nimesh, but from the last time we did our show,
it started going up after our last show.
Right.
So because I think they're now looking at getting into, so they got into civilian drones in a big way, but I think they're looking to get back into defense.
No. So I think what happened is after that, the Ukraine Trojan horse attack happened.
Yeah.
So the
and then they realized what is the power of
drones.
Yeah.
I think that's the difference.
By the way, I'll say one more thing. Nimesh's data on stocks, etc. Korean defense companies, for example, they are some of the best performing stocks in the world this year. I was looking. Companies like Hanwha, HANWHA. Yeah. There's Korea Aerospace, all listed companies. And I think there's one more. They're all up 150, 200%. So when we look at, stock performances in India and kind of, say, well, worry, you I think have a rally around
there are a
the
lot
world.
of global fund managers who look at global portfolios. They've started looking at defense companies globally, including India.
Yeah.
And they are looking at opportunities and where there is an opportunity to invest and which company is still trading at a decent multiple. I spoke to somebody who runs a very large EV, emerging market mandate, and he was like, "We missed out on the defense play in India. Now we're looking at very."
I spoke to Rajiv Jain, the largest FI in India, and he said, "Well, I missed out." I mean,
Right.
so
Everybody
you kind of.
So I think what the events of the last month and a half have done is that they have firmly established that defense in India, maybe not, that's always up for debate, but they firmly established that the defense sector in India is way beyond just being a market narrative.
Yeah.
It's real, it's here, it's growing, the direction is just up in terms of spends and the kind of business opportunity that's out there.
But like you said, the companies will also have to prove themselves.
That is true.
I mean, including HAL, even after this Operation Sindoor and all the narrative, we had the Indian Air Force chief coming again saying that there is a reliability problem.
Yes,
right? I mean,
and delivery is the issue.
Correct. And even if you want to buy from Russia or wherever.
But the delivery issue is not only because of HAL's problem. It's a problem of they not getting supplies from GE
I'm saying,
or the
end of the day, it's a supply chain.
So just to quickly also to talk about this, I get just some numbers to throw up again. So the domestic defense production in 2024, FY24 was 1.3 lakh crores. Which was a gigantic increase over the last couple of years. Now, the target is that from 1.3, we should move to at least 1.6 lakh crores this year in FY26. The export target for the current fiscal year is 30,000 crores. The last available number was around 21,000 crores. So, I mean, the exports are also moving higher, domestic, of course.
Yeah.
Right now, I think rough estimates, going by a lot of the reports that I read, 70% of our needs are being met domestically or with some of the co-production, a lot of the co-production that's happening, whether it is for, the Su-30s, etc. Going forward, the countries that are showing interest in buying from India, and I think that's the next piece of the opportunity. And again, I don't think that's something that's just up in the cloud. I think it's getting real, but which companies prove themselves is the critical question. So you have the Pinaka multi-barrel rocket system, Akash. I mean, it's become a big name on the global map, right, after Operation Sindoor. The Dornier aircraft, then there are, of course, the regular stuff, which is your radars, armored vehicles, artillery guns. Bharat Forge always talks about the opportunity that they're looking at in the international markets as well. And then simulators and, the avionics and the electronics opportunity. So it's there, but who will capitalize on it? Which will be the winners and the losers? I mean, the big marquee players, like you also said, BEL, HAL, Bharat Dynamics, that we know.
But the others.
Beyond that, who are the others?
I just want to bring in Parikshit. Parikshit, so Europe is going to spend a lot more. And when we speak with listed defense companies, we always ask, is there an opportunity where you can supply something? Export is an opportunity. Is there anything you've picked up, Parikshit, on that particular front? There is also the other angle, right? I mean, while we do business with everyone, but we're traditionally allies with Russia. And there is the big conflict is Russia-Ukraine. So is that a factor at all? I mean, do you hear anything on that front?
Well, India is definitely looking to become a big defense exporter in the world. So, for example, in the last fiscal, our defense exports were almost to the tune of 24,000 crores. We want to have 50,000 crore worth of defense exports from India by 2029 or 2030. So there are about around 70 to 80 countries where we import items to. This includes defense components and defense platforms also. What India is trying to do, one, is also showcase BrahMos to more nations. We're already offering and supplying BrahMos to some nations in South Asia. We're showcasing the Tejas aircraft quite heavily to countries in South Asia. And anybody who is interested, Africa would be one country where we would really like to increase our defense exports. But, a lot of this comes back to the fact that how much of these platforms is India also using? Because when you go abroad, you're always asked the question, how much of this is battle tested? And that's why when we saw indigenous missile systems, air defense systems like Akash being used very heavily, that somehow has improved India's image, so to say, as a defense supplier. And the government believes that in the months and years to come, there will be more inquiries to that effect. But this is probably one reason why we're focusing a lot on indigenization and improving the capability of our defense equipment, is because whenever you go abroad, every country or armed force would ask you how much of this is being used by your own armed forces, how much of this is being tested in combat. And now many of our air defense systems have been used quite extensively during Operation Sindoor, and we saw that as part of the air defense shield. But the big factor for India and I'm going to say this again because we're going to see a greater push for this in the next few months would be on drones, on new age warfare, how much of that capability that we can develop here in India. And even listed entities, companies that are going to benefit are those who can deliver on those contracts in shorter timelines. We're going to see a defense acquisition procedure rules being revised. Expedited licensing procedures will be brought in. So companies which can deliver on high technology platforms in shorter periods, can get technology from abroad, can co-develop and manufacture in India, they are the ones who are likely to gain.
And Parishad, you're not talking about the smaller drones, right? What you're talking about is like what do you call Predator program, Raptor drones. Those things which can stay up in the air for.
We would need both.
Those both, okay.
We would not need both. We would need high stealth drones as well, which are drones like suicide drones, or drones which we can use to carry out deep strikes.
That was one of the most effective ones during the Sindoor one.
Yeah, and you would also need swarm drones. We saw swarm drones being used between India and Pakistan. You've seen their use in Ukraine, Russia as well. Yeah. You will need those low-cost drones which you can use in large quantities in any kind of warfare situation.
With that, it's curtains on this edition of Editor's Playbook. From all of us here, thank you very much for watching. See you again soon.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Israel steps up attacks on Iran, bombs Iran's state-run media outlet during a live broadcast. Israeli military claims to have killed Iran's top military commander who took charge just days ago. Explosions rocked Tehran and Tel Aviv for the 5th day in a row. US President Trump issues calls to immediately evacuate Iran as he cuts short his G7 visit. Trump denies talks of a ceasefire, says he's working on something much bigger and wants a real end to the war, adds Iran should give up entirely. Indian students in Tehran relocated, says the External Affairs Ministry. Government advises all Indian nationals to move out of the city. Some Indians have left Iran through the border with Armenia. Prime Minister Modi all set to hold bilateral talks with Canada's Mark Carney at the sidelines of the G7 summit. The meeting comes after a period of strained relations triggered by Canada alleging India's involvement in the killing of a Sikh separatist in 2023. India has strongly rejected the charges. A late sell-off on Dalal Street as geopolitical tensions sink markets. Sensex and Nifty end at the low point of the day. Pharma stocks plunge after President Trump says tariffs are coming soon. Crude oil prices gain with Brent nearing the $75 mark. CNBC-TV18 News Break confirmed. NSE says SEBI has approved its request for futures and options contracts to expire on Tuesday. BSE's proposal for Thursday expiry has also been cleared. 5 days after the Air India plane crash, many grieving families still wait for bodies of their loved ones as DNA matching continues. 144 bodies have been identified so far. Family members and friends bid an emotional farewell to Captain Sumit Sabharwal, the pilot of the ill-fated flight. Union Steel Secretary says government is plugging loopholes in import licenses to curb their misuse. Expect steel imports to decline sharply this financial year. Cab aggregators see clarity on GST. Sources say industry wants some treatment for those working on commission model on apps like Ola and Uber, with those working on SaaS model on apps like Rapido. CNBC-TV18 News Break confirmed. NSE has told CNBC-TV18 that SEBI has accepted its proposal to allow weekly F&O expiry on Tuesdays. BSE will have its expiry day on Thursdays. Yash Jain is here with more details. Yash.
Well, the big news, of course, is that market regulator SEBI has approved Tuesday as the day of expiry for National Stock Exchange or NSE, which naturally means that BSE will be shifting its expiry day to Thursday. Of course, SEBI has made it very clear through its consultation paper and the final regulations that there would only be 2 days of expiry in every week. That would be Tuesday and Thursday. Now, if you want to talk about these 2 days, these are just 2 days of the week where 2 expiries would happen. Tuesday for NSE and Thursday for BSE. But both these 2 days, in the order that they appear, hold a lot of significance. People, of course, on the street, analysts expect that a significant portion of volumes when it comes to, expiry day trading comes on the first day of expiry, that is Tuesday, followed by, of course, the next day of expiry, which would be Thursday. Also, NSE would get 3 days before its expiry, which means it gets to sort of encapsulate events out of these 3 days before its expiry really turns up. BSE, on the other hand, gets only 2 days when it comes to capturing global events, capturing domestic events in terms of the prices and the expiry on Thursday. These are 2 straightaway important advantage when it comes to NSE getting Tuesday as its expiry day, and disadvantage, of course, on the other side, BSE getting Thursday as its expiry day. In terms of numbers, of course, there are reports and analysts which suggest that this could lead, as in NSE getting Tuesday as its expiry, could lead to a migration of as much as 20% of options volume away from Bombay Stock Exchange or BSE, and naturally most of those volumes could move to NSE. Also, this could help NSE gain market share in terms of options trading or expiry day trading by as much as 500 basis points. As far as MSCI, another exchange, is concerned, they will be sharing their expiry with NSE on Tuesday, but that's a very, very small exchange to begin with and hardly any volume as far as that particular exchange itself is concerned. Important to note that BSE in its confirmation on its website says that they had sought Thursday as its expiry. Seems like there was a consensus between the two exchanges before SEBI actually could come out with its final regulations or the consultation paper, and both exchanges amicably decided to have Tuesday as NSE's expiry day and Thursday as BSE's expiry day.
Right, thank you, Yash, for that. Moving on, cab aggregators seek clarity on GST. Now, sources say industry wants same treatment for those working on commission model on apps like Ola and Uber with those working on the SaaS model on apps like Rapido. Now, Timsy Jaipuria gets us more. Timsy.
Well, that's right. What sources are telling us is the fact that the government is evaluating proposal to clarify ambiguities in applicability of GST for cab aggregators. Industry has sought similar GST treatment for cab aggregators working on commission as on those which is being levied for the cab aggregators that are working on SaaS model. Just to remind our viewers, cab aggregators working on commission model are taxed at 12% GST with ITC or 5% without ITC per ride. Cab aggregators working on SaaS model are taxed at 18% GST on the one-time or the monthly or the daily fees that they charge to the drivers. So now what the issue over here is, what sources indicate that industry has written to Finance Ministry and they say that there is a need for parity of GST for cab aggregators as model may be different, but final service is the same. Commission-based cab aggregators are losing market to SaaS-based model apps. The cab aggregators on SaaS model charge drivers 18% GST only once a day or a month, which makes rides much cheaper. Varying applicable GST rates leads to same service being cheaper, costlier basis who is providing the service. Just to remind our viewers here again, Ola, Uber use commission-based model and charge 12% or 5% GST depending on the ITC treatment, whereas apps like Rapido, Namayatri work on SaaS model. They don't charge passengers GST at all. They only charge GST to the cab drivers for the daily or the monthly fees, which is very small quantum, and thus the 18%, which might sound larger, actually comes out to be a very minimalistic pay. So cab aggregators on SaaS model collect 18% GST from drivers only, and that is what is giving a tough time to cab aggregators who are working on the commission or per ride based model. Let's see what happens finally. Does Finance Ministry step into it and come up with clarity or not? Something that we'll have to wait and watch for.
All right, thank you, Timsy, for that. Let's shift our focus onto market action. Now, markets closed at day's low with Nifty ending the day below the 24,900 mark. Mid-cap index underperformed while Sensex fell more than 200 points. Pharma stocks took a beating with stocks falling for 3 of the last 4 sessions. This fall comes after US President Donald Trump announced that tariffs on the pharmaceutical sector is coming up soon. He also added that the European Union is not offering a fair trade deal.
We're going to be doing pharmaceuticals very soon. It's going to bring all the companies back into America. All of them are focusing on. It's going to bring most of them back in, at least partially back in.
Do you tell us what the status is? All talks on those two sides.
Well, you like it very, I don't feel that they're offering a fair deal yet. It's been very tough over the years. If you look at European Union, they formed in order to hurt the United States on Friday. And we're either going to make a good deal or they'll just pay whatever we say then.
Crude oil prices rose as the tensions between Iran and Israel intensified, and US President Donald Trump warned Tehran residents to evacuate. Now, Iran is the 3rd largest producer among OPEC countries, and hostilities could disrupt its supply of oil, thereby increasing prices. Gold prices also surged amid the heightened global uncertainty as its safe haven appeal rose. Shares of retailer Vishal Mega Mart sank after shares worth 11,000 crore rupees exchanged hands in a block deal. Now, sources tell CNBC-TV18 that promoter Samayat Services offloaded 20% of equity. However, the buyers and sellers in the transaction are not officially known yet. The deal took place at an average price of 115 rupees per share. Now, shares of pharma giant Biocon inched higher in trade today. This after the company sold 11.6% stake through a qualified institutional placement. The company is looking to raise 4,500 crore rupees through its transaction. Now, the firm set a floor price of 340.20 rupees per share. Shares of Zee Entertainment rallied in today's trade. This after the board approved a plan of promoters to hike their stake. The company will issue 16.95 crore fully convertible warrants for a total cash consideration of over 2,200 crore rupees. The warrants will be allotted to two promoter group entities, Altilis Technologies Private and Sunbright Mauritius Investments. The move will take promoter stake to 18.4% from 4.3% earlier. SoftBank Group-backed Lenskart is preparing to file preliminary documents for an initial public offering in the coming weeks. As per a Bloomberg report, the company is looking to raise around $1 billion through this public issue, valuing the company at roughly $10 billion. Realty major DLF will invest around 5,500 crore rupees to develop a luxury housing project in Gurugram. The company will soon launch an 18-acre project called DLF Privana North. This upcoming project will have more than 1,150 apartments and is part of the realty firm's 116-acre township, DLF Privana. Steel Secretary Sandeep Pondrik has said that government is plugging loopholes in import licenses to curb their misuse. Speaking with CNBC-TV18, he added that he expects steel imports to decline sharply this financial year. He also added that government entity Rashtriya Ispat Nigam Limited has become cash positive in the last 4 months, and he expects the company to generate sufficient surplus in the next 3 months to pay its dues. Prime Minister Modi has arrived in Canada to attend the G7 summit. The meeting comes after a period of strained relations triggered by Canada alleging India's involvement in the killing of a Sikh separatist in 2023. India has strongly rejected the charges. PM Modi is expected to meet Canadian Prime Minister Mark Carney on the sidelines of the summit with an aim to reset ties. Sanjay Suri joins us now from Canada. Sanjay, please take us through what the two leaders are likely to discuss.
Prime Minister Modi is in Canada for the G7 summit and for a crucial bilateral meeting with Canadian Prime Minister Mark Carney. The PM landed in Calgary and, like all the other leaders, he will travel then on to Kananaskis here by helicopter for the outreach part of the G7 on its final day, Tuesday. The PM is expected to brief G7 leaders and the many influential non-G7 leaders who will be present here on the recent challenges India has faced in tackling terrorism. And this will be the PM's first meeting with these world leaders past the difficult days of Pahalgam and Operation Sindoor. In line with the agenda at G7, the PM is due also to set out India's position on economic security and other ideals that host country Canada has set. The meeting with Carney could be, optimistically speaking, the reset moment with Canada following a troubled and turbulent stretch. Carney is looking to India for a significant furthering of economic relations between the countries, and this will need, however, to get past legal hurdles that have stood between the two countries. Finding a resolution on those will be the most crucial element of the bilateral between the two prime ministers.
Right, time for a short break. More news and updates continue right here on CNBC-TV18.
and welcome to this special edition of Voices from the Valley. I'm Shireen Pan, and we're coming to you from the Cognizant office in San Francisco. And this is also home to Cognizant's AI lab. Now, remember, Cognizant has made a pretty bold bet on AI, $1 billion bet that is. Joining us now to talk about how that's paying off for the company is Surya Gumadi, the president of Cognizant for Americas, and also the man who is, of course, responsible for the AI lab, the CTO for AI, Babak Hojat. Thank you very much, gentlemen, for joining us here on this edition of Voices from the Valley. It's great to have you back on the program.
Thank you, Shireen. First of all, welcome to the Golden State. And thank you for taking time to visit our AI labs here in San Francisco today.
You know, and this is what I want to talk to you about, this big $1 billion bet that Cognizant has decided to make on AI. And I think it brings to bear the larger question facing Indian IT services companies today. In an AI world, how relevant will Indian IT services companies be?
I think, they're going to be very relevant. First of all, the $1 billion bet that we made was in 3 dimensions.
Yeah.
Getting our talent ready for the AI era, getting the infrastructure ready, which is the AI labs, and then, building solutions, custom solutions for our clients. The Indian IT services companies are right in the middle of building those solutions, whether it is getting the data ready for the AI era or building the AI relevant solutions. And the $1 billion bet we have made is paying off really well for us. And our clients are loving it, our markets are loving it, and we like it, and we are doubling down on that.
You are doubling down on that. So the question that everyone is asking at this point in time, is this going to be an existential crisis for the Indian IT services industry? You don't believe that to be the case?
No, I don't believe that at all, because it's like any other technology revolutions that we have seen in the past. In the initial phases, it appears that it's going to take away a lot of jobs, or it's going to be a significant threat to the coders and things like that. But
or a disruption to the business model as it's existed.
Correct. And the initial thinking or the initial fear was that, but as we get deeper into the agentic era, so I think, a lot of human intervention is needed to manage the agents, to build agents and orchestrate the agents. The jobs might morph into something different, but I don't think there'll be an existential crisis or existential threat.
No existential crisis or threat at this point in time, at least. But Babak, let me come to you now. You're not new to the world of agents at all, going all the way back to 2011 when we actually saw Siri come into the picture. And, I don't know how many people still remember this, but ChatGPT, if you don't, Babak, was the main inventor behind the natural language technology that Siri used. But, how much has the world changed since then, Babak?
It's amazing. The world has changed, but also kind of come full circle as well. And not only was the original technology around Siri something that we worked on in the late 90s, but not too many people know that technology was agentic. And agents were very popular in AI in the 90s. The first time anyone talked about an AI agent was in 1989.
Wow.
And now those were very different agents. Those were much simpler, and the reason why we had agentic AI back then was because it was very difficult to use AI more generally, so we simplified the domain in which the AI was applied, and we called that an agent. In some strange roundabout way, today, while we do have large language models and Gen AI is very generally applicable, we have to still put it in a box, give it a job description, give it a set of tools, and have it work with other agents. So in some ways, it's come back to agents and multi-agentic systems. Real quick, on just to build on what Surya was talking about, I don't think it's more, this is the most exciting time, in my opinion, to be in a services company.
Okay.
Because there's no one-size-fits-all AI system. AI has moved from be-all, end-all, there's one Gen AI system that does everything, to a multitude of agents that work together, that are specialized, have to be custom built and tailored and safeguarded with human in the loop for every single business separately. And to me, that's, job security.
Well, speaking of the job security, Babak, as you mentioned, this goes all the way back to the early 90s, the late 80s. Why is it that we're now seeing this big breakout moment for agentic AI then?
The more we have the domain expertise as humans. Our clients know where they want to apply AI and how they want to apply AI. And actually, as Cognizant, we often know better than our clients where the AI can be applied and how. And so I think that aspect of specializing and configuring these AI agents is something that is the new sort of expertise that comes in. The AI is very powerful. You don't have to, unlike the Siri days, you don't have to go code it to understand natural language. Out of the box, it knows that. And it can actually talk to other agents in natural language in a future-proof manner. Where it needs help from us as humans is to give it that expertise, to package that and say, here's what you need to do and how you need to do it. I think that's very important.
I think just to add one more point, probably the evolution of compute from 80s and 90s to now, that also has accelerated.
Absolutely. The evolution of compute, the ability, getting around the fact that we're not building one AI that does everything, I think is also very important. Getting to the fact that this AI has to be grounded and has to do something really specific with our data, with our processes.
So let's talk about the business outcomes, because that's exactly the question that Babak raised. What does it do? To what purpose? To what end? How does it benefit the company? How does it benefit your clients today? Now, in terms of adoption, what are you seeing, Surya, today?
I mean, we discussed this in Davos, Shireen, earlier this year. At that point, we said 2025 is going to be the year where many enterprises across the planet will pivot from experimentation to scale. That indeed is happening. Perhaps not at the pace and scale that everyone expected that too, but it indeed is happening. So the enterprises are pivoting from experimentation to scale. And we have defined 3 vectors from Cognizant lens. And we are so glad that clients are looking at it in the exact same way as 3 steps from their lens. The first step being unlocking the productivity using AI tools and AI platforms on the run part of their business. Then the second step is infusing AI across their tech stack, the data layer, the apps layer, the business process layer. Once they do that, they're thinking of agentifying the value chain. These are 3 steps in the process. Some clients are approaching it sequentially. Some clients are trying to do 1 or 2 simultaneously. But majority of the clients have started pivoting from experimentation to scale. And this is happening across all the industries, in financial services, in healthcare, which is supposed to be highly regulated. But we see clients making move there as well. And in retail and the manufacturing segments and CMT. So I think across, I think there is movement now.
So what are companies weighing at this? What is the enterprise weighing at this point in time before making a decision on whether to go all in as far as agentic AI is concerned or not? What are the questions that they're asking you?
So the biggest thing that they're trying to solve for in that equation is the ROI. How do you articulate ROI?
And that problem still hasn't gotten answered, right?
Hasn't fully gotten answered. But
are we somewhere closer to getting an answer?
Yes, probably. In many cases, we are closer. In many cases, clients are closer. What's happening, Shireen, is, many clients, they have approached it in a siloed fashion by trying to do POCs in, siloed way. But now, clients are taking a holistic view. They're taking a holistic look at the value chain, and they're trying to build solutions across the value chain. When they do that, they are able to articulate ROI better, rather than approaching it in siloed fashion. Then they are not able to articulate. They were not able to articulate ROI. So now many of the clients that we are working with are looking at the value chain holistically and are discussing with us solutions that cut across the value chain. And there the ROI conversation has become relatively easier.
You're going to have to deliver on this ROI conversation, Babak, because at the end of the day, the stuff that you're tinkering with in your AI labs is going to have to deliver as far as business outcomes are concerned. So what are some of the big use cases today that you're seeing that enterprise adoption is kind of, taking up in a big way?
It cuts across the board. And I think that transition is happening from, these very obvious low-risk use cases to, something that actually is in the mainstream of the process of a company. And what's interesting is that we talk about ROI. The moment you talk about an agent, you're assuming some level of autonomy that the agent takes. Autonomy means lower cost and perhaps more efficiency. So you can get that across the board. However, when you actually agentify a system, you're also looking for increased quality, improved quality. Quality is a function of the domain in which you're actually implementing something. So it takes that leap of faith to go, okay, where else do I apply this, and how do I measure that ROI to see that it goes beyond just the cost aspect. And to your question of where do we see this, as client zero, we've actually seen this ourselves at Cognizant, where we started to see these relatively disparate use cases kind of popping up with people agentifying, for example, our RFP process, our HR process, our code migration process, right? And then we got together with our CIO and we're like, wait, how do we give this harmony without taking away that empowerment where people are actually bringing these agentic systems, but plugging them into this larger multi-agentic world where they become discoverable, also safer. Like we have these various different teams bringing their agents or third-party agents, but have those agents go through a process of validation, governance, maybe sandboxing before they plug into a larger agentic system. So, and that is something that we've started to cookie cutter with our clients. So we go to a client that wants to agentify and they're like, okay, what is the starting point? Build that nucleus agentic system and then build that process of bringing in these agents and plugging them in. Now your sales department has some agents. Maybe they provision agent force for that and they plug it into the bigger system. You have, I don't know, something coming in for your IT department and has some agents and you plug it in. HR has something else that was proprietary built in-house. And gradually, as you look at it that way, you have a collection of use cases that are constituting the fabric of your business. And it's becoming agent-based, and a good percentage of the workflow is autonomous. And the quality is going up as you're measuring that.
Actually, from a business lens, Shireen, the same thing. Initially, it was more in the customer experience and contact center. Yes. Now the use cases have expanded across the value chain. I can give you a few examples. So for one of our clients, Gilead in the Bay Area, so we are partnering with them in deploying agent-centric solution to power their internal workflows, to power their internal operations, whether it is onboarding, providing tech services to their internal consumers. That was a specific internal use case. For a client in Australia, Telstra, one of the largest telecommunications company there. So we are working with them in deploying agent-centric solutions for accelerating their software development and software launch into the market. We are working with one of the clients in manufacturing and logistics space in supply chain and warehouse management related use cases. For one of our banking clients, we are working on an AI-centric solution across their lending value chain. So the use cases have expanded in the last 6 to 8 months from what were heavy on the customer experience on the front end. Now we see them across the value chain and across the industries.
One very interesting thing here also is the fact that as you move into these multi-agentic systems, you're actually breaking the silos in these organizations. And one of the areas that was very interesting for me is we were working with this company that was this ed tech company. And it was actually the result of multiple companies that were acquired. So you had this classic case of left hand not talking to the right hand, an opportunity coming in, and these multi-agentic systems would be able to coordinate and spontaneously go, oh, there's these 3 things that come from this department and these 2 things from this other department that might be useful for this particular query that's coming in.
What does this mean in terms of spends now, Surya? When we talk about large deals that are happening, whether it's the $100 million kind of deals or even larger deals, I mean, is there a way to understand how much of that is being driven by AI spends at this point in time? Or is it still the largely bread and butter business that's driving spends?
No, actually, the spend is pivoting towards AI. I think there was a recent research by PwC, I guess, where 88% of the senior executives polled said that they're going to increase their budgets towards AI-centric solutions. So I think, we clearly see that there is a spending pivot in that direction. And, when it comes to large deals, Shireen, it's very hard to draw a line as to where AI stops or where AI starts. So the AI is integral part of the large deals. The way we are approaching and the way the clients are thinking as well is to leverage AI to unlock the trapped value in the existing business and use that unlocked value to fund transformation, again, powered by AI. In other words, leverage AI to address the cost equation and use the gains from there to accelerate the growth equation, again, powered by AI. The couple of large mega deals that we mentioned recently, we approached it with exact same construct. We went to clients articulating how much of value can be unlocked from their existing setup, and we enabled them to fund that to, drive growth or transformation powered by AI. So that's how clients are approaching.
So, do you see more of these large deals or mega deals now on the cusp, on the anvil, even though it is an uncertain time, and we've seen that drop in this quarter? But do you believe as the uncertainty ebbs, we're likely to see more of the large and mega deal conversion?
This framework will gain widespread acceptance is what we believe, and that translates to a large deal. We have proven the point in 2 cases in the recent past, and we have good pipeline with the same construct, where we are approaching clients with, saying that we can we can unlock the trapped value, and then we can help you fund transformation. By construct itself would become a large deal. And that would be beneficial to clients, and they don't have to look for more additional capex to, drive transformation. And we believe that, this is going to prompt few more large deals in the market.
Okay, prompt more large deals in the market. But Babak, what are you hoping to now solve for as you work in the labs at this point in time on the back of the work that's already been done? But more importantly, the line of sight that you're getting from clients on what they want you to address using the agentic framework. I mean, what are the next set of problems that you're hoping to solve for?
Most important right now is to make these agents and agentic systems interoperable. We are agnostic to what platform or cloud you're using, and you will be using many in an enterprise, but we need to be able to plug them in and have them work together without having to go re-engineer the existing system that you've built. And to that end, we've actually created a platform that we've open sourced. And part of the reason why we've open sourced it is exactly that. We need wide-scale adoption so that people that are working on these systems are able to use this de facto way of plugging agents into each other. But it goes well beyond that. Ensuring that an agent is, when it's acting autonomously, it is confident, and we're confident in its operations, is very, very important. Just recently, we announced an invention out of our lab that can calculate the absolute confidence of a large language model in its assertion.
Okay.
That's a huge breakthrough, and just imagine
what does that mean in English?
So if you ask a large language model to make a decision, it can come back to you and say, here's the best decision I think I want to make, and I am, let's say, 95% confident in it. In that case, you've set a threshold and said, okay, if you're above 90% confident, go ahead and do it.
Okay.
But if it comes back and says, here's the best decision I can make, but it's at around 65% confidence, you can say, okay, wait, we'll have a human come in and take over for you. And so some of that, like drawing the line as to where it's autonomous and where a human comes into the loop, can be automated in this manner.
So if we're already at 95%, which is what you just told us, then what happens to the humans?
Well, the humans actually will have, trust me, much more to do than before. I actually think every time we've come up with such a hugely disruptive technology.
Yeah.
We've thought that we're all going to be going home or going to the beach, and we've all gotten much more busy. And I think that's what's going to happen for us. We're going to be busy building and instructing and informing these systems. We don't have to do the nitty-gritty. We don't have to waste time, on coding these sorts of things.
Yeah.
And therefore, we will have more time to be more productive and doing more.
Since we're talking about autonomous and autonomy, I think one of the questions that's also being asked is how much is too much, and how do you put the guardrails in place that you continue to control? So while there is autonomy, but you continue to control these agents as well.
Great point. So that's one of the reasons why you have to come to a company like Cognizant when you're building. I'm serious, because you don't want to leave this to happen organically. You want to think very specifically about where you draw that line, where you can allow an agent to be autonomous and where not. And you also need to have the safeguards to say, if this thing, if something goes wrong, right, what is the fallback?
Yeah.
Right? What is the disengage button?
Yeah.
Right? So, how do we fall onto, let's say, a rule-based operation that we can afford to have while we figure out what's going on? Those sorts of things is know-how that we've attained through the hard way, and we're using. Last thing I'm going to say is that the good news about an agent is an agent isn't just a black box neural network. It's not just that crazy complex AI. It's also code. Every agent has two things: an AI system and code. So the platform that we have makes it very explicit where you're relying on the black box AI, for example, understanding natural language or doing some reasoning, and so forth, and where you go to code. And code is us. As humans, we write that code, and we make sure that, for example, the security.
But not anymore. I mean, now everybody's talking about. Now everyone's talking about how the code has been outsourced to AI.
Actually, in that context, Shireen, I think recently Jensen said that in a conference that IT departments of the enterprises will morph into HR functions, wherein you'll have to identify an agent, select an agent or recruit an agent, onboard an agent, train an agent, deploy an agent, and pay for an agent. So I think, while coding can be done by machines, but there's a lot more around it in managing, which is what I said to our earlier conversation. I think, it's still evolving, but I agree with Babak, so that the human in the loop is
safe.
Yes. Yeah, and remember, whether or not you write that code, that code is going to be consistent. It's not going to be hallucinating. Those are some of the safeguards that you build into these agents. But I mean, don't have your agent's code being written by AI. That's not recommended.
Don't have your agent's code being written by AI.
No.
Are you seeing
Give
that
it to
happen?
experts.
Are you seeing that happen though?
Yes.
What worries you about what we're seeing today?
What worries me actually is over-trusting these systems. Absolutely. Because they're so good. If something's only 65% of the time writing you code that is acceptable, then you always second guess it and you're always looking. If it gets up to the 85%, then you will miss when it doesn't work well. So that's one of the things that when we do internal training, I always tell the teams, if you feel like you're not okay, it's good, it knows what it's doing, I'm just going to copy paste this code and have it run. That's the moment you need to second guess yourself. Absolutely. And I think it's very, very important for us to train and promote the usage of these systems. In fact, we're just about to launch one of the world's largest vibe coding event with our company. And we're encouraging not just the coders, every single person in the company, including Surya, hopefully, to actually vibe code as part of this event. Because we want to encourage people to test the waters, get a sense of where it works, where can I trust it, where can I not trust it? Because whether or not we want that, people are going to be moving into this world where the barrier to entry is lower, and they will be creating systems using.
Are you vibe coding now, Surya?
I will have to, I guess.
he's been signed up already.
He's been signed up already. But what does this mean now in terms of how you're going to be hiring, how you're going to be reskilling? You have a program, of course, Synapse has been doing that within Cognizant. What's been some of the learnings of that program so far, and how do you see this moving forward?
Unlike the technology revolutions of the past, it has been established by now that AI and Gen AI can be easily democratized and can be relatively easily trained and can be easily deployed at relatively low cost. So as a result, the training has not been extremely difficult, and we are working with the academia, the colleges and universities to make sure that we adjust the curriculum for our intake. And we are training our workforce too. And in fact, we have partnered with Google to train 200,000 of our workforce in AI technologies. I think it has come along really well, Shireen. I think we feel good about it, and we are continuing that, to make sure that we are fully ready.
And to Surya's point, it's not very difficult. What I found, I actually had the privilege of running a couple of training sessions for Surya's teams. And the first time I did it, it was a little bit of a disaster because I felt like we over-geeked. Disaster from my part. We're starting to talk about how this AI works and all that, and eyes glaze over, and people. It's about getting over your fear, and it's about us kind of simplifying the fact that it's you expressing your intent and leaving it up to the AI to come up with what, and then you going back and forth and building it. So yeah, it's easier than you think, and at the same time, it's deceptively hard because you have to make sure you double check.
And to your other question on, the workforce balance. So it's going to evolve. Right now, no one has a silver bullet or no one has an answer yet. But at some point, there is going to be a mix or a shift in the mix of your actual workforce to your digital workforce, which is agents. I mean, the time will tell whether it is 50-50 or 70-30. But it is established that we're going to have a mix of physical employees, the employees and
an agentic workforce. But without over geeking, but I want to understand from you, because I remember you said that when Apple did Siri, when you did Siri, that you were well ahead of the time, but then you fell behind. As you look at where we are today, where everyone's talking about the fact that what was released yesterday is obsolete today, in this fast-paced changing environment, how do you build? How do you think of what next to do?
That is why we've invested so much in core research, because that's the only way for us to actually stay ahead of the game and defeat this FOMO. It's absolutely true. Just keeping up is difficult, but we have a laser-focused approach of it's about multi-agentic systems, and we have a roadmap of where we think this is going to go for our clients, and what do we need to invent to make that happen. And I think the best way to predict the future is to actually create it. And so that's kind of where we're investing and working right now.
Actually, we're going to show you we have 58 or 59 patents.
Right.
And Babak and team has done quite a bit of work on that. So we're very proud of that.
Absolutely.
No, we will do a quick show around as well. But, are you seeing any sectors in specific where the adoption rates are higher or the felt need to adopt is higher, whether it's BFSI or retail or manufacturing or healthcare? I mean, each of these verticals that you focus on, are you seeing the need to want to move higher in some of these sectors?
Actually, I think the adoption rate has picked up across the board. But I'll tell you, Shireen, the clients in BFSI, they're a little more matured in leveraging these technologies upfront. And so we see the adoption rates relatively higher in clients in the banking space. And then followed by the retail segment.
Okay.
When it comes to healthcare, initially there were a lot of apprehensions on the regulatory aspects of it. But it's picking up, but not at the pace where it is in banking or retail. The rest of the segments are somewhere in between. with these two frontrunners, banking and retail, and healthcare picking up. So the rest of our business segments are in between, the manufacturing and communications, media and tech.
You know, so we're talking about FOMO and we're talking about waves, Babak. If you know, we've gone through the chat GPT wave, we're currently going through the agentic wave. But again, I ask you this, you know, what should we be mindful of? Because there is a tendency to kind of, you know, the herd mentality kicks in and everyone's trying to board the same bus. What should we be mindful of?
Yeah, I mean, AI always has this curse of expectation, and the expectation is always somehow ahead of the reality. But having said this, I think the future is not just in multi-agentic systems, it's in agentic systems that are talking to non-aligned agentic systems. That's one area that we're looking at. If you're a B2C and you have an agentic system that you've provisioned for customers, humans to use, there's nothing that says agents on behalf of those humans might not want to talk to them. So you have agents that are not quite completely aligned with one another, talking to each other. Then you get to a point where you're scaling these systems beyond the 10, 20, 30 agents that is kind of the state of the art right now, to thousands of agents working together. When you get to that level, you start thinking, well, these systems might need to spontaneously and dynamically add and remove agents. Right? So that's a whole area of inquiry and research, and I think it's going to come hit us quite quickly. There's the whole area of safety that we talked about, and assessing, you know, for example, one of the things that we have in our platform is an agentic system that monitors an agentic system.
So agents are monitoring other agents.
Monitoring other agents.
Where are the adults in all of this? Where's the human supervision?
Right, exactly. But look, at the scale that these things are being utilized and deployed,
it can only be AI monitoring
AI. You can't have humans like, yeah, exactly. It has to be AI-based.
Agents are going to do performance appraisals too.
Exactly. Absolutely. Absolutely.
Yeah.
Absolutely.
Yes. You know, let's hope we deliver on the agents' expectations of what our performance should have been. But you know what? How do you engineer the company for an environment which is changing so quickly, where client needs are changing quickly, where actually people don't necessarily even know what is to come next or what they want, as you said? How do you engineer the company in this situation?
I just lean on Babak's comment.
Leave it to the agents.
No. Yeah, probably. The thing is, you know, we have to stay ahead of it.
Yeah.
So what we're doing across the industries, Shireen, is we are taking the value chains of all the industries that we serve, and we are trying to build agent-centric reference architectures, whether the clients need it, whether the clients have asked for it or not. We are building reference architectures for all the domains that we serve. And then we are taking those to the clients, saying, listen, this is the art of the possible. This is what you can do. Probably you have thought about it, not thought about it. What do you think? And some clients are really excited. They're in some clients, they feel it as a mind share that they would approach it at a later point in time.
Yeah.
And
that they have the option.
Exactly.
Yeah.
And at least they're glad that we are discussing with them.
Yeah.
And a few other clients are saying, let's go build it out. So that's how we know, I think, you know, leveraging all the great work that Babak's team is doing. We are building industry-specific or domain-centric reference architectures that are agent-powered, and we are taking those to the market as solutions.
You know, and all of this, at the end of the day, will hopefully result in business outcomes. And I keep coming back to that. And you've just upped your guidance as well for Cognizant. Given the period of uncertainty that we're seeing at this point in time, do you believe that there is going to be much more of a wait-and-watch approach, a pause approach, or do you feel that people are at this point in time saying, look, we can't wait because speed is of the essence?
Majority of our clients, what we have seen in 2025, going back to our Davos conversation, is have come to realization that they'll have to get out of the experimentation phase. So they are trying to move to scale or implementing AI at scale. Different clients are moving at different pace, but the moment has started.
The moment has started. Babak, I want to come back to your own journey. From your PhD in Tokyo to everything else that you've done and where we find ourselves today, I mean, what surprised you in the way that we've seen this sort of kick off and take off in the last few years, the whole AI revolution?
Yeah, nobody, including those of us who were in the thick of AI, expected the level of the power and scale of these large language models. That has been the single most amazing breakthrough that happened. And everything we're seeing since large language models is us figuring out, what do we do with this power? Where are its limitations? And they do have many. And where and how do we utilize them? And so for someone who's been in this like straddling AI research and applied, this is the time. Like, this is the moment where AI is coming out of the lab and it has this potential of basically becoming, owning the fabric of not just our businesses, but our society in some ways. So making that happen, building that is really my passion these days.
The social consequences is a different story altogether, and I would like to hear what your thoughts on what you're worried about. But given what we are seeing with AI adoption, there also seems to be, at this point in time, a feeling that we could perhaps be going through a fresh breakout as far as hardware is concerned, AI-enabled hardware is concerned. And, I wonder what your thoughts are on that.
So by AI-enabled hardware, if you're thinking of robotics,
not just robotics.
Not just robotics. So we have not had the same kind of huge inflection point type breakthrough in the hardware side as we've had in the software side, unfortunately. There's talk about, maybe I don't know, quantum at some point, or prices will drop on the hardware for robots, or there is an issue. Robotics especially is a very hardware sort of originated discipline, and so they haven't really crossed the chasm of usability yet. Not thinking from a user's perspective, it's more about getting stuff done from a hardware perspective. So there is that aspect. There's the cost aspect. Right now, you can't really run a large language model or an agentic system with the same level of, let's say, energy consumption that our brains have, which is much, much lower, so that they can be confined in a robotic space. There's also the other side of this, which is the AI technology itself has this limitation that it has to be trained separately and then deployed. Once you deploy it, it's not really learning anything. The PT in GPT stands for pre-trained. That means you actually set these things up in large data centers and then train them. So embodying them, for example, in a robot, they will not continue changing their world models and learning as they experience their specific environments. So it's not going to be as interesting. So I think there are we still need a few big breakthroughs is what I want to say when it comes to that. Same thing for efficiencies in training and deploying AI systems. We're still looking at GPU-based, parallelization to get these done. From a software perspective, things like DeepSeek have presented moments of huge optimization that are encouraging, but they've still been incremental. We still need a breakthrough that gets this thing to be much, much more efficient and smaller, to be able to train it faster, to be able to host it in embodied hardware systems. I think we're still quite not there.
So you believe that it's still a distance away, the big breakthrough?
I'm not a futurist. I don't know when that. If you ask me, like, if you even ask the authors of the seminal paper "Attention Is All You Need," which started this whole LLM revolution, if their paper is going to start an AI revolution, they would have said no. We just built something that is a good translator. It's very, very difficult to tell where, when, and how these will come. One thing that's heartwarming is just the sheer numbers as far as the investment that's going into research in AI that I think has that critical mass to be able to enable these types of breakthroughs. But There's a flip side to this, by the way. I have to complain for a minute here, is that we've pigeonholed on one specific approach to AI. And everybody's looking at that. This is like neural networks architected in a specific way, trained in a specific way. And everybody's kind of like looking at that and trying to make it a little bit incrementally better. And so there's too much attention in one area and not enough attention in many, many other areas in AI that may actually have that breakthrough that we're looking for.
And that's what happens with the herd mentality that we just spoke about. Well, it's hard to predict the future, as we just heard there from Babak, but you have no choice but to predict the next quarter. So, what concerns you today on the business front? What are some of the key headwinds? And what are some of the potential tailwinds as well?
See, the macroeconomic uncertainty that we're dealing with the trade wars or the tariffs. And that is one big concern on how that's going to level out in the near term or the medium term. And on the flip side, the urgency that the clients are beginning to realize that it's a race against time. So they will have to make the move on AI. So when the clouds clear, so they can have a jump start ahead. So that's the tailwind in my opinion. But the macroeconomic uncertainty is common across the market and across the geographies. So.
Yeah, maybe we need more agents to run governments.
I was, Shireen, I was surprised. I actually did a tour of Asia recently, and many of these countries are concerned about the fact that they don't have enough expert-trained folks. And in some ways, that is impetus for them to move into this agentic world. And, Japan has a population loss.
So the demographic challenge is actually being addressed by this.
I was surprised to find that. I thought there might be a link, but I wasn't surprised how urgent it is for countries like Japan and some of these countries which do have a demographic challenge.
But on the flip side, for a country like India, it poses a potential challenge.
Opportunity.
You think?
But there is availability of talent in India, though.
I think India could be the engine of agentifying the world. I think that just the talent is
the talent pool in India.
For sure.
Well, let me close with your thoughts on India at this point in time, and of course, both in terms of workforce, but also expansion from here on.
I think India is going to be an integral part of our strategy, which Ravi, our CEO, has said it on many occasions, Shireen. So we will continue to expand in India, precisely for the reason that the kind of talent that is available and at scale, you don't find it anywhere else at this point in time. So India is going to be the integral element of our strategy. And, we are going to double down on our India workforce strategy too. So we have recently opened centers in Tier 2 cities. We had Gift City recently launched. And we will continue to evaluate options to, get the talent. And as the balance, the digital workforce to the actual, the employees, as that evolves, I think, we'll continue to take a relook at, how to balance.
So will the AI bet be the way to be able to get into the winner's circle, which has been the stated ambition and objective of Ravi and of course, all of you?
I think it's going to be a key element of it, I would say. It's going to be a key element. And we were one of the first service providers to bet big on AI. We had a jump start. So we got significant mind share across. And that's really helping us right now. So we got momentum, and that's going to be one of the key levers for us to get to the winner's circle.
Well, we wish you the very best of luck with that. And Babak, we wish you and your team the very best of luck. You're going to have to deliver on this promise.
For sure. Yeah, absolutely. We're ready. We'll do it.
Yeah, we'll make it happen.
Thank you. Thank you very much, Surya. Thank you so much, Babak, for joining us here on Voices from the Valley. That is the team at Cognizant and the big AI bet. As I already pointed out, $1 billion. That is what Cognizant is betting on its AI labs here in San Francisco. And of course, the future is agentic, as we've heard. But how much of that is going to translate into return on investments in the short to medium term is the big question that clients clients will continue to ponder. From all of us here for now, many thanks for watching. Do stay tuned to CNBC TV 18. Join us on YouTube, on social media, and on our website. Log on to CNBC TV 18 Prime and CNBC TV 18 Access. For now, thanks very much for watching.
Welcome to Indianomics. Does the massive CRR cut of 100 basis points indicate a trend in Reserve Bank to remove constraints on bank profitability? That's our debate today. And why am I asking this question? In the past 5 years, bank deposits have risen just by an average of 11% a year, while the assets of mutual funds have risen by an average of 30% per year. Also, banks are fast losing long-term deposits or stable deposits and are having to pay much more for term deposits. So is the CRR cut intended to remove some of the costs imposed on banks? Historically, Indian government and Reserve Bank have imposed many constraints on banks. They have kept CRR 4% of their deposits as idle cash. They have to invest 18 to 20% of their deposits in government bonds, which give you very little returns. And they have to mandatorily lend to weaker segments like agriculture. But now that banks are not getting enough of lazy deposits, is the Reserve Bank leaning towards making life a little easier for bankers by cutting the CRR? That's my question. And joining me is a veteran cast of bankers, two former deputy governors, Mr. H.R. Khan and S.S. Mundra, and former SBI chairman Dinesh Khara. Also joining us is Harshvardhan, the banking expert from Bain & Company. Gentlemen, thank you very much indeed for your time. Mr. Khan, I'll start with you. I think you have got a 50-year association with the Reserve Bank, and I have covered it for 30 years. You tell me, I have never heard this 1% cut in CRR except during the Lehman crisis. So does this signify a different kind? It is more a banking regulation rather than a monetary policy move.
No, thanks, Lata, for getting me. It's not 50 years, it is slightly less than 40 years, my association with Reserve Bank. So coming to your question, whether it is meant to provide some leeway to the banks for their deposit mobilization, we know the background under which banks are functioning in terms of deposit mobilization. I would say this is not the direct objective of this massive CRR cut, just to help banks to garner deposits, but this would be a byproduct, because with massive rate cut and CRR cut, there will be pressure on NIM, and CRR cut will provide some offset to that, and they will be in a position to maintain some semblance of rate in terms of giving to the depositors. As you know, in Indian context, still we have a positive rate of return. So there should be a natural tendency towards deposit mobilization. But as you have seen, the way people have moved towards capital market and the massive flows which are happening to mutual fund, this is having impact on the bank deposits. So at margin, this CRR cut will help in offsetting their impact on NIM, and that will help in giving little more in terms of cut in the lending rate, not so much in deposit rate. I think the whole purpose is to increase credit flow and reduce the cost of credit. I think this is going to be impacted positively by this.
I take your point that, there is better monetary transmission because of CRR. But Mr. Khara, you come in on this. there are a zillion ways that the Reserve Bank has to improve liquidity and transmission. I mean, they can do OMOs, they can do FX swaps, they can simply give a bigger dividend to Reserve Bank, they can do long-term repos, you know, the TLTROs that they did during COVID. RBI can create money from thin air if it wants. Why is it deliberately doing something it has never done before? A 1% CRR. Is there an eye that banks need to be commercially profitable?
I think I would like to draw your attention to the fact that around the COVID, CRR was actually increased. And this was actually long overdue as the CRR readjustment was concerned. And apart from that, it has to be seen in a little different context also. We have seen that all the developed economies normally have got the lower CRR. So actually, when you look at it, the financial system in the country, it is actually evolving to becoming a very developed one. As actually speaking, many of the advanced countries also don't have the financial system as strong as and as robust as perhaps India has. So I think in that context, there was a room for CRR reduction also. Having said that, what you mentioned in terms of if at all transmission has to be expedited, then perhaps this was warranted, because unless and until the NIM aspect of the banks have been addressed, there would have been a challenge for banks to raise the capital. And today, as you're aware, that many of the global participants are very much there as a shareholder for the banks. So having said that, I think this must have been there at the back of the mind. If at all transmission has to be expedited, then unless and until there could be some kind of a relief given in the CRR, which will help in reducing the cost of funds for the banks, and also it will help in transmission, which will eventually help in the growth of the economy. Perhaps these were the considerations why it was looked at.
Yeah, you know, you're making a new point about capital also. And actually, I've heard this from the Reserve Bank higher ups, that they, you know, we have to think of capital as well, so that, you know, banks are prepared for a continued 7% growth. Mr. Mundra, you have actually been both in Mr. Khara's chair and Mr. Khan's chair. You've been a chairman of a bank and a central banker. You tell me, would you look at this as something different? This is not to be taken as just a liquidity step. It is also a banking profitability step.
Okay. Lata, thanks for having me here. And first, let me start with challenging both of your premises.
Okay.
Really, I don't agree with that. Why? Number one, profitability of the banks are at all-time high at this point of time. So I don't think that there is any concern around the profitability. And the second premise, that by cutting the CRR, banks will have the ability to, say, on deposit front and all that. But let us understand, this is one-time measure. Okay, you give CRR today, it maybe enables the bank for a few months or for a year. But ultimately, you know, race is on forever. And it is a matter of fact that the whole dynamics in Indian system has changed. Banks will no more have the luxury of having what you call as a lazy deposit or those kind of term deposit. The shift has come to remain forever. So I think for that, banks will have to be more smart. Probably the bank who can manage more money in transition would be a winner. And at some point of time, like any developed economy, market forces will also come into play where funding will be done. So I started with these both premises, but then little bit, then what could be? I see 3-4 clear things if I read at the policy. Number one, I would like to say with successive policy, I think the footprint or the imprint of new governor is clearly seen in the communication. There is a subtle change in the communication in the policy. February policy was too early. He had just come into the saddle. But April and then now June policy, one thing is coming out very clearly, that the market participants are getting a much clear communication and much clear roadmap. To be brief, we have time, we will elaborate on this point. But the second thing, I think both in monetary policy resolution and governor's statement, there is a clear call that the private consumption and private investment should now take over. There could be, government cannot keep on doing the heavy lifting all the time. Transmission should be better, while it has reflected in the short term, but it is yet to reflect in the credit pricing. So that message is also very clear. And again, there is a lot of clarity that the stance should not be confused with the management of liquidity. These are two different things, and they would be handled in a different way as per the evolving situation. So I think I take it like this. Important point, the private consumption and investment spur and a better transmission. Those will be the thing. I won't see it as a sea change coming in the regulatory stance. I think regulatory stance, there are so many things in the regulatory stance, which includes, how you treat the customers, how is your control systems, how is your cyber security. All those things would continue to remain on focus and on. Of course. Let me pause here.
Yeah, no, I agree. I maybe the word profitability is poorly chosen by me. But my point is, I have not seen a 100 basis cut in normal times. And that's why I'm asking whether they want to put fewer constraints on banks. Time was when banks were an extension of the fisc. I mean, they did everything that the fisc did. Slowly, we started listing the banks, and then a priority sector was also made on market rates. Otherwise, priority sector loans had to be given at fixed rates. So, to you, Mr. Harshvardhan, would you agree that this is showing a sea change or certainly a step change in Reserve Bank's attitude to banks that, they have to be commercially viable?
Yeah, but Lata, I go with Mr. Mundra. There was no question of commercial viability. I mean, last year was the highest profit on record, 3.5 trillion for Indian banking system. So even if you imagine 25-40 basis point compression in NIMs, which I am expecting,
yes,
this year also will have a substantially higher profit than what we've seen in the past. So I don't think profitability was a concern. Balance sheets of Indian banks are as strong as they ever have been. So there is no capital question, right?
So in that case, what is your guess as to why this extraordinary step?
This is a tacit recognition of the RBI that deposit market still remains very tight and it is likely to remain so because the underlying drivers of that tightness are structural. They are not going to go away anytime soon. So this is, and remember, other tools of liquidity infusion like OMA and all are selective. Only few banks get it. This is system-wide. So this is like Brahmastra. This is final instrument that has been used. Now we are at statutory minimum on CRR. So I think I also read a little bit of a hidden concern about a slowing economy that RBI has. So they have basically taken very, very aggressive policy action, both on CRR and policy rate cut, probably because they are concerned about the economy slowing down. And however, remember, credit growth has never been slow because of supply side issues. The demand for credit itself is low. As Mr. Mundra was saying, private capex has actually collapsed. And I don't know whether 50 basis point cuts is going to rejuvenate it. I will hold my opinion on this one. In the short run, I don't think that's going to happen. So I don't think this is going to spur credit growth. What you might see is the 1%, 2.5 lakh crore going into SLR initially, because I don't see any significant business credit pickup. The consumer credit and all of it anyway coming down. So I think it's partly very aggressive action to spur credit growth, as Mr. Mundra was saying that the private sector has to do heavy lifting now, and partly recognition of the fact that deposits are really going to remain taut because of household savings falling and so on and so on. That's how I read it.
Okay. Well, I don't know if we should look at a 6.8% GVA that we reported in the last quarter as really all that slow. 7.4 GDP I'm not taking, okay, because it is net taxes. But 6.8 in the fourth quarter doesn't look like an economy that needs a bazooka of, 50 basis and 100 basis cuts. This is, something out of character with the Reserve Bank's DNA. And I want to pose that question again to you veterans after the break, whether we will see more steps. After all, we don't get lazy deposits. And therefore, should you also give banks less responsibilities in terms of weaker sections, priority sector? Will we see more of this kind of behavior from the Reserve Bank? Those questions after the break. Welcome back to Indianomics. We are in conversation with two former Reserve Bank Deputy Governors, H.R. Khan and S.S. Mundra, former SBI Chairman Dinesh Khara and Bain Capital's Bain and Company's banking expert Harshvardhan, we've been discussing whether this 100 basis point CRR cut signifies something more than a liquidity tool, whether it shows Reserve Bank's desire to give banks lesser constraints under the new circumstances. So let me get back to you, Mr. Khan, on the same issue. Like I said before, the current economic growth situation is not that dire that we are in a 5% handle. We are almost close to 6% when you 7% when you have a 6.8% GVA. This year we will have headwinds, but those are global headwinds. They are not domestic headwinds, and reducing rates is not going to help that. So, do you think that Reserve Bank is likely to address this problem of lack of lazy, long-term, stable deposits by giving banks some other advantages? Do you think that the next step could be also removing some constraints of priority sector?
I would agree with my friend and colleague, Mr. Mundra, that there has been in the recent past a lot of understanding of banking sector's requirement. And this is one way, as I said, is a byproduct in terms of helping the NIM, but not a direct objective. Other actions which RBI has taken in the recent past in terms of regulatory relaxation is to reduce those constraints. So far as the priority sector and weaker section part is concerned, I think this is, given the political economy, this is less likely to happen in the near future. But what possibly it can be done is that over time, we have to build some consensus and keep a very small part of priority sector, maybe 10 to 15% for small and marginal farmers, and the micro sector, the rest can be free. But this is something which may not happen very quickly, but over time, maybe with some consensus building.
Okay. No, I take your point on that. Yeah, I take a point on that, Mr. Khan. Just a few months back, RBI actually rejigged priority sector. So we should not expect them to go away from this stand anytime soon. But will you broadly agree that they want banks to be commercially, better off because they are not getting easy deposits? And therefore, maybe in a year or so, will priority sector also be on the radar?
No, the situation is quite dynamic. So they may do a review again, but I don't think review is going to happen so soon. Okay. Coming to the other point, why the growth is around 6.5%, why such a bazooka action? Let me remind you two things. One is, at the current stage, the potential growth rate is 7%. So we have to achieve that if you have to talk about Vikasit Bharat and becoming a high-income country by 2047. Of course, that's a long term, but immediate 7% potential growth, if you have to achieve, I think we need to remove further constraints for the growth. The second part is both direct and indirect methods have been used to see that the transmission, which has been muted so far, actually is impacted much more. Both CRR cut is a direct method and repo rate cut is indirect method. So combined effect is what RBI is looking at.
Khara, do you see, a change? For instance, SMBC has been, I think, more or less allowed. The actual permission hasn't come. They've been allowed to take 20% in Yes Bank. Fairfax was already allowed. Is there, some liberalization we will see even in the attitude to capital? The governor in his interview to Times of India did say that we are looking at overall ownership. So are we going to see, more steps which will ease capital raising, allowing foreign banks, for instance?
I think as far as my understanding on the subject is concerned, my sense is that RBI would prefer that if at all strategic investors can come in, they can actually help in the growth of the sector. So this is what my understanding is. And as and when there are strategic investors who are coming in, RBI is now looking at the situation on a case-to-case basis. And that is one of the reasons why SMBC also has come in. And I think it will eventually help in terms of lending support to the sector. So this appears to be a bit of a transition, because earlier all these investors were permitted to come in only at some number in terms of up to 10% or so. But even now also there is one challenge which is essentially coming from the Banking Regulation Act that says that no investor would be permitted to have the voting power for more than 26% of the voting rights. So that is something which is there. But I think within that there is enough flexibility which RBI is demonstrating. Earlier, more than 10% also there was at times there was a challenge. But of late, we have seen that some of the private equity investors have also come in at around 10% or maybe even more than that in some of the banks. So, and they have been permitted a board seat also. So I would say that with the passage of time, there is a change in the thinking at the RBI level.
Okay. Mr. Mundra, your thoughts? Are there any non-commercial constraints on banks which you see going at all?
Yes, Lata, and normally when I come, I find it very difficult to disagree with you on few of the things. But somehow this time, many disagreements are coming. But first, quickly, I would, on the point which Mr. Khan was also mentioning, at least too early to say, but I see a clear trend that probably there is a more willingness to listen to the market and probably to have little more faith in that. That is something at least my perception is, and I hope it continues. It will be a good thing. Means putting my hat of commercial banker for that. Now, 2-3 points which you mentioned. Number one, I don't agree that priority sector is any more a burden on the banks. If you again go into the database in recent past in terms of credit cost as well as the yield available to the bank, I don't think this priority sector has fared any bad than the so-called, the industry sector. Rather, it is slightly better. And again, coming to the growth, as Mr. Khan mentioned, growth is good, is still below the potential, and I would say much below than the aspiration. And I think that word is used a couple of times in the monetary policy statement also. Quickly on the 3 points, as I see what this rate cut could be. Number one, I feel that maybe it is giving a breathing space to the bank to get their act together in the race for deposit mobilization, be innovative, come out with something, because it is a temporary relief. It's not a permanent relief for the bank.
Of course.
And the second thing, there is a roadmap which is given for CRR cut, not that it is happening today. If you look at the roadmap, probably it is coinciding with the busy season and the festive season, which would be coming in the country. Probably this will enable the bank to fully leverage on that, opportunities which will be coming in the busy season. So to very, short, quickly, this is how I look at it.
Okay. No, there can also be that $40 billion of short positions in the FX market, which will mature. So, I'm not denying that there are liquidity issues, but my repeated point is that liquidity can be tackled in other ways, and it has always been tackled by RBI in other ways, like OMOs or repos or, dividends to RBI, dividends to the government. 1% CRR for me is out of character, out of the RBI's DNA. Mr. Harshvardhan, your last interpretation of this.
Yeah, so I said that this is almost exercising a nuclear option, so to say, on liquidity. And so there would be enough concern there. That's why I mentioned the growth point. But to Lata, your priority sector point, I think this is very, very, very important. Remember, priority sector obligation came in the aftermath of nationalization. Our national economic priorities were very different at that point of time. They are very different now. And the obligations haven't changed much. So there is a very important need to actually review them. Let me give a concrete example. We all recognize that climate change, energy transition is a huge challenge. Enormous amount of capital is needed. Yet it doesn't find a place in priority sector. It's an overwhelming national economic priority, if you ask me. So I think there is not from a profitability or commercial point of view, but just aligning it to more our current national priorities, economic priorities. I think it's important to take a relook at that. At the same time, I don't see that happening because behind every line item of priority sector, there is the constituency, which can lobby very heavily. So I don't see any change happening anytime soon. But if you ask me, yes, it needs to be comprehensively reviewed and redesigned.
Okay. Unfortunately, out of time, and I have not found that much support for my view, that perhaps the Reserve Bank's attitude to banks has changed a bit. The CRR cut, at a time when the economy is not in dire difficulty, seems to signify that they're looking at banks more kindly. We'll continue with this debate. Thank you very much, Mr. Bundra, Mr. Khan, Mr. Khara, and Mr. Harshvardhan. Welcome to Indianomics. Does the massive CRR cut of 100 basis points indicate a trend?
Hello and welcome to News Center. I'm Parikshit Luthra. Israel has stepped up its attacks on Iran as both the long-standing enemies trade fire for the fifth straight day. What started off as Israel's surprise attack on Iran's nuclear facilities on Friday has since escalated into a full-fledged conflict. A state-run media outlet was bombed in Tehran during a live broadcast. The news anchor had to flee the studio midway. The broadcast, the entire building was on fire. Multiple blasts rocked Tehran as Tel Aviv claimed to have air superiority over Iran. The Israel military claimed to have killed Ali Shadmani, Iran's top military commander who took charge just a few days ago after his predecessor was killed in Israeli strikes. Iran launched a new wave of missile attacks. Tel Aviv said that most of them were intercepted, but some made an impact. Iranian media claimed that preparations were underway for what they called the largest and most intense missile attack on Israeli soil. Meanwhile, panic-stricken citizens have started fleeing the Iranian capital hours after Donald Trump issued a evacuate Tehran call. Long queues of vehicles were seen moving westward from Tehran. US President Donald Trump's cut short his G7 visit. Speaking to reporters on board the Air Force One, Trump said that he was working on something better than a ceasefire and wanted a real end to the war, adding that Iran should give up entirely.
You just posted right before we took off that you're not leaving because of a ceasefire. Why are you? Can you elaborate?
Looking at better than ceasefire. We're not looking for a ceasefire. I didn't say I was looking for a ceasefire. That was Emmanuel, nice guy, but he doesn't get it right too often. But we're looking for better than a ceasefire. What specifically is better than a ceasefire? What are you looking for here? An end, a real end, not a ceasefire. An end. Is there something that will be permanent? Yeah, or giving up entirely. Is this okay too?
The escalating conflict has led to concerns surrounding the safety of Indians in Israel and Iran. There are about 4,000 Indian nationals in Iran. Close to 50% of them are students. The Indian embassy has said that Indian students in Tehran have been moved out of the city for safety reasons. Other Indian residents have also been advised to move out of Iran's capital at the earliest. The government said that representatives of the Indian High Commission have facilitated the evacuation of some Indians to the border with Armenia. A 24/7 control room has also been set up to answer calls from families. And the Indian embassy has also set up an emergency hotline in Tehran for Indian nationals and students who want to approach for help. Many of the Indian students in Iran are from Jammu and Kashmir, studying in medical universities. And we're also speaking to a number of students who are there. Many of them have been moved to safe locations in Armenia. Joining us right now to speak more about the escalation in Iran and Israel is Faizan Nabi. He's an Indian student at Iran's Kerman University of Medical Sciences. Thank you for joining us, Faizan. Could you give us a sense of what is the situation where you are right now over the last few days?
If you tell me about Kerman was relatively peaceful. Rather, it is relatively peaceful if you compare it with the cities like Tehran, Shiraz. But as I can say, the fear, the uncertainty is still the same. If you talk about, with a student in Tehran or you talk with a student in Kerman, the certainty, the traumatization, it is still same. But yes, Kerman, our university was functional till 2 days ago. It was functional. Our exams were scheduled for today. It was on 17th of June, which means today. It was our first paper of final exam. But all the exams have been cancelled by the university authorities. Its notes was received by us the other day. And all the exams as of now stand cancelled till mid of October.
How are you being evacuated? Give us a sense of the kind of assistance the Indian embassy is providing.
Okay. Since day one, since this tension has arisen, it was, I guess, Friday morning. Since day one, embassy has been playing a key role in our evacuation and ensuring our safety. And they have issued the helpline numbers, emergency numbers on the day one itself. For now, the students who were in war zone areas like it was Tehran, Urmia, Shiraz, they have been relocated to safer places. And regarding Urmia, I just heard they have been taken to Armenia through the Armenia border.